Hi, good morning to all of you. Yeah, let's begin our discussion. So before going to the discussion, just I want to say one thing. Okay. So in AP and Andhra, many ICMI branches, I think chapter offices are there. But first time I'm taking the classes in ICMI branch. First time. Okay, in AP, Telangana, or Tamil Nadu, whatever it may be the state. But first time I'm taking the class from the ICMI branch. First I contacted with the branch. I want to take that class for the CMA final 1 or 2 days. So they are arranged these facilities. First of all, we want to say the thanks to them only. So then we can try to take the maximum extent benefit from the CMA final direct taxation 2 days marathon session. I will try to extend the evening session. If you are comfortable, you can continue. So otherwise you can leave. And 2 days after that, I will try to upload these sessions in a YouTube also. Okay. But if you are escaping from now, that is not acceptable. After 7 o'clock, if you want to leave, yes, you can leave. So before 7, no one can leave. Okay. Now, I think you know already about discussion related to first chapter. We need to start with the PGBP. Can you tell me what is the full form? Profits and gains from business or profession. Don't think about the soft copies or etc. So evening or afternoon time, I will take that all your phone numbers. I will try to give that access from my app only. So that means maximum I can give the 94% discount only within that app. I think around 20 to 30 rupees you have to pay, and you can get the total soft copy access also. I will try to give. Okay, don't think about it. If you are not having also, just listen. And after that, if you are referring that any YouTube, that means this YouTube video also, you can get the total things. That's why. So don't try to write that anything, because I will go in a speed manner. Just watch it, then you can remember for long time also, no problem. So it is one of the head of our head of income. So totally we have 5 heads of income, starting from income from salaries, income from house property, PGBP, capital gains, income from other sources. So in CMA final, we need to read only complete head is PGBP only, not required. Remaining heads of incomes are not required for CMA final examinations. But first 2 heads, salaries and house property, is required for doing the few problems in tax planning chapter. I think already if you know, tax planning in the area of HRA versus rent-free accommodation, tax planning in the area of whether they are given the 2 options, option 1 salary is best or option 2 salary is best, we have to select it. For that purpose only, we need to know the some salaries provision. That too only HRA exemption, rent-free accommodation exemption is enough. No need to refer that entire salaries chapter. And but one amendment is there. What is that? Standard deduction. So can you tell me what is the normal standard deduction for the salaried SC? 50,000. If you are following that old regime or normal tax regime, or that is only called as now optional tax regime, what is the standard deduction? 50,000. So if we opted the 115 BAC or new regime, what is the standard deduction now? 75,000. That can be tested, that you have to remember. Next, in house property chapter, no need to refer entire theory, just we have to refer what are the deductions we can get from the NAV. We can get 2 deductions. What are that? Interest on borrowed capital, standard deduction. The 2 points, if you know, then these things will be very easy. No need to refer the entire heads of income related to salaries as well as house property. Next, PGBP, now we can discuss. But what about capital gains, sir? Any idea? So our business restructuring and reconstruction topic is there now. That is totally capital gain chapter only. Apart from that, some amendments will be there in that capital gain chapter. Capital gain tax rates changed, as well as so period of holding also changed. That all the things we have to learn as an amendment. That's enough. No need to refer the total things. But in business restructuring and reconstruction chapter, what is it important? Capital gain provision we have to learn. Section 50B slum sale we have to discuss. So that already discussed in the YouTube video. You can check it out. But now, so next income from other sources also tonight we will cover. That is, one amendment is there. Deemed dividend. So that also we can discuss. So, but completely we have to learn the PGBP chapter. That is also for second question in our exam. Always second question after MCQ, second question, 14 mark question, always from PGBP only. So if you know the PGBP provisions only, then you can solve. Sometimes they can give the math also. Only minimum alternative tax questions is there. So then on that time PGBP learning is totally waste only. But the last 3 attempts they are given the PGBP problem. But always I am expecting the math problem only, but they are not given in the recent examination. But we can discuss today. First we can discuss the PGBP. Then after assessment of various entities we can discuss, totally combined. Okay. First we can start with the PGBP chapter. So can you tell me what is that? Starting sections of that every head of income, charging section. Why we need to learn the charging section? If we learn the charging section number 28, then we can know what are the incomes are chargeable to tax under the one specific head. What is a specific head here? PGBP. So now, before going to the charging section, we can start the overall view of the chapter. So first we can discuss the charging section 28. So one more charging section is there, that is section 41. So now I am doing the business or profession, sir. So if any income is arises from the business or profession, that will be chargeable to tax under section 28. But what is it 41? Earlier year, I am taken one deduction. Now the deduction needs to reverse. For the reversal of the deduction only, they created the one section, section 41, that is only deemed profit, not earned profit, but we are assumed to that as a profit for giving the tax treatment. Last year, because of the deduction, profit reduced. Now in this year, we want to reversal of the deduction. So can we do the time travel? No, not possible. That's why now we want to increase the income for current period. That is only called as what, ma? Deemed profit. Next section 29, now we can discuss, ma. So that is how to compute the PGBP only, section 29. Next section 30 to 38 is important, allowable deduction. So 40 to 43B is disallowances. Remaining all are called as an other provisions. Okay, first we can start. So A Limited is there, that is doing the business. So now they have a net profit as per Companies Act 2013. On the net profit, I think you know schedule 3. Yes, the net profit is there. On that directly we can apply the, okay, if that is a domestic company, can we apply the 25% or 30% and then we can pay the tax? That is acceptable or no? So because the net profit is computed as per the Companies Act 2013, they will not accept it as a base for computing the tax liability. Then what is the thing we have to compute? From the net profit, you are required to compute the PGBP. For that computation of PGBP only, we have to use the provisions of Income Tax Act 1961, that to section 28 to section 44, that is only PGBP provisions. So what is the purpose of learning these provisions 28 to 44? For computing the PGBP from the net profit. So any entity also, here just I am taking that example as a company. So if you are taking the partnership firm or anything also, that is the same. So now in our examination, always they will give you the P&L account. Maybe P&L account in the statement form also they can give, or in the account form also they will give. Definitely for our case, definitely that is a company problem. They will give you the statement. Like they will give you the net profit after debiting and crediting of the following items. What are the debit items? What are the credit items? Totally they will give you. From that you have to calculate PGBP. So just if they are given the P&L account in like account form, debit and credit, some expenses are already debited, some expenses are already credited. Finally they are given the net profit. Some additional information also they will give you, incomes as well as what expenses. But these incomes or expenses are not considered in the P&L account. So this effect of an expenses and incomes are not considered in the what P&L account. No. So how to calculate the PGBP? For calculation of PGBP, always you have to take the net profit as a base. Now, after that, if you know the provisions of section 30 to 38, then we can know what are the allowable deductions. What are the expenses we can take it as a deduction while computing that what PGBP. Example, I will tell you. Here, rent paid for the business. So rent paid for the what business premises is there. That is allowed. So now that is allowed as what deduction. Can you tell me, while calculating the net profit, that is an already reduced or not reduced reduced. So can we do anything extra? Not required. So that means if any expenses to be disallowed, example I will tell you. So income tax is there. Or we can say simple example like we are giving the bribe to the, yes sir, rowdies or gundas or police officers, etc. Can be normally that can be taken in the accounting treatment, but while calculating the PGBP, can we take this amount as a deduction? No. So that's why what we need to do, add back. Expenses to be disallowed. Sir, if any P&L debit items are there, if any P&L debit items are there, what we have to do, ma? If allowed, do nothing. If disallowed, what we need to do? Add. If allowed, do nothing. Example, rent is allowed, sir. No need to do anything because it already what ma? Reduced from the net profit. So if that is disallowed, what we need to do, ma? Add. Next one more thing. Incomes, ma? Example, sir, sale. We are selling some products, that's why that is a credited to the P&L account. That needs to be chargeable to tax under the PGBP only, that's why do nothing. Example, I have an rent from house property. Can you tell me, it will be taxable under which head of income? House property. So that's why that needs to be what taxable under separate head of income. Because of this rent treatment, what happened to the net profit? Increase. Now what we need to do? Reduce. Definitely it is difficult to understood for some time, but at the end of the chapter you can say all the add and less points. So directly, why I am saying these are all the things in the first step, because this is only our total problem in the second question. So okay, first we have to start with the net profit. So first check all the debit items. If debit items are allowed as per the provisions, it's okay. But not allowed, what we have to do, add. So next, please check the credit items. If it isn't credited to be P&L account, yes, okay, both the things are credited. One thing needs to be chargeable to tax under the PGBP, do nothing. Another thing is taxable under different heads of income. That's why we have to do what, ma? Reduce. Next, expenses to be allowed. So I'm talking about these two items now. So separate items they are given, ma. Example, interest paid. So that is allowed or not allowed, ma? Allowed. So that's what we need to do, reduce. So next, one income is there, that is an sale, example, sale of product, etc. So now what we need to do, ma? It needs to be taxable under which head of income? PGBP, but not taxed. That's why now we have to do what, ma? Add. So because of this additional information, it is not reflected in the P&L account. So that's why we have to consider separately. If that expenses is allowed, reduce. If that income is taxable, please add. So otherwise, please ignore. No problem. Definitely it is a difficult only first time. If you are listen, no problem. So why we have to learn? If we learn the section 30 to 38 and 40 to 43B, then only you can know about which expense is allowed, which expenses to be also disallowed. Otherwise, we can't know directly. If I am saying anything also, definitely it will not correct. So after knowing the provision, definitely you can say, sir, one expenses, what is it allowed, what is it disallowed also, you can say easily. Then what about the other provisions, sir, like presumptive taxation provisions, tax audit, yes, books of accounts, that all the things, other provisions we can discuss slowly. Okay, forget about all the things. I will try to recap again. Remember, so what is the base for calculating the PGBP income? Net profit only. So after taking the net profit, please look at that what, ma? All debit items. If it is allowed, do nothing. If it is disallowed, what we need to do, ma? Add. So then come back to the credit items. If any sale or any other thing is there that is taxable under PGBP only, what we need to do? It is an already tax, do nothing. If any income needs to be disallowed, what we need to do, ma? Less. So then come back to the separate items like additional information. Expenses is allowed means minus. Incomes to be allowed means what, ma? Add. So next they are given the definition of business or profession and vocation. But now I want to talk about the business thing. Any trade or any commerce or any activity for that is called as what, ma? Business only. Profession means definitely there is a difference between the business and profession. If you haven't capital, you can do the business. But if you want to do the profession, definitely some degree of learning is required, like CMA, CA, doctor or anything also. That is only we can call it as a profession. Some degree of learning is required for doing that what, ma? Profession. So but an important thing is there, profession always includes a what, ma? Vocation. What do you mean by the vocation now? So priest will be there. So like in temples, pujari is there, na? Priest. So definitely that is comes under the vocation only. They are also required to pay the tax under the PGBP only. Profession, that also. Not direct to profession. Profession includes a one term is a vocation. That's why any activity which a person spends a majority of time in order to earn for livelihood. So they are learning that all the mantras and etc. in the gurukulams etc. only. They are spending the majority of their lifetime in order to learn the total activities. So after that they are earning for that what, ma? Their livelihood. Example, priest and beggars only. That is an atma. We can't do anything. So definitely it is called as an vocation. Now, charging section directly I will start, ma. What is the charging section? 28. If you are not followed previously 10 minutes also, nothing will happen, ma. Please try to follow from now only. Then after at the end we can do some problems. On that time this logics also you can open now. In charging section 28, they are given this some points. So these points incomes only taxable under the head PGBP. How many points they mentioned? Just I will scroll it down. You can check. Up to J. That means I think 10 points will be there. These are the 10 points are always taxable under the which head of income? PGBP. But in this session, now I want to cover the, yes, only one point. That is in first point because amendment. Okay. Sir, while you are revising the content again also, whatever the points I discussed now, you can revise that points. That's enough, sir. So don't try to refer the total chapter in front of that examination. That will not useful for the PGBP. Whatever the points I discussed, that you can recap and you can go for exam also, no problem. Now, so what is the first point? Profits and gains from any business or professional activity that is a taxable under the head PGBP. We know already. If any profit or gain from the business also, profession includes a vocation also taxable under the head PGBP only. But some exceptional points will be there. What are the exceptional points? No? Dividend and interest always taxable under the head income from other sources. I am doing the share trading business. That means regularly I am purchasing the shares, I am selling the shares also. On that occasion, what I will receive? Profit. That profit is an always taxable under the head PGBP. But sometimes I can get the dividend also on that shares. If I am trading the debentures, sometimes I can get the what, interest also. that interest and dividend is taxable under income from other sources. Sir, I'm doing a business, but your business objective to achieve the shares on what ma? Sorry, achieve the dividend, achieve the profit on what ma? Shares and securities. That profit will taxable under the head PCBP. But if any ancillary income like dividend and interest, if you got, that is taxable under income from other sources. Next, sir, in my business, I got some lottery income, some winnings, casual incomes. That is an always taxable under the head income from other sources only. Now, this is only the amendment, ma. So that's why you have to listen carefully. What is the point? Read along with me. Income from letting out of residential house or any part of residential house by the owner, it shall be chargeable to tax under the head income from house property, not under the head what ma? PCBP. So previously, I have an example. Previously, what is the provision? I have 10 houses. So my objective to earn the rental income, my business objective is to earn the what ma? Rental income. So the 10 houses are residential houses. Previously, because of the business objective, that is taxable under the head PCBP. Previously, that is taxable under the head what ma? PCBP. Yes. Income from letting out of which houses ma? Residential house or part of the residential house. Now, if any residential house is there, part of the residential house also, full of the residential house also, if let out is given, so definitely he can receive, that owner can receive the what ma? Income. Previously, that income is chargeable to tax under the head PCBP because he having the business objective of rental income before amendment. After amendment, they are changing. Sir, if any person having the residential house, so now also he is given that residential house on let out basis only, he is getting the rental income. Sir, now also he having the business objective only, but they are directly given it as an what ma? Taxable under the head income from house property. So amendment came, definitely you will get that in exam. Always we can say, sir, business objective is there before amendment PCBP. After amendment, they are changing it as an what ma? To income from house property. What is the reason why they are making this amendment? Any idea? In PCBP, we have a chance to take the numerous deductions. Numerous, that is section 30 to 38 we can take. In 36 other deduction, 37 general deduction, we have a chance to take the numerous deduction. But if I am shifting this treatment to the income from house property, now we can take only 2 deductions, that is an standard deduction, interest on borrowed capital. So that's why they are making this amendment. But one more thing, remember, residential house, not commercial house, commercial properties. Residential houses, if anything is given for the let out basis, if any rental income is earned, that is before amendment, if business objective is there, letting out of that house as PCBP. Now, residential house only, let out only, income, but now it is taxable under the head what ma? Income from house property. So that amendment you have to remember for some time up to these exams, then after that not required, it is not a biggest amendment, but maybe they can give it as an MCQ also. Now, method of accounting for the PCBP. Do you know anything about the method of accounting for this head of income? Cash or mercantile means what ma? Accrual, whichever is regularly followed by the SSC. Yes, cash or accrual, whichever is regularly followed by the SC. 29 already you know. So starting we discussed, I think you are not understood that thing, net profit, we have to add and less certain items, then we can get the PCBP. That is only section 29 content. How to calculate the PCBP? So PCBP needs to be calculated in accordance with the provisions of section 32, section 44. What is the base we have to take for computing the PCBP? Net profit. Now, so overall I will go ma, just listen. Section 30 is nothing but if you are using any building in your business or profession, so that building related expenses you can take it as deduction. So can you tell me some examples relating to expenses for building? Now we are using this building for the business purpose only. Can you tell me what are the expenses? Now first you have to raise a question. Whether we are using the building as an owner or whether we are using the building as a tenant. So now assume we are an owner. So first expense what we can take ma? Depreciation. Because we are an owner, we are using that asset, that's why we can claim depreciation. Some revenue repairs and the current repairs are there. Revenue or current, one and the same only we can take. So then what about the capital repairs, sir? Always the capital repairs will be added to the cost of asset. On that we can claim what ma? Depreciation. So ultimately the depreciation also we can take it as a deduction. But under section 32. Sir, if that is a current repairs, directly we can take it as a deduction. If that is an capital repairs, first we have to add it to the cost of asset in the form of depreciation under section 32, we can take it as a deduction. Now, sir, if I am taking any insurance policy, on that occasion I will pay insurance premium, that also I will take it as deduction. Land revenue as well as local as well as municipal taxes. So revenue means income, ah? No. For land, if you are paying any taxes, that is a land revenue. For buildings or any properties, if you are paid, that is a municipal taxes, local taxes, that are all the things you can take it as a deduction. Now, I'm changing my question. If you are a tenant, what are the deductions you can get? Tenant means mandatory expenditure is rent. So then after, if you are incurred any one of the expenditure, right, revenue repairs, current repairs, insurance premium, land revenue, municipal taxes, local taxes, you can take it as a deduction. Remember, for building, if you are using the business or profession, these are all expenses, you can take it as deduction, even though you are an owner or tenant also. Next, one more point. Sole proprietary concern. That means one businessman started, that is a sole proprietary concern. If any rent paid to the sole proprietor, can you tell me the sole proprietary concern can take it as a deduction under section 30? No. Why? There is no actual payment here. That is called as a notional rent only. Because Bhaskar is doing the one business like a kirana store or any other thing he's running. So, as a sole proprietor, now in my business, yes ma, I have a 2-floor house. So, one floor I am using for the residential purpose, another floor I am using for the business purpose. Now, this business, whatever that I am running, within the books of account, I am just given as one entry, rent paid. Can you tell me that is an actual rent paid to others? No. So that's why simply it is a notional rent that will not allowed as deduction in the hands of business or profession. Next, partnership firm paying the rent to the partners, it is allowed only because 3 partners are there, one partner having the own property. That's why he is given for the rent to the partnership firm. That is allowed. So remember these 2 things. The first case only the notional rent. The second case definitely the actual payment of rent will be there to that one partner from the partnership firm. Next, last point important for an MCQ subletting point. I'm taking this entire property for rental basis. So total rent what I require to pay 25,000 I need to pay to the owner. But 2/3 I'm using for business purpose. 1/3 is a vacancy is there. That's why I'm giving it for the subletting. For the subletting I'm receiving the rent of 10,000 rupees. So now what is the rent? I have to take it as a debit. So total rent I'm paying to the owner 25. But I'm receiving how much amount from the subtenant 10,000. That's why net amount of rent only we have to take it as a deduction. Can you tell me what is the net amount of rent? Rent paid is nothing but 25,000. Rent you received is nothing but 10,000. Net effect 15,000 you can take it as debit. Clear? Now. So this is a point related to section 30. Next, section 31. The same concept. But now I'm changing the asset, plant and machinery, plant and machinery, furniture, fixture. Now these are all the assets are using for the what business or profession. Now what are the expenses we can take it as deduction that under section 31. 30 is nothing but building related expenditure. 31 related to plant and machinery, furniture, fixture. So only 2 things we can remove here. What are that? Why? This can be for the properties, not for the plant and machinery, furniture and fixtures. If that isn't building, yes, we have to incur these things. That's why we included. The remaining, no need to include. The same provision you can check it out also. So now, some cases we can use these assets as an owner. Some cases you can use these assets as an tenant also. Clear up to now? So what is the section 30? Building related expenses. 31, plant and machinery, furniture, fixtures related. Now 38. Okay, I'm taking one building for the rent for my business or profession, but I'm not using the total building. I'm using only 50% of the building for the residential purpose, 50% of the building for the business or profession purpose. Total rent how much I paid? 30. Now in my business how much amount I can take the deduction? Proportionate only. Because you are paying for total building 30,000. Out of that, can you tell me what is the amount we are using for business or profession? Proportionate 50% only. If any asset used partly for personal purpose, partly for business purpose, the proportionate part of expenses only we can take it as a deduction. Anything also for all sections it will be applicable, ma. So rent paid, interest also, like yes, insurance premium paid, whatever that amount paid, partly if it is used for personal, partly if it is used for business or profession, proportionate amount only we can take it as a deduction under section 38. Clear? Now, very important section, it is in our syllabus. It is in our syllabus, CMA final syllabus, section 32. May I know under which chapter we have this section, ma? PGBP. Here. Business restructuring and reconstruction. One chapter is there in our study material. In that we have depreciation concept. Always we are getting the questions related to depreciation from that only. But we are discussing PGBP chapter. In flow we can discuss the total. And we can discuss some problems also. Many students are waiting for certain problems. So some students after opening the MQPs. So they are saying, sir, inter syllabus only they are given, sir. No, that is final syllabus. We don't know. Depreciation is our final syllabus only. And one more concept, apportionment of depreciation is there. That is also our final syllabus only. Now, let's begin our discussion. And just I want to get one confirmation from all of you. Are you understood or you are maintaining the silence because of weather conditions? Okay. Now, in India, the government can be classified certain locations as a special economic zone. Can you tell me what do you mean by the special economic zones? What do you mean by the special economic zones? That is nothing but tax haven jurisdiction. If any person who is doing the business or profession in that jurisdiction, first 5 years they are getting the 100% of their export profit as an what not deduction. Next 5 to 10 years, the 50% of export profit as a deduction. Next 5 years, the 50% of export profit or amount invested in SEZ investment reserve. That means again we want to start the business here only. That's why we want to reinvest some amount in the reserve. The two things, whichever is lower, only allowed as deduction. So definitely the first 5 years, zero tax you are required to pay. Next 5 years, 50% of export profit. Last 5 years, amount reinvested or 50%, whichever is lower. So why we are discussing these things, I will tell you. And other than this SEZ area, we can call it as an what domestic tariff area, DTA. So like now Coimbatore also DTA only, domestic tariff area. There is no benefits like SEZ here, but we have in certain cities located in India, they are classifying as an SEZ. In that area, if you have started the business, then you can get the what these incentives. Now, so one case law is there, Mahindra Mills Private Limited case law. They purchased the plant and machinery with a 1 crore amount. 1 crore. What is the rate, depreciation rate on that plant and machinery? 15%. Now, first year at the time of they are filing the return of income, they are not claiming the depreciation as a deduction because of the net profit or PGBP increased or decreased. Increased only. If you are not claiming one expenses as a deduction, automatically our income can be increased. So assessing officer on that occasion, I think this tax manager of this company don't have any mindset or etc. So they are felt very happy only because they are paying more and more tax. No. But next, in the 6th year, the Mahindra Mills Private Limited started to claim the depreciation on such asset. What is the depreciation? So 1 crore into 15%, that is an around 15 lakh. Now the net profit is reduced. There is a dispute between the here department as well as an SSE Mahindra Mills Limited. What is the dispute? Sir, you have to claim the depreciation from the first year, sir. But you are starting the claiming the depreciation for the 6th year. That is not correct. That is an argument of department. But SSE arguments are I haven't one benefit. Whatever that amount I have, first 5 years I can get the 100% of that exemption. So that's why I'm not claiming the depreciation. From the 6th year I want to claim the depreciation. The argument of the Mahindra Mills. Both the parties are going to the court. Yes, but the court given the judgment favorable to whom Mahindra Mills Private Limited only, because on that occasion there is no provision related to depreciation as a mandatory. There is no provision like depreciation is a mandatory under Income Tax Act 1961. There is no provision on that type. So that's why who have taken that advantage of that provision, Mahindra Mills Private Limited. First 5 years, I don't want to claim the depreciation because whatever the amount of the net profit or PCBP I have also, no problem. That is exempt only. That's why I want to claim from the 6th year. So their argument also correct. That's why. So next year, they are doing that. They have done the one amendment. What is that amendment, mandatory to claim depreciation. Why this amendment is came? Because of we want to nullify the judgment given in the what Mahindra Mills. Yes, in order to nullify the judgments given in the Mahindra Mills Private Limited case. So now you can understood that one point that the depreciation is a mandatory to claim. Every year you have to claim the depreciation up to that extent of profits only. Over and above profits you can't claim. Example, my profit is 10 lakh. I have a depreciation 15 lakh. How much depreciation I can take into the P&L account? 10 lakh. Then remaining 5 lakh we can call it as unabsorbed depreciation. So if I calculated the depreciation, whatever that amount I got, I can take it as deduction, but to the extent of profits. So over and above profits, whatever that unabsorbed depreciation, that called as what? Unabsorbed depreciation. Okay. Now, second point. So always we can calculate the depreciation on block wise. And what is the method we are going to follow? WDV method. But for power sector undertaking companies only, we are given an option. They can follow block wise WDV method also, or they can follow asset wise SLM method also. So power sector undertaking companies, while calculating the depreciation, they have an option to follow any one of these two things. But generally we have to follow what? Block wise. And which method? WDV method. So now, what do you mean by the block? What do you mean by the block? Now I will tell you. Block of assets means assets having the similar nature and same rate of depreciation. If these two conditions are satisfied, then we can put that all the assets into one block and we can give the depreciation under which method? WDV method. Okay. So now I will tell you. I have a computer. In my business, I have a computer. I have a mobile phones also. So these are the similar nature and same rate of depreciation. That's why these are all the things under the one group or one block. Block wise only we can calculate the depreciation general. Now, so I will give you one example also after some time how to classify that all the assets into blocks. We can take one example. But remember the theory, same nature, same rate of depreciation. If these two conditions are satisfied, we can classify that all the assets into blocks. Okay. So how many types of depreciation we have to learn in this discussion? How many types of depreciation? First one is a normal depreciation, reduced depreciation, additional depreciation, unabsorbed depreciation. These four we have to discuss. So now we can start. Before going to the depreciation types, what are the conditions for claiming depreciation? So if these two conditions are satisfied, then only we can calculate the depreciation. First one, for that asset you must be an owner. Second one, that must be used for the business or profession purpose. So for that asset you must be that what? Owner. But even though I am not an owner in these four cases, I can claim depreciation. Even though you are not an owner, in that how many cases? 4. A, B, C, D is there. In the 4 cases, you are not an owner, but you can claim depreciation. What are that 4? First one. Sir, I am taken one first ground floor on rental basis. On that ground floor, I am constructed the one shed with a capital expenditure. Now, up to that capital expenditure, you are only owner, you can claim depreciation, but the property is a leased property. So remember, if any capital expenditure incurred on the leased property, up to that capital expenditure, you can claim the depreciation even though you are not a owner for that entire property. Next, second one. Sir, if you purchase any asset on hire purchase basis or installment basis, when you can become as an owner? Upon the last payment or last installment payment. But no problem, if you purchased any asset on hire purchase or installment basis, from starting onwards, you can claim depreciation even though you are not an owner. Third one. Purchase covered under one section they are given, section 53A of Transfer of Properties Act, or otherwise we can call it as a part performance of contract also. What is a part performance of contract? Now I will tell you. One example, seller selling the one building to the buyer, he wants to use this building for the business or profession. Agreement done between these two parties, but registration in front of the registrar is pending. Just part performance only done. One is done. What is that? Agreement. Second one is pending. What is that? Registration. So only what done? Part performance. Now, even though agreement done also, that it's enough to consider buyer as an what? Owner. As per government records, he is an owner, but that is not required. If the following 3 conditions are satisfied, we can treat buyer as an what owner? Deemed owner. Now buyer can claim the depreciation because he is using that asset in the business or profession. What are the conditions? Agreement bona fide. Bona fide means genuine. Second one, buyer paid the consideration or ready to pay consideration. Third one, buyer already taken the position. They are already taken the what? Position. If these 3 conditions are satisfied, now we can call the buyer as an what? Deemed owner. So who is an exact owner? Seller. But now this is only the point. Even though you are not an owner in the following 4 cases, you can claim depreciation. Now last one. Sir, my brother and me holding the one property under the joint ownership or co-ownership. No problem. Joint ownership and co-ownership is also sufficient to claim the depreciation. Clear? Now, sir, use means what? 2 types of uses are there now. One is an active use, another one is called as a passive use. So what do you mean by the active use? So in my business or profession, so I have both the things, sir. So I have both the things. Coaching institution is in business, profession is in practice. In my business and profession, I'm using the laptop. These are all the things are actively. That is called as what? Active use. So regularly I'm using. That's why this is an active use. What do you mean by the passive use? In business premises, we are keeping the some fire extinguishers, etc. So what is the reason for establishing that all the equipment? If any unfortunate things are happen, we want to use that things. So that means kept ready for use is called as what? Passive use. So examples I will tell you, passive use examples. In lockdown period, so many factories are closed, but always they want to do that what maintenance of that plant and machinery always. What is the reason? We are kept ready for use. Once lockdown removed, we want to use that all the assets. That's why on that occasion also we are claiming the depreciation. So if any asset ideal during the lockdown or strikes or etc., that is called as what? Passive use only. Asset installed but not actively used. What are the examples? Fire extinguishers or power generators, etc. In our houses or in our offices, we have an generator, power generators. What is the purpose of establishing that? We want to kept ready for use if power facility is not there. That's why that is called as what? Passive use. Next thing, classification of asset. Please repeat along with me. 2 days only. I think in my life also I will never meet with you again. So your side also the same thing. But for this branch I will come regularly only for any attempt also. But this is the last chance. 2 days only. That's why try to give the reply. Okay, I will try to give the breaks also. Sufficient breaks also I will try to give. So but in my class only, that means in Telugu states only, they will try to give the reply even though they don't know. But you know, but you are maintaining the silence, okay? But after 2 to 3 hours, my energy also dried because if you are not giving the reply. Try to give reply. At least if you know, okay. If you don't know, just maintain silence only. That's better. Unnecessary confusions can be created, okay? Now, classification of assets, sir, in our business, many assets will be there, but all the assets will be categorized into how many, 4. How many? 4. First one, building. Second one, furniture. Third one, plant and machinery. These are all tangible. Sir, what is a plant and machinery residuary? Means if any asset not having the place in these 3 categories, that having the place in plant and machinery. While we are discussing the rates relating to plant and machinery also, we have many assets because that is a residuary. But we are excluding the 2 things. What are that? Livestock as well as bushes, right? So that having the livestock means animals or any plants also, that having the life, that's why we cannot give the depreciation. That's why we are excluding from the plant and machinery. We are excluding from the plant and machinery. Last one, intangible. Can you tell me some examples for that intangible? You can say, normally, if I am asking intangible, first thing goodwill will come. So, but now please remove the goodwill. Goodwill is not a depreciable capital asset as per Income Tax Act 1961. Whether it is a purchased goodwill or self-generated goodwill also not eligible. That's why forget about that and tell me the remaining know-how, patents, trademarks, license, franchises, copyrights, etc. So one thing we removed from the intangible asset, what goodwill. So, but I'm not written here, but one thing we can exclude from the tangible. What are that? Land. On that we can't claim depreciation. Okay, we can exclude it. These also livestock as well as what? Bushes. No. Sir, this is only called as a nature. If nature is same and rate is also same, we can classify that assets into what? Block. On that block, we have to give the depreciation by using WDV method. Clear? Now, first one, building, furniture, plant and machinery, intangible asset. So I will tell you this. And this also I will tell you. Intangible also I will tell you. Plant and machinery list is there. You have to remember that list in your free time. Sir, how can I remember? These are all the things, sir. There is no shortcut, sir. We have to remember. We have to read the total things. There is no shortcut also. Okay. Now, just give me 1 minute then. Okay. Now remember, sir, in exam, some cases they will give you depreciation rates. If they are not given the depreciation rates, what we need to do, we have to remember. But possible, give me 5 minutes time, I will tell you the total depreciation rates, including plant and machinery also, I will tell you, don't bother about it, okay? Now, buildings. If that is a residential building, 5%. If any building is used for the water supply project, a temporary construction or wooden construction on that building, you can claim what, ma? 40%. Now, on commercial buildings or general, if they are not saying anything, we have to assume it as a commercial. Now, what is the percentage of depreciation, ma? 10%. Sir, I haven't one doubt. Okay. Sir, you only said that building, for the building, you must be an owner. If that is used for business or profession, then you can claim depreciation. But now I haven't doubt. Sir, residential purpose we are using, how we can claim depreciation? So example, I have one house, 2 BHK, I am using for my self-occupied purpose. Can I claim depreciation? But then why are they given? Yes. Employee quarters. So I have an educational institution. In that I have an hostel facility. So that hostel building use it for what purpose? Residential purpose only. So maybe you can take one more thing. Partly business purpose, partly professional purpose also. Yes, what is that, ma? 5%. If anything, sir, nothing but depreciation can be claimed on that asset, those we are using for the business or profession purpose only. Are you clear up to now? So what is the general rate of building? 10%. So furniture, single rate 10% only. Intangibles also single rate 25%. In intangible, we have to exclude goodwill. Now, plant and machinery. So we have a number of rates. Number of means not 100 rates, just 5 types of rates only there. Okay, remember. So first classification I will tell you. I will tell you the 2 cases you have to observe, under which case the more depreciation we have to give. Example, I have in my own car. I am using for my own business or profession. Otherwise, I have a college. For that college, I want to use the bus. Okay. Now, second case is there. I have a travel agency. I am given all the things on higher basis. So now, in which case we want to provide the more depreciation? Higher case. What is the reason? Sir, if I have a vehicle, I am only the owner, I can use properly. If I am taking that any vehicle on let out basis or higher basis, I can use so that on that occasion, even though the roads are not proper also, I can see all the roads are proper only, I can go up to that extent of 120 or 130 also on that occasion. That's why remember, if any vehicle is used on that higher business, on that we can claim the depreciation, what is the rate, ma? 30%. Normal business, you can claim the depreciation 15%. But one condition is there, you have to acquire and put to use on or after 1/4/1990. What is that? 1/4/1990. What is the reason, sir? Before 1/4/1990, if you are purchased also, that needs to be disposed as per RTA rules also. So you can't use that as if you are purchasing any vehicle, no need to use for the lifetime, sir. It is a validity of certain time is there. So that's why in income tax also, if you purchased and put to use on or after this date only, that is eligible for depreciation. In 1917, if you are purchasing any vehicle now, you can't use that also, and you can't claim the depreciation also on that. Next, one more thing, motor vehicles are used in that higher business on that same month. So now what is the date? Acquired and put to use on or after what date? 1/4/19. So what is the rate? 30%. Remember, higher business wear and tear is very high. That's why they are given 30%. Normal business just we are given the 15% for not for only motor vehicles and motor cars. Next one. So these are all the assets are classified as in one set in the plant and machinery. They are given the what is the rate of depreciation? 40. Now we can read all the things once again. Aeroplanes, aero engines, life-saving medical equipment. Can you give me some examples of life-saving medical equipment? Oxygen concentrators or ventilators or any ICU equipment, that is a life-saving medical equipments only. Computer, including computer software. Maybe computer software you can classify it as an intangible. No. That is a plant and machinery only. Now, air pollution control equipment, energy-saving devices. Can you tell me some examples? Inverter or power generator, etc. Next one, books, including professional books. Books, 2 types, general books, professional books. So both the things are same only, 40% rate. Oil wells also assets only, on that we can claim 40%. Next, mounts, yes, 30%. Ships and vessels, 20%. For this only asset, we have a depreciation at the rate of 20% in the plant and machinery. Next one, windmills, before 1/4/2014, 15%, on or after 1/4/2014, 40%. General cases, if they are not saying anything about the plant and machinery, generally we can give the depreciation at the rate of 15% only. Sir, very easy. If you are targeting just these things for the 5 minutes, it will become very easy only. Now, what is the rate of depreciation in case of intangible assets, 25%. Now, so I will give you 8 assets ma. In exam definitely they will give you this data. Asset rate they will give you. By using that asset as well as rate, you need to classify that into that what ma block. Shall we try? All of you, shall we try? Okay. Now they are given the how many assets ma? 8 assets. So and rate also. But nature we have to write. Can you tell me? Computer under which nature ma? Plant and machinery. Car, books, furniture, building, intangible asset, building, building. Now you have to check the same thing, same nature, same rate of depreciation classified into one block. First we can concentrate. I am highlighting with the yes sir blue color. Please check. Plant and machinery. First one I have 40%. So if any one more asset also under the same nature, same rate, I want to give it into the what ma same block. So please identify plant and machinery 40%. One more asset is there. So that's why these two things I want to classify into one block. That block name is plant and machinery at the rate of 40%. So plant and machinery at the rate of 40%, asset 1 as well as asset 3. So once again, I want to classify the building at the rate of 5%. Is there any other asset is there? Yes, can you tell me number of that asset? 8. That means now what is that block name we can give ma? Building at the rate of 5%. Can you tell me? 5 and 8. So remaining, is there any one is repeated ma? No. No. Building 10% only we have in one now. So that's why that is in one block. Intangible asset at the rate of what 25%. That is in separate block. Furniture separate block. Plant and machinery 15% separate block. Sir, same asset is not there, sir. So that's why that one asset also you can classify into block. Further, if you purchase it, you can add it to that what block. Clear? So what is that rule we have to follow in order to classify the assets into blocks? Same nature, same rate of depreciation. No. Important. Yes, I will give you the break around 12, but now you can listen ma. So I think after that starting of the session, I decided one thing. Okay, if I am saying not, definitely you can feel also. Okay, no problem, I will reveal it. So instead of going in a speed manner like within 2 hours, I want to try to sum up the total chapter of Pgbp. But after that, starting 15 to 10 minutes also, I observed that. So that is not possible for me. The reason I know I can say all the things, but because of your face only or expressions only, I decided. Now today, if I am trying to the 2 chapters also, the 14 marks you will get. What is the 2 chapters? Pgbp and assessment of various entities matter. Along with the problems we can discuss. Tomorrow also I will take the 2 uncovered chapters from other than YouTube videos I will take. So the remaining sessions I will upload it and you can watch it. Okay, no problem. So otherwise, if I am going in a speed manner, okay, whatever the points I underlined, okay, if I am closing now, that will not at all possible for you also in order to revise. So that's why whatever the chapters we are going to cover, we will try to cover that all the things perfectly. Okay, now listen. So if you are giving the response now, I can go in a speed manner. You are not giving the response means I think I have to revise again. No, remember. WDV format. Section number, try to remember ma. 43 subsection 6. So now I think you know we have to calculate the depreciation under block-wise under WDV method. This is only the method. So block-wise only. Can you tell me? Just I am given the 2 examples. So what are the 2 blocks ma? Block 1, block 2. Block 1 is in plant and machinery at the rate of 15%. The block 2 is a plant and machinery, sorry, building at the rate of what ma? 10%. Now, opening WDV. Format always start with the what ma? Opening WDV. So concentrate only on the block 1. Can you tell me how many assets are there in that opening WDV ma? 10. So what is the value of the 10 assets? 1 lakh. Means what? These are the assets are called as an old asset taken from the last year only. If any asset having the place in the opening WDV, that asset is called as what ma? Old asset. That having the old asset only. Now, sir, again we purchase the one asset newly during this year that needs to be added to the same block. One plant and machinery, that is also 15%. Nature also plant and machinery. Rate also 15% we purchase. That's why we have to add it to this block only. But one asset, what is the value? 10,000. Yes, now remember, one asset we want to sell. So how many assets we want to sell during the previous year? 10 assets. So what is that point? Remember, if any asset is sold during the previous year, even first day, middle day, last day of the previous year, that is not eligible for depreciation. Again, repeat, if any asset is sold during the previous year, even on first day, middle of the year, or last day of the year also, that is not eligible for claiming depreciation. That's why we have to reduce it. How many assets we sold in this block? 10. What is that value? 1,20,000. Now, so finally, at the end of the year, how many assets are left in the block? One asset. But the value, please calculate, that will be negative. Don't put the negative value, just put it the nil value. So that's why this value is called as a depreciable value. On this value only we can calculate depreciation as per rates mentioned in the above concept. I think you know the rates also. But here unfortunately we are unable to calculate the depreciation because the value is nil. So what does it mean, sir? Simply, this block discontinued from our business. If you are able to calculate, means that is using in that business, that's why we can calculate depreciation. If I am unable to calculate the depreciation, that means that block is discontinued from our business. Now we have to calculate the capital gain, because depreciable capital asset, that is an entire block, now we are selling. So what is the capital gain section number we have to follow? 50. So two capital gain sections are there, ma. So one is in section 48. So generally, you know, I think in your intermediate level, if any faculty is saying that capital gain means, definitely he will cover the total two formats, long-term capital gain format, short-term capital gain format. I think you know, gross sale consideration minus transfer expenses, you will get the net consideration from that indexed cost of acquisition or cost of acquisition, cost of improvement or indexed cost of improvement, you will get the net, gross capital gain. From that, if you are taking that exemption, you will get the net capital gain. That is in section 48 format. That is in capital gain on non-depreciable capital assets. So now we have to discuss section 50. This is a capital gain on depreciable capital asset. Now we are selling the depreciable capital asset or non-depreciable? Depreciable. So that's why we are required to calculate the capital gain by using section 50. So many students are trying to by heart this format, not required, just reverse the total thing. So this is sale consideration. These are only the two things as a cost. We can get the what capital gain. Sale consideration 1,20,000. So cost means both the things added together. How much? 1,10,000. What is the short-term capital gain? 10,000. So resultant income here always short-term capital gain or short-term capital loss. Reason, long ago I purchased it, sir. Every year I am reducing the depreciation, but as present during the first day of the previous year, this value is there. Now I am selling for the what? 1,20,000. What is the reason? Because the depreciable means always we are reducing the depreciation due to wear and tear. Now, during the first day of the previous year, what is the value of that asset? 1 lakh. Now, added 10,000. This is also current value, not totally current value is there. That is only we are selling for the what? 1,20,000. That's why no need to consider it as a long-term capital asset, because it is purchased long ago also. But now we are taking the what? Present values only. So that's why section 50, computation of capital gain, always short-term capital gain or short-term capital loss. Now, section 48, section 48 means you can get the what? Either short term or long term also. Now, so another block I want to take. Sorry. So that is discontinued. So simply that is treated as disposed only, because we haven't one asset is there, but there is no value. That's why we can't calculate the depreciation. No need to do anything. In further also we cannot claim the depreciation on that. You can use normally, but for a tax for the Pgbp computation purpose, you can't claim the depreciation. But you can use that asset in your business, or you can use that asset as a personally also, no problem. So example, in next year maybe we can add one more thing also. That's why. So now, okay, in next year, can you tell me what is the position, ma? One asset is there, opening WDV will be 0. If you purchase a second asset, so total you can add a few more. Remember, she is asking the doubt. So sir, one asset is remaining, na? What is the use of that asset? For next year opening WDV, one asset is there, value we can take it as what? 0. But in next year we purchase the same nature on the same rate, then we can add the cost of addition, then that block will be continued in the next year. But for this year, this block is closed, we can calculate the depreciation. Now, no, not required. We can't take that additional depreciation concept. So just so nil value, you have to add that whatever the cost additionally incurred for that additional asset, that only you have to take. So next year, what is the position? I will tell you. Opening WDV, what is the amount we have to take? 0. So next, cost of addition. 2 assets you are purchased to 20,000. So there is no money receivable on sale. So that's why 3 assets are there. But what is the value? 30,000. So next you can claim the depreciation based on that. Now, next point. Sir, how many assets are there in the block, ma? Opening WD 15. What is the value? 1,50,000. Additionally, how many assets purchased? 5. Totally 50,000. But how many assets sold, ma? Remember, if any asset is sold during the previous year, first day, middle, last day also, on that we are not eligible to claim the depreciation. That's why please reduce it from the block. So, but how many assets are left, ma? 0. But value is there, but we can't do anything. We can't do anything. So that's why we can't calculate the depreciation. If section 32 is not applicable, automatically you have to strike one provision. What is that, ma? Section 50. Section 50. So this block is ceased to exist only normally. In next year you have to begin freshly with the values. Now, so remember here, what is the value of sale, ma? 1 lakh. What is the cost? 2 lakh. So, but loss is how much? 1 lakh. Remember, if you have at least one asset and if you have at least one value, that value also what, ma? Positive value, then you can calculate the depreciation. If you are not calculating the depreciation, then we have to calculate section 50 capital gain. So in business restructuring and reconstruction chapter also I told one time, yes, on balance sheet normally you have certain assets, ma. So example, machinery is there, investments is there, machinery, investment. On that we have to calculate capital gain. On machinery, which section we can apply, ma? 50. On investments we can apply what, ma? Section 48. Because one is a depreciable capital asset, another one is a non-depreciable. Are you clear? Now. So now we can start our discussion with the reduced depreciation. It is not a separate concept, ma. Whatever the depreciation is there, that means nothing but depreciable value into what, ma? We have to apply rate. This is only called as what, ma? Normal depreciation. Out of this, if you are calculating just 50% only, that is called as what, ma? Reduced. So in which cases we can calculate only the reduced depreciation, that is in 50% of what, ma? Normal depreciation. So what is that point, ra? Asset acquired during the previous year. Sir, can you tell me now if I am purchasing any asset during the previous year, that is a new asset or old asset, ma? New asset. So if any new asset is there and that asset also put to use less than how many days? 180 days. Then we can calculate that how much amount of depreciation, ma? 50% of normal depreciation. That is only reduced depreciation. Sir, one student, I think 2 days back asked a doubt, sir. Asset purchased on S6th, I think if that student in this session is there, na, definitely she can feel bad only, no problem. Okay, student, lady. Okay, 6/6/2024, we purchased the one asset. Now, can you tell me that on that asset, we can calculate the depreciation fully or proportionately? Fully. Because we use it for how many days? More than. She's asking, sir, you are using from the June to last March only, I think 9 months. Please try to calculate the depreciation for 9 months, sir. Your calculation is wrong only. They send the message in live only. After the live session ends, she sent the screenshot, sir, you are calculated the full depreciation, sir, but we use it that asset proportionately. Proportionate depreciation is not there in income tax. It's my mistake only not covering that point in the discussions. It's my mistake only. Proportionate depreciation is not there. In accounting treatment is there. Okay, only that proportionate means here 50%, in which case we can give the 50%. Put to use is less than 180 days. That too, that asset is a new asset. There is no concept of proportionate depreciation. Are you clear? Same. Apportionment is there. I will tell you that apportionment ratios. Are you clear? So if I purchase the asset, so forget about amalgamation, demerger and all the cases. If I purchased any asset during the year, in that year, if I am using that less than 180 days, I can give the depreciation 50% only. Example I given here, less than 180 days in the first year of, if you are using for more than or equal to 180 days, full depreciation. The same asset, second year, for the same asset, second year, always how much amount of depreciation, ma? Full. What is the reason? Because in the second year, that is an old asset, not a new asset. In the year of acquisition only, we can give the 50% of normal depreciation if that is used for less than 180 days. Now, I will tell you, in WDV format, cost of addition you added 10,000 or 50,000. How you got that value? Cost of additions means only purchase cost or taxes we have to add, and what are all other amounts also we have to add, we can discuss, ma. So example, if I am purchasing the one asset directly, example, from Mumbai we purchased one asset, ma. So that is in 1 lakh we kept. So for the taxes also some more 20,000. Sir, numerical just example. Don't ask sir 1 lakh how you are arriving the 20,000 tax. Okay, don't ask that type of things. Just add the total things. Loading charges. Now I want to bring that asset from the Mumbai to Coimbatore. Now definitely in that one vehicle we have to load the 5,000 charges will be there. Transportation 10,000 they are charging. Here unloading charges is there, that is in 5,000. Installation charges 10,000 they are taken. For that asset insurance premium, that means insurance policy we are taken insurance premium 5,000. Now, for that asset purchase purpose, we are taking a loan. On that loan, what is that expense we have to incur? Interest expenses we have to incur. What is that expenditure we have to incur? Interest expenditure. Now, I will tell you, interest on that borrowed capital for purchase of the asset up to that what put to use. I think as per your accounting standard also the same treatment is there. If any loan is taken for purchase of asset from the date of borrower to first put to use, whatever that interest is there, that needs to be capitalized. Capitalized means we have to add it to the asset cost. Suppose yes ma 3,000 is there. So one thing we have to reduce, that is a subsidy or grant. So government given the 20,000 subsidy, then we can reduce it. But remember here one point, taxes or duties we have to add if it is not recoverable. If ITC facility is there now, then no need to add that. If ITC facility is there now, then no need to add that. If not recoverable means then you can add. So totally that is cost of asset that can be substituted in the what WDV format. We can claim depreciation on that. Clear? Now, so this is an important point ma. Date of borrower to date of repayment we have to pay interest to the bankers or any other person. I am taking the loan for purchase of asset. So up to the first put to use of that asset, whatever that interest is there, that needs to be capitalized. On that we can claim depreciation. After put to use, what happened with the interest? That is an revenue expenditure, and that is allowed under section 36 subsection 1. Other deductions. So I will take nearly 1 hour for that only one section, 36 subsection 1. It will be useful for doing the total income problems. So 36 subsection 1 we can take. Yes, what is that? Other deduction. So that means anyhow interest is allowed only, but first put to use before in the form of depreciation. So after put to use directly we can give it as a deduction under section 36. Now one point is there, I will tell you. Sir, in the above, I made certain payments. So if any payment, if any expenditure, example for separate, loading is a separate expenditure, unloading is a separate expenditure, installation is a separate expenditure. For every expenditure, please check this provision. Insurance premium also, anything also separate. For acquisition of asset, payment, sir, I am doing the only single one-time payment, sir, okay. Or if you are doing the multiple payments, please do aggregate. Example, I will tell you, while doing the unloading, sir, while doing the unloading of the asset, I am doing the 3 payments in a one day. So today only unloading, sir. Example, 24th May 2025 unloading is there. So one person is there, Mr. Here, he wants to take the total unloading from the vehicle, from vehicle to factory premises. He is only taking unloading. So in that day, I am given the 3 payments. One is on 5,000, another one is on 5,000, another one is on 5,000. Morning, afternoon, evening, 3 payments I done. These all the things are in cash. These are all the things are in cash only. Now I will take that thing. So any expenditure, here one expenditure is called as what unloading related expenditure. I am making the payment to Mr. Here. So single payment or multiple multiple. That's why you have to do aggregate. Can you tell me how much 15,000. Made to a person. Yes, can you tell me who is a person? Mr. A. In a day, can you tell me in the same day you are making these all the things or not? Yes. If that exceeds 10,000, they are saying clearly you have to do this payment in that 4 methods. One is in what account to payee check, account to payee demand draft, electronic clearing system, any other electronic mode. Account to payee check, account to payee demand draft, electronic clearing system, any other electronic mode. Otherwise, then if you are doing, so nothing that here we are doing that otherwise or normal otherwise, then what will happen? This entire amount of 15,000 will not add it to that what actual cost. So if it is not added to actual cost, you will not claim depreciation on that asset. That's why definitely it is a controlling provision only towards the digitalization. So what is the provision Remember, any expenditure in future also we will discuss again, but on that occasion we can say, so already discussed only. Remember, any expenditure with respect to purchase of any asset, payment or aggregate payment made to a person in a day, if exceeds 10,000, you have to clear it in the 4 ways. Otherwise, then if you want to do, that will be what not added to actual cost. Sir, if you purchase an asset directly, this is a treatment. If you purchase the asset directly, this is a treatment. Sir, in some special cases, what is the cost of acquisition or what is the cost of additions? So I want to cover only two cases, sir. What are the two cases? The first one, yes. Next, I want to cover these two only. We have in our exam also. Okay, first these 2 points only we can get the repetitively. First thing, asset used for scientific research business or asset used for specified business purpose. Asset used for specified business or asset used for scientific. Can you tell me what is the deduction we can get under these two sections, ma'am? 100%. So that means whatever the amount of an asset we purchased with 1 crore, that 1 crore also we are getting as a deduction. That's why what is the actual cost we have to record in our books, ma? 0. So why? If I am recording is an actual cost as a 0, we cannot claim the depreciation. So if I am not doing this treatment, definitely we can claim the depreciation again. So that's why it will be more than what ma cost. Deduction is allowed more than cost. That's why they are saying if any asset on that you are claiming these two deduction, that asset cost will be recorded in your books as a 0. Now that asset only now brought into the normal business, actual cost in our normal business, we have to record it as a nil only. We have to record it as a nil. Why? Sir, already you are taken that 100% of the asset as an 100% of the asset cost as an deduction. Now you will not allowed to take the deduction again. If you are brought into the, your normal business also, you have to record that actual cost as an 0. Now fifth point, in last two MQPs also they are given the same question. In our recent workbook also we have the same question. So that's why try to listen carefully. So if any asset given or transferred from the holding to subsidiary, subsidiary to holding, subsidiary to holding. But here the subsidiary and holding relationship is what ma? 100%. That means wholly owned subsidiary company, wholly owned holding company. If they are transferring that asset, yes, now conditions they are saying first condition is an wholly owned subsidiary, wholly owned holding. Recipient company is must be Indian company. Recipient first case subsidiary, second case holding. So then they are saying in the recipient company, at what cost we have to record that asset for the purpose of claiming depreciation. What is that, ma? WDV to the transferor. Example I will tell you. Holding company giving the asset to subsidiary. They are purchasing with the 1 lakh, ma. So, but they claim the depreciation for 1 year, 15,000. Now, what is that? WDV they have, ma, 85,000. Now, that asset is transferred from the, yes, ma, transferred from the holding to subsidiary. Now, these two conditions also satisfied. In the hands of the recipient company, what is the actual cost we have to record, ma? WDV to the transferor. WDV to the transferor. So, now students having the doubt. Remember, they are transferring this asset. Means they cannot calculate the depreciation. Who can calculate the depreciation, ma? Who isn't receiving that asset? If any person transferring that asset even first day or middle of the year or last day also, we can't calculate the depreciation on that. Clear? No. Sorry, sir. I will tell you the differentiation, sir. Give me 15 minutes time. I will give you the differentiation. After that, if you have doubt, you can ask. Additional depreciation. On depreciation also some problems we can solve. After that, we can take a break. Don't worry about the break, okay? So, additional depreciation. Till now, we discussed the normal depreciation, reduced depreciation. Now, additional depreciation. Sir, additional depreciation means in addition to the normal depreciation, you can claim. Who is eligible to claim that additional depreciation? Manufacturer or generation and distribution and transmission of power. So, what is the reason? These are only the persons are eligible. What is the reason? Because they are only using that assets more. Sir, I am a service-oriented institution. I am not using that asset properly. No need of additional depreciation. They are only using that asset properly, sir. That's why, in addition to normal depreciation, we want to give that additional depreciation. Now, example, one factory is there. In factory, which of the assets are mostly used, sir? Office furniture or plant and machinery? Plant and machinery. That's why additional depreciation is also required only for the new plant and machinery. New means in this year, if you are purchased in this year, you can claim the additional depreciation. So logic is there for every provision, sir. Sir, office furniture not used, air conditioner, office appliances not using properly. But we can use that plant and machinery to drastically at one point, sir. New orders come, sir. New orders came. Definitely, we want to use that overtime also the plant and machinery. That's why, in addition to the normal depreciation, we can give additional depreciation also. Now, new plant and machinery excludes the few things, sir. Why new plant and machinery excludes the few things? I will tell you. I purchased second hand machinery. I purchased which machinery, ma? Second hand. For me, that is a new only. But that asset already used by what some others. So that's why that efficiency of that asset is reduced. That's why on that I will not give you additional depreciation. Please check that first point, ma. What is the first point? If any plant and machinery used in India, outside India, means what, ma? That is a second hand machinery. On that we can't claim the depreciation. For me, that is a new only. In this year, if I am purchasing, that is an always new. But that is a second hand. That's why we can't claim additional depreciation. Next, one more thing. Plant and machinery, but installed in office premises, residential accommodation, guest houses. If that is installed in the production area, then only we can claim the additional depreciation. Now, that is installed in the office premises, residential accommodation, guest houses, we can't claim. Next, if anything is installed in the office appliances, road transport vehicles. So, in some movies also you can see, in a production area, some forklift trucks like JCBs, small JCBs will turn around in the production area. So that can be eligible for additional depreciation as a plant and machinery. But if any road transport vehicles, after completion of production, if you are transporting the goods to the sale, that means marketing areas, etc., that vehicles is not eligible for the additional depreciation. Additional depreciation is eligible only for the what, ma? Forklift trucks. What is that? Forklift trucks. So that will be always traveling in the production area. If you are purchasing newly, you can claim the depreciation on that. But remember, so road transport vehicles, office appliances will not eligible. Sir, if any asset actual cost is an already allowed as deduction earlier, on that we cannot claim the depreciation. So some part of the depreciation or any other deduction if you are taken, that is not eligible for additional depreciation. What is the additional depreciation rate? Generally 20%. If put to use less than 180 days, additional depreciation is a 1 year benefit or multiple year benefit? 1 year. If I am purchasing now one new plant and machinery, I will get additional depreciation. But now, in bad luck cases, if you are utilizing only for less than how many days, ma? 180 days. I am claiming 50% only. The next 50% you can claim in the immediately succeeding next year. Are you clear, ma? Sir, normal depreciation, first year, please check it out, ma. Normal depreciation, I purchased one asset in the first year. I am talking about normal depreciation. Put to use less than 180 days. Now I am claiming just 50%. Then what about next year, ma? You can claim full. But additional depreciation, 1 year benefit only. Further years I cannot claim because of the put to use less than 180 days. If you are claiming just a 10% in this year, next year you can claim the what, ma? Remaining 10%. That is only the point I am given here, ma. One plant and machinery purchased by the manufacturing company in first year, normal depreciation, they can claim full also, half also. If they are claiming half in the first year, next year what will happen, ma? They can claim full. What is the reason, ma? Depreciation every year you can claim. Coming to the additional depreciation, it is a 1 year benefit only. It is a 1 year benefit only. That means if you are purchasing it newly, you can claim the additional depreciation. But unfortunately, because of the less than 180 days here, I am claiming that only 50%. So next 50% you can carry forward to the immediately succeeding year. Are you clear? So that is only the point, ma. So 50% of additional depreciation shall be allowed as deduction immediately succeeding financial year. This facility is not available in case of normal depreciation. So no one can expecting this, because in second year, anyhow you are claiming the full. So that's why there is no carry forward of 50% of normal depreciation, but we haven't carry forward of 50% of additional depreciation concept is there. Now, lifetime you have to remember this point. I think you know already. Individual HUF, AOP, BOI, HAP. What is the default tax regime if you are opening that income tax website? 115 BAC. So I don't want to follow this 115 BAC default tax regime. Can I shift it to that normal or optional or old regime? Yes. What is the section number given that facility, ma? 115 BAC subsection 6 is given that option to shift out from the default to norm. So that is in 115 BAC. So next two sections are given for that which companies, ma? Domestic companies, optional tax rates. Next these two sections for that whom, ma? Cooperative society. So what is that point? Additional depreciation is available only for the, yes, ma, old regime tax followers. Individual HF, AOP, BOI, HAP, normal tax rates are nothing but what, ma? Old regime. Companies, normal tax rates. Cooperative society, normal tax rates. If they are following these, additional depreciation would not be available. Additional depreciation. Normal depreciation can be taken by the any party, but additional depreciation can be taken by the SSCs who are following the old regime. Are you clear up to now? Now, unabsorbed depreciation. What is that, ma? Unabsorbed depreciation. I think you know already. Depreciation we can take in the P&L account to the extent of profits. To the extent of profits only. Because of depreciation, profit should not be converted into losses. Now, I calculated the depreciation. How much depreciation I have? 10 lakh. But my P&L account is allowing only how much amount here? 2 lakh. So that's why I absorb the 2 lakh. The remaining amount is called as what? Unabsorbed. This is an insufficient cases. Insufficient profit cases. Second one, no profit case is also there. Remember, I have a 10 lakh depreciation, but still now in our P&L account loss is there. Can I absorb any depreciation? No. So then what is that point, ma? Totally unabsorbed. So now I will tell you what is the treatment. Remember, it can be first set off. So set off always during the previous year. In PCBP head, you have an unabsorbed depreciation. Set off means nothing but what? During the previous year, I want to set off this unabsorbed depreciation with the any other head of income except which head of income? Salary. So carry forward and the set off means nothing but what? In next years, same treatment. Unlimited years you can carry forward and set off same except what? Salary. Last one, business need not be in continuation. So during this previous year, I have 10 lakh unabsorbed depreciation, sir. Next year, I closed my business. Even though you closed your business also, you can carry forward this unabsorbed depreciation for how many years? Unlimited number of years. Business need not be in a continuation. So what is the order of priority? Yes, current year depreciation first you have to give. Then after what? Business losses. Next, unabsorbed depreciation. So because the current year, yes, losses. Current year depreciation mandatory. Next, business losses having how many years of validity? 8 years. That's why give the preference. Then this having the unlimited period of time. That's why we are given the least preference to the unabsorbed depreciation while we are setting off against the any profits. Last concept, yes, in the depreciation and before the break also, apportionment of depreciation. Concept last one, we have to do the few problems also. Okay, conceptually it is the last one, but we have to do some problems. Remember. I will ask a few questions. Definitely you can say wrong answer only. So I haven't that much of confidence, but definitely you can say wrong answer, but be confident and you can tell me that wrong answer. Now I will tell you. Previous year 24-25. A limited is there. B limited also there. Company just example. Or you can take individual names also, no problem. Okay. Plant and machinery they have, okay. They are selling the plant and machinery on 1/8/2024. Now please tell me, depreciation just we can calculate the depreciation, sir. Okay. You can't ask any other question. If I am saying that any extra information, you can get the logic, but I don't want to tell. Depreciation, just okay, 1 lakh depreciation. Now, shall we apportion the depreciation, ma? So that means some days are used by A limited, some days are used by what, ma? B limited. Can we apportion this depreciation? No, na. Why? Sorry? Sold up to 1/8 who are using the asset, ma? A limited only. That only point I said. If any asset is sold during the previous year, on that he cannot claim the what? Depreciation. Who have an exclusive right to claim the depreciation? B limited. Are you clear? Then what about apportionment of depreciation? So now apportionment of depreciation concept is possible only in these 5 cases. Okay, only in the 5 cases. What are the 5 cases, ma? Amalgamation, demerger, conversion of sole proprietorship into company, conversion of partnership form into company, conversion of unlisted public company or private company into LLP. These are the 5 cases we discussed in the business restructuring and reconstruction chapter also. You can check it out. But what is that point, ma? In that 5 cases, yes, ma, here predecessor, amalgamation case, ma, predecessor, successor. Here demerger case, demerged company, predecessor, resulting company is an successor. Here predecessor, successor, predecessor, successor, predecessor, successor can apportion the depreciation based on asset usage ratio. So asset used by them, that means what, ma? Some number of days asset used by the predecessor, some number of days asset used by the successor. So please use that ratio, and we can apportion. Now I will tell you that one problem for total, that means all the adjustments are covered in this example. If you are listen, then without my support also, you can do the problems. Listen. So whatever the points I am highlighted, please check it out, the points only. A limited, sole proprietorship concern converted into company. Can you tell me it is a business reorganization? Okay. Now, asset, remember, 5 assets are there in that opening WDV. Last day of the previous year also I am taken. And what day they converted? 29/11/2024. Please take the calculators, and otherwise you can take the phones also. So many students are doing that silly mistakes here. Please calculate the number of days during the previous year for the predecessor and for successor. Definitely you will get the less than 1 or more than 1 days only. If I am calculated during my finals, definitely. So if I am calculating the number of days from this date to this day, I will get 243. Okay, here also I will get the 124 or 122 only. What is the reason? So this day also you have to give it to the successor. What is the day? 29/11/2024. On that day, that is converted as a company. That day also you have to give it to the successor. Then you will get the correct thing. Clear? Now, so remember, opening WDV, if any asset is there, that asset now we have to apportion in which ratio? 242 days east what? 123 days. So present previous year is 24/25. That is not a leap year. Remember, just we have to apportion for the 365 days only. Now, one more thing they will give you. Some assets are purchased by the predecessor, but not from the first day of the previous year. This is called as cost of additions. So now ratio needs to be changed. Successor used it for the same number of days, but predecessor used it for just how many days? 45 days. On this asset, depreciation needs to be apportioned in the new ratio. 45 is to what? 123. Are you clear? First ratio is an old ratio. Now, when asset is purchased by the predecessor, that is used by the predecessor 45 days, successor 123 days, we have to use the new ratio here. So, in exam, one more adjustment also they can give. So, directly one asset purchased by the successor. Now, the total depreciation we have to give it to the successor only. Clear? Now, remember. So, first 5 assets related depreciation, opening WD. What is the ratio? 242 is 123. So, an asset is purchased by the predecessor on 15/10/2024. For that, suppose depreciation 1 lakh is there, that needs to be apportioned 45, 123. So, one asset purchased by the successor directly, the depreciation totally we can give it to the successor. Now, so ICMA workbook recently released. So, in these 2 days, if you want to take the Xerox, please try to take the Xerox. It is very important. So normally, always I have a feeling about the exams. Exam means nearly 1000 to 1500 students are purchased in any one of the classes, regular or exam oriented. 1000 to 1500 for every attempt will be there. From Tamil Nadu only 900 will be there. From this state only I have more admission. That's why I am coming. Otherwise, how can I come? There is a reason. Okay. So no one can say all the things openly, but I will say that after December exams, up to March I have 1200 admissions. Within that 900 from Tamil Nadu. That may be exam oriented, fast track, regular also. Mostly regular. Okay, now I will tell you. So I have one fear feeling. If I am excluding any one point, definitely that examiner will concentrate on that point. So that I have a fear feeling. So that's why they released this workbook recently. So that's why you have to cover these points also. Not total questions. I will tell you the questions also, which is not covered in our workbook. You have to try to solve. And because I have some fear feeling, at the examination, definitely you will get the questions from the workbook only. So this is a bet, definitely bet only. So workbook means nothing but our version 4 or version 3 workbook, and if you are solving these, 100 mark question paper will be in your hands. Out of that 480, I am given the 480 MCQs compilation. So you will get 26 plus marks from that. So don't do by hearting. If you knowing the reason, then directly you will get 26 plus marks from that only. Because so from the 2012 attempts onwards, I done the compilation with the amendments. I taken nearly 6 months for preparation of this total set of materials. 6 months, everyday amendments only. So just Pgbp, if I am prepared and if I am going to the classes, a lot of mistakes will be found by the students or faculty or whatever it may be. Then after I will sit and I will doing the amendments and corrections also. That's why. So directly you will get the questions. If you have energy, you can solve. Don't ask the important concept ABC analysis. So ABC I will give you super 50 questions. No, don't ask. Don't ask, please. So okay, if you are habituated to the super 50 questions with any other faculty given, you can follow. I will try to give the important set within 2 or 3 days after reaching to the Hyderabad. So out of important also, after seeing that important questions list, you can realize this fellow given the total chapter as an important only. How can I read? So what is the reason I will tell you? Sir, I don't know return of income chapter. Okay, just one student don't know the return of income. He can take complete choice also, no problem. You can take the total choice of that chapter, no problem. So, but if you are taken the return of income as an your selected chapter, you have to read that entire chapter. You can left 30% of the chapters, okay. But you are selecting the 50%. Out of the 50% chapters also, you are selected 50 concepts. That is not possible, right? If you are straight away wants to give the choice for the 40% of the chapters, total chapters, you can give. Remaining, you have to perfect. So, but don't give the transfer pricing DTAA as a choice. If you are given that as a choice, you will not clear definitely. Don't do the choice of the transfer pricing DTAA chapters because it will come around nearly 35 to 40 marks. Okay, now, sir, how we are having questions in the depreciation concept? Please open the workbook released by the ICMAI. So, in business restructuring, we have these concepts. So, this is the same problem you can do. Yes, ma. What is that problem, ma? Amalgamation is done, then we have to apportion the depreciation. Amalgamation is done, we have to page number 43. Page number 43. We have to apportion the what, ma? Depreciation. Now, can you tell me who is in? So nothing but sole proprietorship concern converted into what, ma? Company here, not amalgamation. Bonda. Yes. Listen. Heading wrongly they are given amalgamation. Remember, sole proprietorship concern converted into what, ma? Company. So now what is that date, ma? 1/1/2025. So first day of the previous year and the last day of the previous year you can take, ma. So number of days you can calculate easily. But remember, one asset purchased by sole proprietor. Here these are all assets are what, ma? Opening WDV asset. For this we have to follow the 1 ratio. So now for this asset we have to follow the what, ma? New ratio. Because predecessor purchased the asset. Last asset is purchased by whom, ma? Successor. This total depreciation we have to give it to the successor. So you can do this problem on your own also. They are asking the apportionment of depreciation between the predecessor and successor. Now I am asking finally one thing. This date also should be given to whom, ma? Company. This date also should be given to company. Second question also, this is an important. And we have in our workbook also. We have in our workbook that I will solve on screen. Total problem I will try to solve on screen. So, you need to take a break, huh? Okay. Okay, take a break for 10 minutes so we can direct 10 minutes only. So, then after we can start the session. So, with the deductions we can close and then we can take a lunch break. Okay. Yes. So in our workbook, we have a few questions. First question is nothing but apportionment of depreciation only. Okay. Just do that one problem for every model. So apportionment of depreciation, first question is there. And next, second also. As well as what, ma? These two questions are related to apportionment of depreciation. So that's why either you can solve the workbook question also, that is an apportionment of depreciation. One is enough for every model. Don't do that all the problems. Okay. Now, next, sir, in every MQP they are trying to give this question. Question number 3. Question number 3. Listen carefully. We can solve the entire question also. Okay. Smile Limited is a wholly owned subsidiary company of an Happy Limited. Happy Limited is an Indian company. So definitely by using this line itself, I can say one thing. Who are receiving the assets, ma? Happy Limited. Because wholly owned subsidiary company, recipient company must be Indian company. Based on that point, they framed a 7-mark question here. Now, Smile Limited having that plant A as well as plant B. What is the depreciation rate for the total 2 plants, ma? 1 block only. So 40% depreciation rate. And what is the depreciated value? That means opening WDV is how much, ma? 3 lakh. So 1 block, that is in plant and machinery at the rate of 40%. In that 2 assets are there. One is in plant A, another one plant B. Now, they are saying some details about plant B. Plant B purchased in which year, ma? 10th November 2022. The cost is 70,000. Now plant B is transferred by the Smile Limited to Happy Limited. So I think you know who is in transferor, ma? Smile Limited. Who is in transferee? So Happy Limited now receiving one asset from the Smile. At what cost they need to record, ma? close. So WDV of transfer. WDV of transfer. Now, on what date they are receiving this asset ma? 14th December 2024 for 20,000. So on the same day they are using that asset from the ESMA 14th December 2024. Already Happy Limited having one asset plant C under what is that value of the depreciation rate and the depreciable value 60,000 40%. They are asking the depreciation both the hands of what Smile Limited, Happy Limited. Now I haven't doubt. So plant A and plant B is in the hands of Smile Limited. Now plant B shifting from the Smile to whom? Happy. So now on plant B, who can calculate the depreciation? Happy only. That is only the point I said. Here also students wants to do the apportionment of depreciation. Apportionment of depreciation is possible only in the amalgamation, demerger, conversions cases only. So here, so only successor. That means what who are taking the asset Happy Limited only can take the depreciation on plant B. Now I have a solution already written. So quickly I can explain by using that solution. If I have okay, otherwise I will write it down totally. Definitely I have. Last in Chennai batch I taken the total things. This is only. Okay. So don't bother about handwriting etc. Okay. Now Smile Limited. So first I will calculate the depreciation in the hands of Smile Limited ma. So what is that? Plant and machinery block ma 50%, 40%. Opening WDV clearly they are given. How much? Please check the question and tell me the opening WDV ma 3 lakh. So in 3 lakh total plant A and plant B value. 3 lakh is plant A, plant B value. Now, is there any new asset purchased? No. But we sold that one asset ma. What is that? Plant B. For how much asset? For how much amount we sold ma? Yes, how much ma? 20,000. What is the amount we realized from that sale? 20,000. So that's why remove the 20,000. It is a depreciable value. On the depreciable value, we can claim depreciation at the rate of 40%. So full rate or half rate? Full rate. Why? Because this is starting from the year. This is an old assets. Cost of additions, if anything is there, that is a new. We can think about 50%. But here total assets are old assets only. Now we can give 100%. Now, after removing the depreciation, this is only what ma? Closing WDV. Are you clear? Now we can calculate the depreciation in the hands of whom? Happy. So definitely I am expecting these type of questions. Remember clearly. Now, so same block ma plant and machinery 40%. Opening WDV how much ma? So clearly they are given opening WDV in this Happy Limited is nothing but what ma 60,000, rate 50%, plant C. But is there any asset we purchased? Yes, we purchased the asset from whom? Smile. So but at what cost we have to recover? We are purchasing it for 20,000. Shall we write 20,000 here? No. Why? Closing WDV of transfer. So or we can say WDV of what ma? Transfer or company. So WDV of whom? Transfer or company. Please tell me WDV means, so please assume only one asset in the block, that is a plant B. Forget about plant A. We can calculate what is that amount we are incurred for purchasing the asset 70,000. So can you tell me that asset is purchased on, clearly they are given 10. So 10/11/2022. Yes, what is the date they have purchased this asset ma? 10/11/2022. Please take the depreciation for, yes ma, 22-23, 23-24. 2 years depreciation if you removed, then you will get the closing WDV. That is only opening WDV for this year. So that is only we can add it as a what ma? Actual cost. So that alone asset I purchased it for 70,000. Please give it 2 years depreciation. Sir, here can you tell me 10/11/2022 we purchased? That's why 50% of depreciation only we need to put to use. Less than how many years ma? Sorry, how many days ma? 180 days. In 22-23, how many years we use? How many days we use it ma? Less than 180 days. That's why here we have to give the 20% only. Now remember, what is at the closing WDV? 33,300 in the hands of transfer. That is only actual cost in the hands of whom? Happy Limited. That is a transfer. So please add. So we are not selling any asset. 93,600. Remember here importantly, we are taken this asset on which date ma? 14/12/2024. Here we use it for more than 180 days or less than 180 days ma? Hello, less than 180 days. December akka. From December, so how many days we can use? Less than 180 days only. So that's why for this depreciation, yes sir, 20%. For 60,000 we can give depreciation full. Are you clear? So now after removing the depreciation, we can get the closing WD. Only if you know that special cases related cost of additions point, then we can solve. Sir, if any asset is transferred by the holding to subsidiary, subsidiary to holding, if the conditions are satisfied, then what is the actual cost we have to record? WDV to the transferor. While calculating the WDV, so assume only this plant in that block, please calculate and reduce the depreciation, then you will get the value. Clear? Okay. So please turn off the AC. AC not required, sir. Next one. Are you clear with that problem? Next, please, I will give you the 1 or 2 minutes time. Please read the question, not answer. Same question they are given the. So I given the problem in a table form, paragraph format. They are given in a point wise. Example, okay, just I will read it out. We are not solving the entire question. No need to solve also. But same question they are given. 100% subsidiary company, super. Both are Indian companies. They are having the plant X, plant Y. Can you tell me? And so plant Y put to use from which date ma purchased and put to use from the 15th October. So now what happened ma? Transfer. Bright Limited is transferring the plant Y to Shine Limited on this date for 30,000. So on the same day they are using the what ma asset. So Shine Limited asset details also given. Now they are asking the depreciation in the hands of both Shine and Bright. Same question or different question? Same question. But names are different. You can do the on this one also. Definitely this type of questions will get you in the exam. Sir, my point is simple, sir. Many students are trying to get that 128, I think, our question paper. They want to get 128, sir. That is impossible for me also. So this is a fact. No one can say. If I am also writing that exam, how can I get the 128 out of 128? 100 also I will not get. Because limited time is there. If I have a laptop and ChatGPT option or any other also, I can write very well. But I will get 90 or 85, or definitely I will get. 30 out of 30 MCQs I will get. Because I invested in it. In your preparation time also, remember, if you solved any chapter, if you selected any chapter, completely you have to learn. But some miscellaneous concepts you can ignore. So every time, my objective is nothing but in my preparation times also. So MCQs, if anything is there, directly I want to get the maximum benefit out of that MCQs. So directly. I want to solve that MCQ on my own. If not possible, I will check with others also on that time. Okay. Now, coming to the descriptive part, first I will select some simple questions. I will write the total perfect answer. Out of I want to get. The remaining questions I will try. Sir, after MCQs, 7-mark question if I am attempted also, my marks will be in a safe zone like 40 marks. Remaining question I will try to attempt, sir. Last questions I don't know, but I will write the answers for that also. Maybe they can allocate half mark also. That is valuable only. Remember, out of the 70 mark descriptive question paper, the known questions you will get 4 to 5 questions, like 4 7-mark or 3 7-mark question. Directly you will known question only you will get. So first try that questions, then after you can write others. Some students after seeing the suggested answer, they are trying to start with the 2A. So second question, total second question, it is impossible to do that all the adjustments. In last question, if you are attempted as a second question, maybe you can write some note points or any other also, they will impress. If you are starting with the second question, how you can write that entire answer as a writer? That is impossible. And some students are writing the MCQs answers in the answer sheet. Now they are given the OMR sheet. Please note it. Many students are sending the messages, sir. I forgot to bubble that on OMR, sir. By using the habituation, I have written the total answers in the booklet only, sir. Many students are messaging that issues also. Don't do that silly mistakes, sir. Okay, now. So next, depreciation, 3 questions they are given in the business restructuring. That is done. Next, we can forward to that further discussion. Shall we start now? Now, directly I want to jump to the section 35. I want to allocate 10 minutes for the section 35. Listen carefully. It is my notes only. How you written? Huh? Previous batch. Okay. Okay. Section 35. Expenditure on what ma? Scientific research. Sir, I can incur the scientific research expenditures in 2 ways. What are the 2 ways ma? Any idea? One is in-house. One is nothing but what ma? In-house. Second one is nothing but contribution to others. First one is an in-house. Second one is an contribution to others. In-house means nothing but I haven't one business activity. For that business activity only if I am conducting the research activity, that is an in-house research. I have a car manufacturing business. In the car manufacturing business, if I am doing any research activity, that is only called as in-house. I mean doing the just one educational business, but in that educational business, there is no nothing to do the research. That's why I am giving the contribution to others. So example, Tata company is there. They are doing a lot of research activities in automobile. That's why I'm doing the business or profession. Now I'm giving the contribution to Tata. Now who can get the deduction? Who are giving the contribution? That person can get the deduction under the head Pgbp under section 35. Remember, then what about sir? Salaried employee is there, Mr. X. He is also giving the contribution to others. So then salaried SSC can get the section 35 deduction. No, if you are doing the business or profession, then only you have a chance to claim the what section 35. Now for him, we can give the chapter 6A deduction. Sir, if you are doing the scientific research related contribution, if you have a PCBP income, you can get section 35. If you don't have any PGBP income, you will get what scientific research related chapter 6A deductions you can get. Now, with this diagram only, we can conclude the total provision also. Listen carefully. Now I'm talking about the in-house research. Sir, I'm incurring the expenses 3 years before commencement. How many years? 3 years. So example, 5 years before commencement I'm incurring, but out of that 5 years, 3 years only eligible for deduction. Out of how many years? Any years also, only 3 years are eligible for deduction. Either revenue expenditures also, capital expenditure also. In which year you can take that all the things as a deduction? In the year of commencement of business. Reason? We can maintain the books of accounts from the year of commencement only without having that business income. In this year only we are getting the business income. So that's why we can claim the deduction also in this year only. So before that, yes, just maintain the records related to the expenditure. Directly you can claim that expenses as a deduction in the year of business commencement. Now, sir, after that business commencement, yes for other years, how you can take the deduction? Either revenue also, capital expenditure also, you can take the deduction in the year of incurrence. In the year of incurrence only. So example, in this year you are incurred the expenditure, directly you can take that expenditure as deduction in this only. In this year also same. Whenever you are incurring the expenditure in the year, you can take that amounts as a deduction. Reason? You have a business income, directly you can take that amount as a what deduction. Now, sir, 3 years before only eligible, both the revenue and the capital expenditure, that will be allowed as deduction in the year of what commencement. What is that? A percentage of deduction? 100%. But here revenue expenditure includes salary, material, but excludes the what perquisites. Sir, before commencement, revenue expenditure means you can give the salaries. You can purchase the raw material. But salary, okay, but in addition to the salary, additional benefits like perquisites you can give, but I will not give that amount as a deduction. But capital expenditure always excludes the what land. Next one, on or after commencement, if you are incur any, that will be allowed as deduction in the year of what incurrence only, both the revenue and the capital expenditure. Deduction also 100%. Revenue expenditure means any expenditure. Capital expenditure excludes the what land. But revenue expenditure having the restriction only before commencement. What is the restriction? Before commencement, it includes the salary, raw material, but excludes perquisites. Now, in-house research is available for the both the types of SSC. Sir, in PGBP notes, whenever I am writing the with respect to the both the regimes, that is only the differentiation. If I am not talking anything, means that is available for the both the regimes. Additional depreciation specifically written, sir. For old taxpayers, so old tax regime only that is available. For new, that is not available. I am not talking anything about normal depreciation. What does it mean? It is available for both. Here, just specifically I am written. What is the reason? It is an in-house research. But contribution to others is different. Contribution to the others is different. But remember, in-house research is available for the both the regimes. Either you are following the old regime or you are following the new regime. Now, expenditure on scientific research. Sir, again I am talking about the in-house related only. Remember. Sir, this is a separate section is given as a present MQP also, but answer is wrong, sir. Present MQP also they are given, that answer is wrong. Try to listen carefully. So you can maybe argue with me or ICMA also. but I haven't proved. I'm written that all the things as per ICMA material as well as ICI also. This provision is correct, but they are written the wrong answers in that. They are given the wrong answers in the recent MQB. Don't think about it. In MCQ series, I will specifically talk about this provision again, but remember clear. Expenditure on scientific research. So now I'm talking about the one company engaged in the biotechnology, nothing but the manufacturing of medicines, etc. Or they are manufacturing the production of any articles not being in the list of what 11th schedule. In the 11th schedule, they are clearly specifying the what some alcoholic related products and ceramic products and yes, cosmetic products and phenyl and yes, bathroom related equipments, whatever it may be there. These are all the things are classified in the 11th schedule. Other than that, if you are manufacturing anything, it's okay. For that, if you are doing that any in-house research activities, so deduction will be what 35, section 35 given the deduction 100%, but the capital expenditure here we are excluding the what land and building. So here newly we are excluding the building. Previously capital expenditure means we are excluding only land, but here we are excluding the building also. Now this deduction will be available only to the SSE paying the which taxes normal. SSE is following the normal. Company, normal means nothing but what 25 or 30 or 35. Foreign companies can pay 35. So now, what is that? Optional tax rate for the companies B. For this, the above deduction is available or not available? Not available. Clear? So this is a separate section for that company engaged in the biotechnology or manufacturing any article that is covered, not covered in this list. So some list of articles is there, no need to require alcoholic, cosmetics, etc. So other than if you are producing anything, yes, you will get the deduction 100% the capital expenditure, but the capital expenditure excludes the what land and building. Revenue it's okay. Revenue okay, but capital expenditure excludes the what land and building. Now contribution to outsiders, it is a separate section, separate provision. If you are doing the contribution to others, example, I am doing the business, I am giving the contribution. Can I get section 35? Yes. I am a salaried employee, I am giving the contribution to others. Can I get section 35? No. What is the section? Chapter 6A deduction I will. Now, every contributions also, scientific research also, social statistical also, or anything also, I will get the what is the rate of deduction 100%. I think during your intermediate level, maybe these percentages are weighted, is there. Some cases 150%, some cases 200 you can get, but now all the rates will be restored to 100%. All the rates are restored to 100%. Now, remember, if you are following the normal tax rates, you will get this deduction. If you are following the default tax regime or optional tax regime, this is what default. These are what optional. So then you will not get this deduction. This deduction means what outsiders contribution only I am talking. In-house both the regimes will be available. For both the regimes it will be available. But can you tell me in-house research only for this company? Only for normal tax. Here also this deduction is available for what? No. If any asset on that we are claiming the section 35 deduction, section 35 means what? Scientific research related deduction. On that same year or in the next year, we cannot claim the what? Depreciation. Because 100% you are getting as a deduction under section 35, the actual cost we have to record it as a nil on that asset. In same year or in next year, we cannot calculate the what? Depreciation. Clear? Yes. Next, I want to cover the unabsorbed scientific research which expenses capital. Now listen carefully. We have two types of expenses we can take it as deduction. Revenue, irrespective of profit, you can absorb in the P&L account. But capital expenditure we can absorb only to the extent of profits. So over and above profits, that is called as what? Unabsorbed scientific research capital expenditure. There is no revenue unabsorbed concept. Only capital expenditure cannot. Remember, here, without any doubt, we are debited the what revenue expenditure totally to the P&L account. That is totally absorbed. But what about the capital expenditure? 10 lakh is treated as what? Unabsorbed. In the next case, revenue we taken, but we haven't chance to take the 4 lakh also. So that's why capital expenditure also how much absorbed? 4. Then balance 6 lakh is treated as what? Unabsorbed scientific research capital expenditure. Remember, once again I am saying, in exam they can test you both the things. There is no concept of unabsorbed scientific research revenue expenditure. What concept is there? Unabsorbed scientific research capital expenditure is there. The treatment is same as what? Unabsorbed depreciation. The treatment is same as what? Unabsorbed depreciation. Clear? No. So directly I want to jump to the section 35 AD. Definitely it is an important. It is in our syllabus. Under which chapter? A. Pgbp. Under which chapter we have this section in our CMA final? I think most of you are not listening to the YouTube revision series. Okay, no problem. Right? AMD. Okay, in AMD we can touch this section. Super. After writing the T, you are identified. Super. Tax planning chapter. Tax planning in the area of nature of business. Tax planning in the area of what? Nature of business. So, same concept we have in the business, tax planning chapter. So, that's why we can get this section related question also in our exam. Try to listen. So, they are given the heading investment linked tax incentive. Tax incentive means maybe one deduction. But deduction linked to what? Investment for specified business. If any investment, if you are done for the specified business, for that they are given the one tax incentive. Second one, expenditure is allowed as deduction in case of what? Specified. What is that expenditure? Capital expenditure. Many students are confusing between the 35 and 35 AD. In 35, both the expenditures are allowed. Revenue, capital. But under 35, only one expenditure is allowed. 35 AD, one expenditure is allowed. What is that? Capital. No. So now we can classify this section into the 4 parts. First we can discuss what are the specified businesses. I will not discuss. You can read these, but overall just refer. If any one business they are given in that exam, you have to identify, this is in section 35 AD specified business. Then only you can solve the question. Otherwise, you can deviate from the other. I am only right. Next. So, remember, in 2009-10, they started this concept. I think UPA government is there on that time in central. So, they started this specified business concept. Every year, they are increasing the list of the specified businesses. But try to remember, sir, cold chain facilities business. So, I think in my village, one person started the business in 2005-6 only. 2005-6. But they are given the notification on this date. So, now, can he get the deduction? No. After this notification, if any person started on or after the date, that business only eligible for deduction. But in my village, he started the cold chain facilities for the farmer in 2004-5. That is specified business only, but not for deduction. Clear? So, but how I can remember these things? So, no need to remember. So, no problem. But dates are irrelevant. But 14 businesses are there. Try to read on your own. You can easily identify these are the specified businesses. Now, what is that amount of deduction we can get? 100% what expenses? Capital expenditure. But the capital expenditure excludes land, goodwill, financial assets. What do you mean by the financial assets? Shares. So normally shares, nothing but what? Equity oriented mutual fund units. So units of business trust. If these are all the assets, we can call it as what? Financial assets only. So, if you are investing in that also, the deduction is not available. So, excluding this only, we can get deduction. Next. So, year of deduction. Sir, in scientific research, how many prior years expenditure we can take it as deduction? 3. But now, there is no limit. There is no limit. Whatever the expenditure incurred before the commencement of business, that is totally allowed as deduction in the year of what? Commencement. Because in this year only you have an income, that's why you can take the deduction. But one condition needs to be satisfied. What is the condition? All the prior year expenditures needs to be recorded in the books of accounts in the year of commencement, and that must be capitalized, because then only we can take the deduction. Reason, the capital expenditure only eligible for deduction at the rate of 100%. So that's why you have to do the what? Capitalization. It is incurred on or after the commencement of business, that is allowed as a deduction in the year of what? Capital expenditure income. So now I will tell you the differentiation between 35 and 35 AD. You have to tell. Remember, which expenses can be allowed as deduction in 35? Revenue, capital. But under 35 AD, only capital. How many prior years we can consider for the deduction in 35? 3 years. But in 35 AD, total years. Okay. Now, capitalization condition is required in which case? 35 AD. 35 AD. Now, so this deduction is also available for the old regime tax followers or normal tax followers. So default tax regime, or these are all are what ma optional. You can't take the deduction. Clear? Next, holding period of new asset. One condition or one point is there. I will tell you. Sir, I purchased one asset for the purpose of what ma scientific, sorry, specified business purpose. You have to use it for that specified business only for the period of how many years ma? 8 years. I'm given the 100% deduction. That's why you have to use it minimum holding period of how many years ma? 8 years. But you are done. These are all the things transferred to the your business business only. That business is non-specified business. Within how many years you are transferring ma? Within 8 years. Now what I need to do now? Any idea? Sir, you can tell. Disallow. So how can I disallow, sir? Shall we do time travel and we can do disallow? Starting I said one provision 41 deemed income. Earlier years, because of this section 35 deduction, we are taking the net profit as much as low or PCBP as much as low. Now in this year we can increase that all the things by way of creating the income under section 41. That is only deemed profits or deemed income. Clear? No. Okay. So we can create that which income? Deemed income. Under the head PCBP. So next thing, if that asset transferred from the specified business to non-specified business. So here one important logic is there. No one can remember the, no one can identify. Sir, if I am selling to others, this provision is not applicable. If I am selling to others, or if I am discarded, disposed, this provision is not applicable. This provision is applicable only if you are transferring from specified to your non-specified business, then only this provision is there. Are you understood now what is a clear differentiation? So specified business to your non-specified business, if you are transferred one asset within how many years? 8 years, then you are required to create the deemed income. So this is definitely deemed income we can create 10 lakh, but government is given the one relaxation. Sir, if you purchased one independent asset for the business, that to what business? Non-specified business. So here assume there is no transfer. I'm purchasing on my own one asset. Can I claim depreciation? Yes. What is the depreciation? And 10 lakh, 15% means 1.5. Please reduce the depreciation from deemed income. It is a relaxation to whom? SSE on. So deemed income now reduce it to the extent of depreciation. If he purchased the asset on his own, he can claim the depreciation. That's why please reduce that portion. Now, however, that is only the point. However, SSE can reduce the depreciation while calculating the which income? Deemed income. Now I have a doubt. Sir, you only said that if you have an asset purchased for specified business, you claim deduction. What is the deduction you claimed? 100%. But next 2 years after that, you are transferring from the specified to non-specified treatment, you said. But now I want to know that answer, sir. What happened if I am transferring this asset to others? Or if any asset is discarded, disposed, or any other thing that becomes a useless asset, sir, then what is the tax treatment, sir? Please open the charging section last point I will tell you. So charging section last point, that is only the point. Now I will open. No need to open from your side. I will open. I will show you. Now you can easily understood this point on your own also. Remember, any sum received in respect of capital asset, yes, which is discarded, demolished, destroyed, or transferred to others. On that we claim section 35 AD. So already we claimed the 1 crore deduction under section 35 AD in the last year. Now we are transferring that asset to others, or any asset is discarded, demolished, or destroyed. Then what is the treatment? Whatever that amount received, just we received 50 lakh only. So if I am transferring to others, we can receive the 50 lakh. If I am discarded, disposal means we can get the scrap value, that is about 2 lakh. These things will be taxable under PGBP charging section under section 28. Previous year I am given the benefit, now that benefit needs to reverse, so that's why I am creating the same income. Whatever that amount I am receiving, that will be taxable under the head PCBP under section 28. Two provisions will attract section 3580 deduction reversal related. We have in two sections. If I am transferring from specified to non-specified, which section? 41. Deemed income we can create minus what? Depreciation. If I am discarded, demolished, destroyed within that specified business only, that isn't collapsed. Or I am transferring to others, which section will attract? 28 will attract. Clear? No. So one more classification I want to give it to. 35 and a 35 AD is available only for which regimes, ma? Old. But in-house research is available for both the regimes. Now, are you clear up to now? Shall we go for the few more sections? One just point, ma. Conditions I will tell you. 35 AD section only we are discussing, ma. Once if you claim the section 35 AD, you cannot claim the chapter 6A deduction under the heading C. Chapter 6A deductions under the heading C means what, ma? Income based chapter 6A deductions like 80 TTA, 80 TTB, 80 QQB, 80 RRB. These are the deductions we are getting with respect to the incomes. These are all the things we can't get. And 10AA is nothing but, I think you know, in depreciation concept I told, section 10AA, that is SEZ related deduction. You cannot claim for the same year or for the what, ma? Next year. Yes, ma. If you claim the section 35 AD for 1 year, so next year or same year you can't claim these two deduction. That's why it isn't. Definitely you have to check whether which one is a beneficial, 35 AD, or in future I am getting the chapter 6A deductions heading C more. So then no need to go with the 35 AD. Once you opt at 35 AD for your lifetime, these sections will be banned, ma. Chapter 6A deduction under the heading C as well as 10AA. Now, the same point what we discussed in the actual cost. While you are incurring any expenditure in the form of cash more than 10,000 to a person in a day, aggregatedly, you have to clear all the things in these 4 modes. If you are cleared in the cash, that is not eligible for 35 AD. Now, loss from specified business can be set off only against the what, ma? Specified business only. Example, fertilizer business is eligible for 35. One more fertilizer business is not eligible. What is the reason, ma? Hotel business is there, ma. That is specified business only, but not eligible for deduction. What is the reason? Because hotel business is incorporated on or after this date only, that is eligible for deduction. In 2005-06, I established a 3-star hotel in Coimbatore. So that is specified business, but not eligible for deduction. If you want to claim the deduction, that business should be started on or after these related dates only. So now you can set up that all the things against the losses against the specified business, even though that is not eligible for deduction. Sir, 14 businesses irrespective of the dates, that is specified only. But if you want to claim the deduction, that established on or after the dates. Clear? No. Sir, one student asked the doubt in that 2 days back in the Telegram group. That point I want to tell you. 35 CCA, you have to listen effectively for 1 more half an hour, sir. I will try to give that more time break only. Okay, for me, I will take. That's why you can also get that more time as a break. Remember, so just listen carefully. At the end of the session, you can realize if you are just keeping your mind absent for 5 minutes to 10 minutes also, definitely you will lose your interest on the session, sir. Totally. So 2 days, okay. First day, anyhow, you come not that. Okay, you try to listen. Okay, remember, because without a PCBP provision, we can't solve the math problems. We can't solve. So that's why directly PCBP, I haven't recorded version also. I can take the new chapter, but for your convenient purpose only, if I want to start the math, you need to know about the PCBP provision. That's why I'm starting. Otherwise, I will start directly with the math also. So listen. So now I want to take the 4 sections, 35 CCA. Now 35 CCD. So for this heading is missed, ma. Yes, you can place 35 triple C. Next, these 3 sections. So first you have to listen. Important. What is the section? First section is what, ma? If any SSE is contributing the amount for rural development. If any SSE contributing that amount for rural development, he can get the deduction. Remember, that rural development purpose, he can give the contribution to these funds. Na? What is the amount of deduction? 100% for both the regimes. For which regimes, ma? Both the regimes. I am not saying anything means it will be available as a deduction for both the regimes. For all SSEs. So for all SCs means individual, HUF, AOP, BOI, AJP. For all SCs, this deduction will be available. Next, second one, ma, 35 triple C. Expenditure incurred on notified agricultural extension project. How much amount of deduction, ma? 100%. Now, this is also deduction available for all SSEs. 100%. But for which regime, ma? Normal tax only. If you are following defaulted or optional tax rates, defaulted means what, ma? 115 BSC. Yes, remaining or what, ma? Optional. you cannot take the section 35 triple C. Student having the doubt. Student remember all the sections in an order: 35 CCA, 35 CCC, 35 CCD. In this case, 100% she remember that provision as well. It is available only for the old receipt. But remember, this section and the next section only having the restriction. First, rural development, it is available under both the receipts. Clear? Now, 35 CCD, notified skill development project related expenditure. But here, this deduction is available only for company, not for all. It is available as a deduction only for company, not for all. So that means old receipt available, new receipt no. Company means I want to write 115 BAA or BAB. So BA is removed long ago only, but the institute continuing to given the same thing. But you have to remember 115 BA also there, but effectively we have a 115 BAA and BA. Remember? So just try to recollect the same. 35 CCA deduction for all SCs 100% under both the regimes if you are given the contribution for rural development. 35 triple C is nothing but if you are given the contribution to the notified agricultural extension project. Can you tell me how much amount is allowed as a deduction? 100% for all SCs under both the regimes. Next, 35 CCD, if you are incurring any expenditure on notified skill development project for company SC only, 100% deduction available under old regime. Clear. Now 35D. 35D. Amortization of preliminary expenditure. So this deduction is available only for the Indian SCs. So that means residents only. Indian company is a resident or not? Yes. And all other resident SCs only, not for non-residents. Sir, what do you mean by the preliminary expenditure? I want to know. Any idea? Okay, before commencement of any business, if you are incurring any expenditure, preliminary expenditure. For company point of view, give me some examples. MOA drafting fees, AOA drafting fees, registration fees, etc. These are all what, ma? Okay, no, I haven't. I already started the one brand, one office in Hyderabad. Now I want to start one more in Coimbatore. Okay. So now, with respect to that extension, I am incurring certain expenditure in where ma? Coimbatore. Can I call it is also preliminary expenditure? Are you understood, ma? First time I started the one company in Hyderabad. Before that incorporation, whatever that expenditure or income, you can easily say preliminary only. Now, after the few months, I want to start the one branch or any other thing in Coimbatore in extension or expansion to the Hyderabad business. Now, if I am incurring any expenditure before starting this branch or any office, can I call these expenses as a preliminary expenditure? Yes, only under this section. That is only you need to do. Before commencement, if you want to set up one new undertaking, that expenditure is preliminary expenditure. After commencement, if you have any expenditure in connection with the extension or expansion, that is also what preliminary expenditure. Are you clear? So I am going in a speed manner only. Maybe within these 2 hours or 3 hours, you are in my track. That's why I will go in a speed manner. You can follow. But whatever the point I'm given, just listen only. Automatically, you will remember. And one more time, if you want to listen this session again, I will try to upload in a YouTube. So don't think about, okay, I don't want to sell these classes, sir. I can sell regular. So that is enough for my 10 years life also, no problem. So not these classes, sir. So this is also like promotion only. If I'm given the regular, after exam oriented, if I'm given the revision session, somewhat clarity they will get. And if I'm given the MCQs, they will get the 25. The remaining 15 marks also, they need to take help of me only, they will pay. But listen, I will upload these entire sessions. But okay, don't take that advantage of, okay, he will upload, we can take a small sleep or etc. Don't take it, listen here. Now, so amount of deduction, the total preliminary expenditures, you can take it as a deduction in the year of incurrence to the 5 years. That means total 5 equal annual installments you can take. 5 lakh incurred, sir. Every year 5 lakh from the year of incurrence. So first year 1 lakh, next years also same 1 lakh or increased amount you can take. Same. So that's why first year you have to submit the proof of CA report. Along with your return of income, in the year 1, you have to file the CA report. That means these are the preliminary expenditures. So that's why the CA also required to calculate the preliminary expenditure. He needs to give the signature on the one report. That report needs to submit it along with the return of income in the year 1. Why? Year 2, year 3, year 4 are not required, sir. The same expenditure you are taking as a deduction in the next years also. That's why not required. Now, overall limit. This is important. We can expect this also on MCQ also. So total preliminary expenditure 20 lakh I got wrong. So how can I take the deduction? 20 lakh divided by 12. But you can't take the total preliminary expenditure. There is a limit of deduction. 5% of cost of project. I got in 15 lakh. 5% of capital employed 10 lakh. Now whichever is higher, 15 lakh. So now they are saying clearly Your expenditure cannot exceed how much amount of deduction, ma? 15 lakh. So that means now you can take only 15 lakhs as a deduction instead of how much? 20 lakh. Clear? So that is in case of company. Company means your domestic company. Then what about others? So others only you have to check the what ma, suppose 20 lakh preliminary expenditure. If you want to take the deduction, you have to compare only with the what ma, cost of project. There is no capital employed here. Cost of project is how much amount ma, here 5% means 10 lakh. Now you can't exceed the 10 lakh deduction. Clear? So 5% of cost of project, 5% of cost, so capital employed, whichever is higher, and we can compare that with the actual preliminary expenditure. But one point is given, if you want to take this deduction, remember, if you want to take this deduction other than company or other than cooperative society, so definitely audit is mandatory. Other than company, other than cooperative society, like individual, if you have any other thing also. If audit is done, then only they will give this reduction. For company and cooperative society, without audit also they will give a no. That mandatory audit provisions is there under the act. Company side, as well as what cooperative society is related. For them, mandatorily audit provisions is there. So that's why no problem. For remaining SCs, if audit is there, then only they will give the what deduction under section 35. What is that? 35D. Now, one more D can be added, 35DD, amortization of expenditure for the what amalgamation or demerger. This provision have in the business restructuring and reconstruction chapter also. Try to remember. So, if any amalgamation of Indian companies is happened, so then this deduction is available. In amalgamation, if any expenditure is incurred for the amalgamation or demerger purposes, if any other section of deduction is not available, then whatever the amalgamation related expenditure incurred, that expenditure can be taken as deduction. Either how many equal annual installment mark 5 in the year of amalgamation or in the year of demerger take place. From that, how many years mark? 5 years. So now, this deduction can be available to whom? Successor or predecessor? A limited is amalgamating. So B limited is there. A limited is closing. This deduction is available for whom? Successor. In this year, in the year of amalgamation, they can take. The remaining years they can take. Remember, amalgamation expenditures can be incurred by both the parties also. But here, only 1 year this company is, next year the company is what ma? Liquidated, closed. So now, this deduction is available purely in the hands of successor. So even though they are incurred also, the remaining period can be in the hands of whom? Successor. Clear mark? No. 35DDA. What is the section? So 35D over. Next 35DD over. Now I am introducing the 35DDA. So 35D series is totally amortization provisions. Now listen carefully, concentrate on screen. Section 35 DDA, amortization of expenditure incurred on the what ma? VRS scheme. Do you know anything about VRS? Voluntary retirement scheme. Super. Okay. So remember, if any employee retired before that a mandatory mandatory retirement is, that is called as what ma? Voluntary retirement. So many employees are retiring before the retirement is like 60 years or 55 years because of what ma? They want to get money for the children education or children marriage purposes. They are retiring voluntarily. So what is the benefit for the companies here? Because of automation, they want to reduce the number of employees. If we reduce the number of employees without their consent, it leads to industrial dispute tax. It leads to industrial dispute tax. Now, easily we can remove with the using of what ma? VRS scheme. So at the time of VRS retirement scheme, we can give the huge amount of compensation to him. So we can calculate the sum. We can calculate that amount. The remaining period again. So for me, 60 years is the retirement age. I am retiring at 45 as a VRS. How many years of service is left for me? 15 years. For the 15 years, they can calculate the sum and they will give you as a compensation. That is only called as what? VRS scheme related compensation. This is an expenditure for whom? Company. That is an employee. It is an income for whom? Employee. So now it is anything is given by the company. For company, it is an expenditure. For employee, it is an income. Company can claim the deduction under section 35DDA. But for an employee, it isn't taxable under the head salary. Not required. The treatment of tax treatment is not required. Don't think about it. Eligible SC, any SC. That means who are paying this amount of VRS compensation, any SC. Deduction is available in how many equal annual installment of 5. Double deduction is not available. If you have taken the amount of the deduction in this section, no other deduction is permissible for this amount. No. This deduction is available on what basis, ma? Yeah. Sir, I am following accrual basis. But for this deduction, you have to follow what, ma? Cash flow. Entire PGBP head, you can follow the cash or accrual. Whatever you want to follow regularly, you can follow. But this deduction, you can follow only at cash basis. So now, one more important MCQ point I will tell you. Sir, whatever the compensation paid by the employer, he can take that amount as a 5 installment. But he don't have that much of funds, sir. That's why he's given that all the VRS compensation in installment base. Now every installment, how many installments, ma? 5. So example, 10 lakh compensation fixed for one employee. So first year they are given the 4 lakhs. Second year they are given the 2 lakh. Third year they are given the second year they are given the 4 lakh. Third year they are given the 2 lakh. Now year 1 to year 5, yes ma, we can apportion the how much amount ma? 4 lakh divided by 5. Second year how much they release it ma? One more 4 lakh. The 4 lakh divided by 5. Next third year they release it how much ma? 2 lakh. The 2 lakh divided by what ma? 5. Every installment needs to apportioned in 5 equal annual installment. Then totally year 1 80,000, year 2 1,60,000, year 3 4 5. Then totally how much ma? 2 lakh every year. Year 6, year 7 how much ma? 40,000. So this example only for the last point. What is that? If any VRS compensation is given in installment basis, if any VRS scheme amount is given in the installment basis, every installment needs to apportion in how many ma? 5 installments. Clear? So now what are the sections are over ma? 35 D, 35 DD, 35 DDA. Sir, I am not saying anything means here these sections are available for the both the receipts. So after the break, we started with the, okay, just recapping only. We are in which chapter? Okay, first we discussed after the break 35. Next 35 AD. Then after 35 C A, 35 CCA, Rural Development Fund. Next we discussed Rural Development Fund is available for both. Next 35 CCC is Agricultural Extension Project is available for both regimes or one only? One only. That is nothing but what normal. Then after we discuss 35 CCD, Notified Skill Development Project is for company only for normal 100%. Then after we discussed about provision ma, 35 D, 35 DD, 35 DDA. 35 D is nothing but amortization of preliminary expenditure. 35 DD, amortization of VRS, amortization of amalgamation of demerger expenses. Next one, 35 DDA, amortization of VRS expenses. Now 36(1), some most important section, and no need to, sir, morning after 6 to 8:30 I report the total problems, sir. I know problems, again I report the problems for what purpose? Sir, if I know that adjustments totally in our resources, which theory is required, then I know. So normally I open the total workbook, yes, I mark the total answers also. The reason is nothing but, sir, if I want to cover the entire PCBP chapter in 1 hour or 2 hours, that is impossible. But if I am highlighting the whatever the sections we want to cover, and with the help of the theory, you can do 100% of the adjustments also. Are you clear? Now I am discussing some provisions. How can I select these provisions based on problems? So in every problem, an adjustment is there. So this then section 35 is there, ma. 35 CCA is there. It is given in the, yes ma, one question number, just I will show you. These are all questions, are repeated questions only. No need to think about it. At the end of the session, we can discuss these are all the questions also. Yes ma. Company assessment, the company SSE following which section ma? 115 BA. So remember, they are following optional or normal? Optional. Now they are given one point. Now this deduction is available for both the regimes or one regime? Both the regimes. This is a National Fund for Rural Development we are contributing. This deduction is available for both the regime, one regime, both the regimes. So like this, some points are highlighted and written as a note, and I saved in the phone also. That provisions only repeatedly I am telling in the class. So after the completion of session, if you are reached at 9:30 or 10 at your home also, if you are open, these are all the things you can easily remember the total provisions what we discussed in the class. So that's why try to listen the questions properly. So if you are observing anything also, next. So 1:30 we can take a break up to 2:30. 1:30 to 2:30 we can take a break. 15 minutes is there. I don't want to waste the 15 minutes. I will take the few more points. Listen carefully. Other deductions. Sir, other deduction, why they are given the name? Example I will tell you. For depreciation, separate section is there. Scientific reason, separate section is there. Specific business, separate section is there. If separate section is not there for any deductions, they are classifying into section 36 subsection 1. That is only other deductions. Okay. Now, sir, already on fixed assets, if any insurance policy is taken, we have to pay the what insurance premium that is allowed as deduction in 30, 31. 30 is related to building. 31 related to plant and machinery, furniture, fixture. In that provision we discussed, if any insurance premium is taken, insurance policy is taken, that insurance premium amount we can take it as a deduction. But what about the current assets, sir, like stock in trade, etc. If anything is it, how we can take the deduction? Section 36(1). Insurance premium paid. In balance sheet, if you have taken the asset, fixed asset related insurance premium if taken, that is allowed under this section 30, 31. Current assets related insurance premium if you pay, that is allowed as deduction under section 36(1). Now, the highlighted points only needs to remember. The remaining is not required. Try to listen. C part. Insurance premium paid by the employer on the health of employees under the scheme framed by the General Insurance Corporation of India. So that means this is called as what, ma? Health insurance policy premium paid by employers on the life of employees. For whom it is an expenditure? Employer. So that's why in his business he can take the deduction under section 36(1). But this premium amount needs to be paid by the what, ma? Person other than cash. So other than cash, if you paid the premium, then only this is eligible as a deduction. First point we discussed, it is in what, ma? Current assets or stores and stocks related insurance paid. Now we discuss the health insurance premium paid by employer on the health of employees. Now, these 2 points again I will cover in section 37, ma? Listen carefully. Personal accident insurance premium, keyman insurance policy premium. These 2 things if paid, that is allowed as deduction under section 37, not 36. Sir, nothing but I think we have a transportation sectors will be there. In that who are working as a drivers and conductors, for that the transportation company will take the personal accident policy. For that they will pay the personal accident policy premium. That is an expenditure for the company that is allowed as deduction under section 37. Now remember, keyman insurance policy premium. That means if any key personnel there in the business, for that the business can be taken as a for that person business can taken by one keyman insurance policy. For that if any premium is paid also, that is an expenditure for that business, that is also allowed as deduction under section 37. Clear? Now, last point before the break. Last point before the break. It will take 12 minutes. Okay. First point onwards, you have to remember 36, 37, both the sections are important only. I think around 1 hour you have to listen this concept properly. That means total Pgbp chapter and one total income problem we can discuss. So insurance policy premium paid on the stores and stocks. Next one, insurance policy premium paid on health of the employees. Insurance policy premium paid on personal accident policy premium, paid on keyman insurance policy premium allowed under section 37. Now, employer is paying the salary to the employee. Salary will be allowed as deduction under which head, ma? Pgbp. In the business or profession, he is paying the salary as an expenditure. But it is an income to employee. Employee will pay the tax under the head salary. But in salary, we have 5 components, ma? Basic salary, bonus or commission, allowances, perquisites, welfare contribution, retirement benefits. Any one of the components you can receive as a salary. Remember, if you are given the basic salary allowed under this section, ma? 37. Allowances 37, perquisites 37. Perquisites also 37. So the totally we can take deduction. But if you are asking the section numbers separately, we can discuss, ma. So basic salary 37. Yes, allowances 37. Perquisites 37. I am paying the 1 lakh each component, ma. This 3 lakhs will be allowed under which section? 37. No. Retirement benefits also 37, ma. Only one retirement benefits VRS is allowed under specific section, that is 35 DDA. I think 5 minutes back we discussed. Only 2 things is allowed in 36(1). What are the 2 things, sir? Bonus or commission, welfare contribution. Bonus or commission, only 1 point now we can discuss, ma. That is only the next one. Bonus or commission. Next is a welfare contribution. Both the points in order we can discuss. If any employer paying the salary to that employee, that is an income. For an employer, it is an expenditure, he can take it as deduction. But how many components are there? 6. out of the 6 components, the 2 components can be allowed as deduction under section 36 subsection 1. What are the 2? Bonus or commission, welfare contribution. First, I will tell you the bonus or commission before the break, and after the break, we can discuss welfare contribution. So you can forget totally in the lunch break, and we can recap entirely from the morning. Now, bonus or commission paid to employees as an, sorry, any sum paid to the employees as an what ma? Bonus or commission. Now, what is the point? That is allowed or disallowed ma? Allowed. Under this section, 36 subsection 1. Now, please take a white paper, or at the end of the page, or total at the end of the notes, you can take one white paper. Please give the heading 43B. Please give the 43B. 43B means one condition attached to the deductions. If you want to take some list of deductions, you have to pay all the things on what basis? Actual payment basis. On what basis? Actual payment basis. So 43B, given heading up. Now, first point, Akka, please give Akka. First point. What is that point, ma? Any sum, no, just write the bonus or commission. That's enough shortcut. No need to do hard work. Just give the heading 43B. After that, first point, bonus or commission. So in 43B, they are given these 7 points. Now. These 7 things, if you want to take the deduction, if you paid actually to the others, then only you can take deduction. One is nothing but what? Bonus or commission. In future, we can discuss the 43B. Okay, in future we can discuss the 43B. On that occasion, yes, already we prepared the list. Directly we can start the discussion of the 43B. Don't think about it, this many pages we will not discuss, not required also. Regular batch now, I want to give that 100%, that's fine. 43B is deduction allowed on what basis? Payment basis. How many cases are there? How many expenditures are covered under this section? I think G, that means what? 7. Out of that 1 point already we written. Bonus or what? Commission. That means while reading the provisions itself, we can prepare a list, then we can compare with the list. Okay. What is that amount? Bonus or commission is allowed only on what basis? Actual payment basis. Clear? Now, few points. Listen carefully. Yes. Private company, if given the dividend, can you tell me, to the shareholder, dividend cannot be taken as a deduction because of the dividend payment. So they cannot reduce the Pgbp or they cannot reduce the what net profit. Dividend is not allowable expenditure. But so then comes to the shareholder point of view, dividend always taxable under which head of income? Income from other sources. He is an employee income shareholder. No, sir, it is a disadvantage. We are paying some amount to other person, but we are not claiming this as a what deduction. That's why some companies will give the dividend, so they will give the bonus or commission instead of the what dividend. Anyhow, I want to give the what dividend to these fellows. So he is an employee come shareholder. If I am given the dividend, they are directly disallowing that amount. So that's why now the same amount I want to give it as a what bonus or commission. So it will be frequently happening in the private companies. So if you want to give the dividend, please give directly as a dividend. Instead of the dividend, if you are giving it as a bonus or commission, that is also, I will not give it as a deduction. Genuine bonus or commission only allowed as a what deduction. Private company issued the bonus or commission to their employees instead of the dividend. Can you tell me it is allowed or not allowed? Not allowed. Genuine bonus or commission for their work you can give, that is allowed. Instead of the dividend, if you are intentionally given it as a bonus or commission, that is not allowed. Clearly? No. So, even though if they are restricting also, if I am given, so I am not giving it as a what deduction. But shareholder side, they are given the bonus or commission also. Dividend means dividend only. If they are given the bonus or commission, I will treat that also dividend. That is only what deemed dividend. So directly given as a dividend, dividend only, income from other sources. If they are indirectly given the dividend as bonus or commission, I will treat that also what deemed dividend. Clear? No. You can take a break for 1 hour exactly. At 2:30 we can start. Okay, if I get in late also, this is a new place for me also, I need to reach to hotel and I need to come back. So 10 minutes maybe deviation will be there. If I am starting class at 2:30, you have to attend. 2:30 we can start. Thank you. So remaining provisions we can discuss in a fast manner, and we can close the entire thing in an think 1 hour, 1 hour, 1 hour 15 minutes. Then we can start directly math provisions. We need to close these two chapters today only. So PGBP, assessment of various entities, math and other provisions also I want to cover it today only. So you can walk out from the session after 7 and you can watch from the YouTube also, no problem. Today not live, sir. For the pre-recorded sessions I will upload. If you have any work or distance or other conditions are not permitted, you can walk out from 7. So if after 7, if any class is there, I will try to record on my own. If one student is there also, I will record. Otherwise, so staff will be there, we will record them only. I will record. Thank you. Welfare contributions. Out of salary, the two components is allowed under section 36 subsection 1. One is a bonus or commission. Second one is a welfare contribution. So definitely it is a new point to all of you. Listen carefully. So welfare contribution examples is nothing but the PF. Next, statutory, so superannuation fund as well as employee state insurance, etc. If you are creating any fund for the welfare of an employee, that is called as what? Welfare contribution. Now, in our syllabus, the mostly we are getting the questions related to the provident fund. That's why I'm taking the provident fund as an example for this welfare contribution. So, what is the purpose of creating the welfare contribution and all the things we can discuss in detailed manner? Listen. One employee joined at the age of 22 years in your company. He is retired at 60 years of age. How many years of service is given for your company? 36 years. Generally, one scenario is there in our real life scenario. If you are given that monthly salary 20,000, definitely they can utilize the what month? Every month the salary for that month only, and month end we are waiting for the next month the salary. So then what is that security you are created after that retirement? His entire life is sacrificed for your company only. That is, the company is ABC Limited or whatever it may be. Then what you can do for that welfare of an employee? So that's why the scheme is created. One act is also there, the Provident Fund Act. As per that act, you have to remove the certain percent of the salary, certain percent of salary from his monthly salary. Just example I'm taken. Every month 20,000 will be deducted from his salary. So now net salary, what we can give 18,000 only. Every month net salary I will give it to the employee is an 18,000. 20,000 out of the 2,000 will be deducted. As in which contribution? Employee contribution. I will open the one provident fund account in the name of that employee. Yes, that is a like bank account only. Now, how much amount we deducted from his salary? 2,000. Every month we can contribute the 2,000 to this provident fund account. Sir, what is a welfare? Sir, you are deducted deposited. That is not a welfare. This is purely welfare only. The equal amount of contribution, employer also will contribute from his own pocket. So nothing but every month 2,000. Yes, sir. Yes, here also every month 2,000. So every month, what is the amount deposited in the employee provident fund account? 4,000. So just take the calculator. Every month 4,000. Per annum is 48,000. How many years of service, sir? 36 years. How much it will be? 70. So for this amount also you will get interest also will be accumulated. So whenever he wants, he can withdraw that amount. The total amount is available to whom? The employee. Now, the employee life is set after the retirement also. Now, we can analyze the two things. So, whatever the employee contribution is there, this employee contribution is not an income. This is not an income, just we can call it as savings. Sir, I have an excess money, I'm deposited in my bank account, I'm taken that amount along with the interest. It is not an income, it is a savings only. For this thing, we can get the chapter 6A deduction under section 80C. If any amount contributed in public provident fund account, recognized provident fund account, any provident fund account on your contribution, you will get 80C deduction. Now, what about the employer contributions? So definitely, this will be the income to whom? Employee. Because every month 2,000 amount is deposited in my bank account. On that also I am getting that what my interest. These are all the things will be income only. This will be taxable under the head salary. So no need to think about the all the things from the employee point of view. It is an already over in your intermediate level. Now concentrate from the employer point of view. Out of these two contribution, which one is an expenditure to employer? Employer contribution. Employer contribution is an expenditure, so that's why it is allowed as deduction under section 36 subsection 1, but here they are given the what 43 subsection B subject. Means If you want to take this amount as a deduction, if you are paying actually, then only you can take deduction. Now, I think in a list, we have to add after bonus or commission, please write employer contribution to welfare schemes. Second one, 43B, I think you are given the heading. One is over, bonus or commission. Second one, you can write the employer contribution to provident funds. Then, no. Here only real magic we can experience in this total provision. Employee contribution is in expenditure, no? No. For employer, it is only that expenditure. It is not an expenditure. We are deducting from his salary and depositing. It is not an expenditure. But we can take deduction. How, sir? I will tell you. Sir, in our company, we can take example, 200 employees are there. Every month, how much I am deducting from their salary? 2000. 2000 into 200, if you are multiplied, I think lakhs of rupees will be there. So, can I use it for my working capital purpose? Definitely, if shortage of funds is there, I can attempt to use that same amount for my working capital. So, that's why for controlling purpose, so they are inserted this point. Whenever you are deducting some amount from the employee's salary, it will be added to the income of the employer. So suppose 5 lakh I'm deducting from the employee's salary. On the spot, it will be added to the employer's income. On that, you are required to pay the tax also. Sir, this is a burden, sir, for me. Yes, burden. Then you can do. Please listen. If you are deposited within the due date in the provident fund account, then you can take this amount as a deduction. First of all, it is not at all your expenditure. That's why we are added to your income. If you are depositing within the due date, then you will get this amount as a what, ma? Deduction. Now, here due date means what, ma? Allowed as deduction under subject to 43B means it is a return of income due date under section 139(1). You have to pay, these are all the expenditures on actual payment basis on or before the return of income due date. You will get this amount as a deduction. But here due date isn't different. In your CA provisions also, there is much clarity regarding this. I will tell you. Employer contribution, employer wants to take as a deduction under subject to 43B. He can take it as a deduction within the due date. He must be paid on or after what date, ma? Return of income due date. But here due date means provident fund. For employee contribution, what are the due dates, ma? Relevant act due dates. Suppose if I am following the provident fund related provisions, provident fund act. Employee State Insurance Act, in case of Employee State Insurance. So, different acts related due dates you have to follow. So, example for Provident Fund, in this month, May month, the salary I paid after deducting that what month amount. Example, 5 lakh I deducted from the employee salary. That 5 lakh you have to deposit on or before 15th of what month? June. Following month means nothing but May, following month is June. So, on or before the next month, 15th. So now, so many students are thinking this is only allowed as deduction. No, no, this is also will be allowed as deduction because first it is added to the income. Then after we can take it as what, ma? Deduction. Due date means directly you can remember employer related 43B, that is a 143(1). Employee related, can you tell me what is the due date, ma? Relevant act due date, that is an on or before next month 15. So now we can do one adjustment from the total income problem, not complete problem. We can discuss some adjustment from our problem. So if you have a workbook, you can open. Otherwise, just check it out. Otherwise, just check it out. Our last attempt adjustments also the same adjustments they are given in the exam. No. One problem I will tell you completely how to do, how to approach the second question also. I will do that one complete problem. So first try to. Every time they will do, they will give you the question for the company only because in final level we have to do the assessment of company. So already I told you, they will give you the what one net profit after debiting and crediting of the following items. They are given some list of items after debit, after credit. Now, so directly I want to start with this adjustment related to S3 and 4. Just listen. After debiting and crediting of the all the items, net profit is how much, ma? 82. They are asking the, I think, total income. Total income means nothing but what, my aggregation of 5 heads of income. Mainly here we have to calculate PCBP. If any other incomes are there, we have to add. So first our target compute the PCBP. PCBP income needs to be started with the what, net profit. We have to do the adjustments now. Third and the fourth, please see. First one, employees contribution. Employees contribution. Next one, employer's contribution. So target the fourth point and tell me whether we have to add or not. Employer's contribution to recognized provident fund is 24 lakh. Whole amount was remitted means what ma paid on 21st 5 2025. Can you tell me this should be paid on or before the return of income due date? Because it is subjected to which section ma 43B. What is the due date? 31st 7 or 31st October? October. Company due date is 31st October 2025. Before that date only they pay. That's right. It is allowed or disallowed? Allowed. Already they have debited this amount. That's why no need to do anything. Because already they have taken the debit treatment. After debit only, how much amount we got now? 82 lakh. No need to do anything. Are you clear? So definitely they are doing that what ma nil. Yes, they will do the government nil. Since the payment was made before the due date, so that's why it is eligible for deduction. Already it is taken as a deduction from the what net profit. That's why don't do anything. Now, shall we take this one also? Please read on your own. Just generally you can read on your own also. Try. Don't sit ideal. If you are sitting ideal, definitely you will get sleep or any other dreams also. Employees contribution to recognized provident fund 24 lakh. Out of 4 lakh contribution for 2 months remitted 10 days beyond the prescribed due date. So that means 20 lakh, okay, hello. How much is needs to be disallowed? 4 lakh. So that means how much already debited ma? 24 lakh debited. So out of the 20 lakh debit treatment is okay. Now we have to disallow how much ma? 4 lakh. Sir, expenditure needs to be disallowed means nothing but what we need to do ma? Add. Because of this 24 lakh debit treatment, net profit reduced. Now we want to increase the net profit with how much amount? 4 lakh. So that is only the treatment we have. Yet, sir, fixed adjustments, they are repeatedly given in the question, sir. So last workbook, if you are observing, 5 total income problems are given. Out of that 5 only, repeatedly they are mixing the total adjustments. Okay, now. So we can come back to the further discussions. It is an amendment provision. Okay, try to write it down in a notes also. I will not give the separate time along with the listening. Yes, you can try to write it down. Amendment. What is that amendment? Percentage increased from the 10 to 14. I will tell you what is that also. Employer can contribute the amount to the notified pension scheme or national pension scheme, or we can call it as an Atal pension yojana also. That is only ADCCD. What is the section? ADCCD. So here employee will contribute. Employer also will contribute. But which expenditure can be taken as an employer for deduction? Employer contribution. What that amount is allowed as deduction under section 36 subsection 1. What is that amount of deduction? Actual contribution or 14% of salary, whichever is lower. Previously that is a 10%. Now they are increased to 14%. So, but salary definition is given as an here. Salary means basic salary plus dearness allowance forming part of retirement benefits. The 2 things only we have to consider for calculating the 14% of the salary. Try to remember. Maybe you can get it as an MCQ also. No, I haven't done it. New receipt. In chapter 6 year deduction, I will discuss. No. This deduction for employer. Only for you. Sir, for an employer side, no need to discuss about the regimes. Employer side, maybe company or anything, no need to discuss. No, I'm only discussing that. Employee can take he is contributing some amount. On this, he can get the section 80CCD subsection 1B. And yes, some other sections also there. So, this we can discuss in chapter 6 year deduction. Now I am talking about the whose contribution side, employer contribution side. Employee contribution related, he can get the 80CCD 1B. So employee can take this also as a deduction under 80CCD 2. So that we can discuss in the deductions related, and you have a notes also. Employer also, I will tell you. Okay, detailed manner. Remember, 80CCD 1, 80CCD 1B. On employee contribution, who can take the deduction? Employer. Under employer contribution also, under section 80CCD 2, he can take. Totally, he can take the deduction with respect to the NPS 3 sections. Chapter 6 reduction. 80CCD 1, employee contribution related. 80 CCD 1B, do you know? Additional contribution related deduction we can take. So these two with respect to which contribution? Employee contribution. Who can take these deductions? Employee. Now with respect to employer contribution also he can take chapter 6A deduction. That is nothing but what? Section 80 CCD subsection 2.
You should add back the entire amount, then you show it as
This is an in this case, that is a deduction concept, sir. Entirely, you are totally going to the first thing. If you want to take this deduction, first you need to add it to your income, then you can take it as a deduction. Okay. So nothing but they are asking now. Okay, I will show you the deduction. Just check it out the screen now. 80 CCD related. So yes, ma, check it out. Check it out. Remember, 80 CCD, who can take this deduction? Salaried employee individual. So 80 CCD 1, employee contribution, CCD 1B. On employee contribution only, additionally deduction. 80 CCD 2 is nothing but what? Employer contribution. Now, so what is the amount of deduction? It is given. CCD 1. After that you can refer. 1B means nothing but what? Additional deduction. Additional deduction 1B means. CCD 2 is nothing but what? Employer, whatever the amount is contributed, on that also you can take deduction. But if you want to take the deduction, first it will be taxable under which head of income? Income from salary. So he is given the income to whom? Employee. So that's why first it is a perquisite for you. In addition to the salary, they are depositing some amount in your NPS account. That's why first you have to add it to the what? Your salary. Then after you can take this amount as a deduction. I think you are asking this point. Yeah. Are you clear? So after that you can refer these percentages and all the things also. Give the least preference to the chapter 6A deduction as well as TDS and TCS also. But one question or one or two MCQs they will give you. But if you are investing a lot of time, that will not be helpful for you also. Don't discuss all the things in a deep manner. Just go through it. If possible, I will record the revision videos of these two chapters also in YouTube. But if you are concentrating thoroughly, first prepare the CMA final whole chapters exclusively. Then after you can concentrate on this. But exclusive amendment areas is there. I will tell you after. Now, so employer side, if you are thinking, he is contributing some amount. That's why he can take this amount as a deduction. But employee side, can you tell me? In these two sections, with respect to this contribution, he can take. Next section is nothing but what? CCD2, employee contribution. First it will be added to the income. Then after he can take it as a deduction. Now, so 36 subsection 1 is on voluminous, but it's easy. Remember, interest on borrowed capital. What is that? Borrowed capital means nothing but what? Loan. If you have taken any loan for your business or profession purpose, on that if you are paying interest, that can be allowed as deduction under section 36 subsection 1. But conditions are there. First condition, capital must have been borrowed. Second one, borrowed means nothing but not your own funds. You need to borrow. Example, sole proprietor is given the loan to sole proprietorship form. If any interest paid by the sole proprietorship form to the sole proprietor is allowed or disallowed? Disallowed. Because that is a notional loan, notional interest only. That's why it is a disallowed. Partner giving the loan to the partnership form paying the interest to the partners. It is allowed. But how much amount? Up to 12%. Up to how much? 12%. Okay. Borrowed money shall be used for what purpose? Business or profession. And interest must be paid to other person, not you. That means in sole proprietorship concern, in case of the just interest paid to you only. That's why that is not allowed. Interest must be paid to others. It is only sole proprietorship point. Next, if interest paid to relatives. So allowed or disallowed? Allowed, but to fair market value. Interest paid to whom? Relative. Example, for my institution purpose, I am taking the loan from my relative, that is my brother only. Now I have an option. What is the option? I can pay more and more interest to my brother. I can reduce my business profits to the zero also. So that's why they haven't one provision, 40A subsection 2. 40 capital A subsection 2. In your business or profession, if you are making the payments to your relative, that must be restricted with the fair market value. Over and over fair market value if you pay, that is what deserve. So market rate of interest is 2 rupees per month. I think you know 2 rupees per month. Okay, 24% is a fair market value. So I am giving the 48% to my brother. How much is allowed? How much is allowed? 24. Allowed. Excess 24 portion is what? Deserved. So what is the provision? 40A subsection 2. But no one is giving the loan to me, sir. That's why my brother taken an advantage. He's taken the 36% from me. So that is a genuine or not, genuine. In case of genuine borrowings, they can allow the interest rate even though if it is a high. But you have to prove, sir, I actually paid the 36%, sir, no one is giving the loan to me, that's why I'm taking the help of my brother, that's why they are charging the 36%. If you are proved to the AO, then they can allow the, even the rate of interest is very high. Now, partnership firm can pay the interest to the partners on their capital up to how much amount, 12% per annum only. Future, we can discuss the 40B, that is an amendment. Okay. Now, so I have a doubt. Sir, in loan I am taken, whether that loan needs to be utilized for the working capital purpose or purchase of assets purpose. Anything also okay. Whether you are utilizing for working capital purpose or purchase of assets purpose also, it is irrelevant. Whether it is used for business or not, that is only important. Now, so already this point done in an cost of additions point. If I am taking any loan and I am purchasing any asset, up to first put to use, that interest must be what, capitalized. After put to use, we have to take that amount as a deduction under section 36. Now, so 43B case, one more point we have to write it down. Now, remember, if any interest paid to the bank's financial institution, banks means are scheduled banks, the NBFC, financial institution, that will be allowed as deduction under section subject to section 43B only. So how many points already we have written in 43B? First one, bonus or commission. Second one, welfare contribution. If you are writing as welfare contribution, that is not correct. Employer contribution to welfare schemes, not employee. Employer contributions only come. Third one, interest paid to the banks, financial institution or NBFC. Banks means nothing but your scheduled banks. Clear, Matona? Now, so I'm closing this point within 1 minute. Just listen. So nowadays we are using the assets as vehicles in our business or profession, but long ago. So what is the transportation? What is the assets are using for transportation? Or horses, bulls, etc. That is an assets only. On that assets, they are not given the depreciation because we are excluding the livestock from the plant and machinery. But these are all the things also assets. So that's why they are given the separate deduction under section 36(1). Remember, yes, whatever the animals we are using in the business as an otherwise than the stock in trade means nothing but what we are using as an assets. I will tell you simple example. For dairy farm, yes, ma'am, whatever the cows or buffaloes are there, assets are stock in trade. Assets one. From that only we are generating the income. So for poultry farms, hence our assets are stock in trade. So now we are given this section of deduction for animals using as an assets or stock in trade. Assets. So for manufacturing business, yes, ma'am, horses are there for doing the transportation. The horses are assets only. Now we can take the deduction under section 36(1). So, but in which year they will give you the deduction, ma'am? In the year of death of that animal or in the year of permanently useless of that animal. We purchased 10 years back, sir. So now that is died or that is a permanently useless for our business purpose. In this year you can take. What is that amount you can take it as deduction? I'm purchasing for that 1 lakh. So now entire amount you can take it as deduction. But on the occasion of selling the dead body of that animal and receiving the 5,000, reduce this 5,000, this 95,000 you can take it as a deduction. Sir, it is not a famous deduction now, but it is a famous in earlier 1960s and 70s where we are using the animals as an assets in our business. Now, good morning to all of you. Good morning. Intentionally, I said, yeah, for some persons only. You don't know. I will be in a face of camera for a few minutes only. After that, I will come to the total places and I will check whether you have written anything or not also. So, okay, no problem. After the session, if you are scolding me also, not at all issue for me. I have one confidence in my lifetime. I will never meet with all of you also. So, within 2 days. After that, my life is different and your life is completely different. We don't know with each other also. But some cases, in rare cases, if you met also, so past is past only. Okay, remember. Family planning expenditure important. If you are incurring any expenditure on family promoting schemes, then you can take deduction. But this deduction will be available only for the company as important. This deduction is available only for company. I mean individual. I am incurring some family planning promotion related expenditure. I will not get the amount as a deduction under the Pgbp. But who can take this deduction? Companies. Now, So if you are incurring as a revenue expenditure, that is allowed in the year of incurrence only. If you are incurring the capital expenditure, that will be allowed as deduction in how many equal annual installment mark per. These two things also will be allowed to the extent of profits only. Over and above profits, that will be created as what mark? Unabsorbed. So both mark, capital also, revenue also can be formed as an unabsorbed. Both the things. So in scientific research, only capital expenditure is unabsorbed. Revenue we can take whatever amount we want. But remember, so revenue expenditure, capital expenditure can be taken in this section as a deduction to the extent of profits only. The remaining amounts can be called as what now? Unabsorbed. What is the treatment? Same as unabsorbed depreciation. Now, lifetime important section, remember. Deduction of bad debts. I have two bad debts, sir. One is personally, I am given some money to my friend, is not given the debit. One is the first one. Second one. So some students are not paying the fees to me after taking the service. Out of these two bad debts, which one is eligible for deduction in my business mark? Second one. Are you clear? So now, debt must be related to your business or profession, and you have to write off in your book stock account as a bad debt, then only you can take that amount as a deduction. Second one. So previously, I recorded in my trading and P&L account as a sales only. So that means I'm selling the, yes sir, example 100 classes, sir. So out of that 100, 98 is in cash sales. That means after taking the money, I'm given the assets. 2, I'm given as a credit basis. So total amount is around 10 lakh if you have taken. The 10 lakh is considered as an income. So out of the 10 lakh, this is also considered as an income. Now that becomes what mark? Back. So now, if I'm taking the 2 classes related as a deduction, yes, automatically my net profit will be what mark? Stable. So that's why we are given the deduction under this section as a 36 subsection 1. First of all, it must be related to your business or profession. And second one, if you want to take this amount as a deduction, first of all, it must be included in your revenue. In which year, ma? Present year or in earlier years? Now, third one. Sir, debt must be in which nature, ma? Revenue in nature. Example, in my office, I sold 1 lakh. One asset I sold. That person is not giving me money. That is not a bad debt related to your this section. Why? That must be related to what my your sale of goods or sale of service, not a fixed asset sales, etc. Revenue nature bad debts only allowed as deduction here, not in capital nature bad debts. Next one. In case of money lending business, banking business, etc. So bad debt must be related to what ma? Loans and advances. Whatever the loans and advances they are given, if that becomes bad, they can take it as a deduction. I think you know the provisioning norms also related to that. So now, bad debts is allowed. No? Provision for bad debts is always disallowed. What is that allowed? Only bad debts allowed. Provision for bad debts is always disallowed. But for banks, it is allowed. For banks, it is allowed because in Banking Act and yes, the NBFCs Act itself, so they are given the power to create the provisioning norms, I think standard, substandard. They have given the right. For them only, we haven't given a chance to take the deduction for the provisions also. But in P&L debit side, general companies, if they are created a provision like 10 lakh, can you tell me? Provision for bad debts, they are creating 10 lakh. What we need to do, ma? So we need to disallow. Disallowance of an expenses means we have to do what? Ma? Super. Now, sir, predecessor father doing a business in 21-22, he's doing one, he's done one credit sales debt created. So in 22-23, the business is taken over by the son from the father. Who is a predecessor? Father. Now who is doing the business? Successor. In the son hands, that amount whatever that amount created as a debt by the father, now that is realized as a what mark? Bad. Now can you tell me whether this person can take the deduction or not? Yes. Important point, I think last NQP case study question mark. Predecessor created the debt. But now that becomes a bad in the hands of successor. Successor can take the deduction? Yes. But one condition you have to listen. Business or profession must be in continuation. But maybe different persons are doing also okay. But business is continued. But who are managing the business is different persons also okay. Clear? Now, second point. Successor of the business or profession entitled to claim the deduction with respect to the bad debts created by the whom? Predecessor. Now, important points. Now we have to start recovery of bad debts. For example, I will take. Listen carefully. 16, 17, we are doing the credit sales to the Mr. X. Yes, for how much amount? 10 lakh. So that created in 16, 17, how much amount? 10 lakh. Now, in 21, 22, yes, 21, 22. So that is an exactly realized as a bad debt. We are taking the deduction also under 36 one. So that's why what happened, net profit reduced. Because of all these conditions are satisfied, we have taken that amount as a deduction from the net profit while computing the PCBP in the 21, 22. It is a closed story. But in the 24, 25, Mr. X is given the total amount to the Mr. F. So what happened, ma? Already you created that as a bad debt. Now the bad debts is recover. So recovery of bad debts now taxable in the year of what, ma? Recovery under the head PCBP under section 41(4). 41 means you know already. Second charging section, deemed profits. Earlier year, unfortunately, we are given the deduction. Now we want to reverse the deduction in the year of recovery. So one sentence you have to remember, ma? Recovery of bad debts is taxable or not, ma? Taxable. Under the head PCBP under section 41(4). In the year of recovery, only if it is allowed as deduction in earlier years. Because of this net profit you reduced, but that is recovered. Now we can do the tax rate. Now second example. Sir, Mr. F created the debtor as how much, mark? 10 lakh. Who is the debtor here? Mr. X. In 21, 22, that realized as bad debt, but they are not giving this as a deduction. That's why net profit increased or decreased? Increased. Now that is recovered. So recovery of bad debts now not taxable. What is the reason? In this year only that is taxed because they are not allowing it as what, ma? Deduction. So many students are thinking, so only one point, recovery of bad debts always not taxable. If it is allowed in that, if it is allowed as a deduction in the earlier years, now we can create the tax statement. The not means already net profit increase, already taxed here only, no need to tax in the year of recovery. Very important point, please try to remember. Recovery of bad debts is taxable under section 41 subsection 4 under the head PCBP in the year of recovery if it was allowed as deduction in the earlier years. Now, now, I want to start with the 37. Listen carefully. So 37 is the most important. So here nearly I will tell you 18 to 19 points. 18 to 19 points totally you have to remember. So definitely out of the 10 adjustment if they are given in the total income quotient, 2 adjustment from this section 37 only. So the specific deductions over, other deductions also over. Now we can call it as a general deduction. Why we can place this name as a general deductions? Any idea? Any idea? Any other sections are not covered now. Now we can take that amount under section 37 if the following conditions are satisfied. What is the point, ma? If the following conditions are satisfied, we can take these amounts as a deduction under section 37 general deduction. First condition, these are all are not covered under 32, 36. Do you have any idea about section 32, 36? Maybe some points you know already. 32, 36 are specific as well as other deductions. If not covered, no problem. That having a place in 37. Now, that must be incurred by the SSE, not by the others. That means burden must be on SSE. It must be incurred after commencement. What if incurred before commencement? So 35D will apply, amortized over the period of how many years? 5 years. Overall limit is there? No limit. Overall limit is there. The overall limit is there. For domestic companies, it should not exceed 5% of cost of project, 5% of capital employed, whichever is higher. Other cases, it should be restricted with the 5% of cost of project. Definitely, it will be revised for me. Now, it should not be in a nature of what, personal expenditure. That means if you are taking any personal expenditure, there is no deduction under 37 also. Sir, it should be incurred wholly and exclusively for business or profession. So these 2 points having the same meaning, na? It should not be in personal. It should be incurred only and exclusively for the SC business or profession. These 2 points are same or different, ma? Different, huh? Give me one example.
to business by my uncle is already completed.
I will give you one example. Donation. I am giving the donation. It is not a personal. It is not related to business. One expenditure I incurred, I am contributing to the yes one charitable trust. Can you tell me it is a personal? No. It is related to business? No. So that's why you can't take the donations as a deduction under 37. For this you have it. The 6A deduction 80G. Clear ma? No. It should not be in a nature of capital expenditure also. Capital expenditure always added to asset cost, on that we can claim depreciation. No, it should not have been incurred by the SSC any purpose which is an offense or prohibited by law. So bribes, yes, any law prohibited related amounts if you paid, that is an always what a decision. No. Already we discussed these 2 points. Scheme and insurance policy premium, personal accident policy premium is allowed under this section 37. But health insurance premium is allowed under section 36(1). No. Do you? I think you are all of you know that the law provisions, company law section 135, corporate social responsibility. I don't want to know the total things, but if the section 135 is applicable, automatically we have to incur the at least 2% of the average net profits of the company for the last 3 years. How to incur for the CSR activities? I think in Schedule 7 they mentioned some activities. For that activities we have to incur. So example, Swachh Bharat Post and Clean Ganga, eradication of poverty, many activities are there. For that activities we have to incur. But now I haven't done. Sir, I am incurring some expenditure that is allowed or not allowed under section 37? Not allowed. It is not related to your business or profession. If you incurred any amount, if you want to take the deduction, that must be related to business or profession. Then only we can take that amount as a what deduction. Here, you are incurring the amount for the social responsibility, not for your company. So that's why it is allowed or not allowed? No? Not allowed. That is not deemed to be have been incurred for the business or profession purpose. So in hospitals, so we haven't one observation always. So medical representatives will come to the doctor desk and they are given the what medicine demos, etc. On that occasion, they will given this some sample or freebies also. So nothing but okay, ready laboratories is there. The medical representative always approaching the doctor who are doing the practice. So we are given the freebies. That means samples are there. So what is the use of the samples? Automatically, the doctor will use that all the things and he can decide whether he needs to give in the prescription or not. No? For the pharmaceutical company, this freebies is a cost or not? Yes. Can we take the freebies as a deduction? So all over India, I am distributing the freebies 1 crore. Allowed or disallowed? Disallowed. Why? Prohibited by law. Which law? So such expenditure considered as a prohibited by law because Indian Medical Council strictly prohibiting the distribution of freebies. How you can do the experimentation on the patients? So if you are offering the freebies, means what is the motive? Okay, I am given some samples. Okay, you can try on humans. If it is work out, then after you can purchase some sample from some quantity from us. So that is Indian Medical Council is prohibiting that. So that's why if anything is prohibited by law, can you take that amount as a deduction? No. So that's why it is not allowed as what deduction. Now next one. So I want to advertise my business in a local newspaper. Can I do? Yes. That is allowed as deduction under section 37. But now I am doing the yes all these advertisement in brochures, souvenirs or pamphlets of an political party. So now it is disallowed under this section 37. If you want to give the advertisement on your own, you can do that is allowed. But if you are doing all the things in a political party related brochures, souvenirs, etc., that is not given as a deduction. But on that we can claim what much after 6-year deduction, that may be 80 GGB or 80 GGC. Important. No. So many points you have to have into your mind. Impossible only. You can accept it. Try to listen and whatever the points you can remember, that can be reflected in your revision time also, directly maybe in exam also. Okay. So how many regular batch students are there? 1 or 2? Regular. Who are taken my regular class or exam oriented or whatever it is. Fast track. EVO. Okay. EVO. Regular, no one is there. Okay. If anyone taken the regular, they can realize what I told. No problem. I will tell you tomorrow also we have time. I will tell you. No. Cost of production of abundant film. Sir, please take one production company as an example. So they are nothing but started the 4 projects, 4 movies they have started. One movie is abandoned because of pure attitude. Okay, so one movie is abandoned. The remaining 3 movies are released and they got profit also. So then one abandoned project is there, for that 50 lakh we incur. The cost of production of abandoned film, it is treated as which expenses ma? Revenue expenditure. That production house, that amount can be taken as deduction under section 37. Definitely they will give you. That totally 2 paragraph will be there. That totally I am summarized into the one conclusion, 2 points, 1 point only. So if any production house is there, so they haven't profit, successful projects is there, they got a profit. So from the net profit, while you are calculating PGBP, abandoned films related cost, you can take it as deduction under section 37. Abandoned means what, ma'am? Failed project or nothing but not successfully, they are not released that film. No. Gift to employee by employer. Employer can give the gift to employee? Yes. For employee, it is a cost or not? Yes. The gift can be taken as deduction under section 37. The salary components also we can take it as deduction under 37. Salary components. Can you tell me what are the salary components? Basic salary. So out of that sum we can directly take it in 37. Gift also we can take it in section 37. Now, customary expenditure like puja, okay, Diwali expenditure or any on the occasion of festival, if you are doing any decoration, it is allowed as section 37. So if any CA is there who is involved in the practice, they want to attend for the CPE seminars. So we have to pay some amount to the institute also. The CPE seminars fees is allowed as deduction. In my profession, I incur 1,000 rupees for attending for CPE seminars, because in the CPE seminars they will tell you the recent developments in the taxation laws, any other laws. So it will be useful for my profession. That's why that is allowed as what more deduction. Now, just one point I will tell you. I will show you. You have to tell me the answer for that point. Question number, adjustment number 8, ma. In our workbook they are given. So this is a company, ma. They are given the net profit after debiting and crediting of the following items. Now please let me know what is the adjustment. Already it is debited, ma. What we need to do? 8th point. Okay. Super. Any other answer? Nothing but 20,000 amount paid, yes sir, in connection with the inauguration of new branch opened for expanding the business. Totally allowed. So how many of you are saying 35D, sir, 150 is allowed, the remaining is disallowed? Sir? X. Huh? Sir, 35D, amortization of preliminary expenditure provision we have to apply. That means, out of this, only we can take what, ma? 1/5 only. Remaining we have to dissolve. How many of you are saying this treatment? Okay, that is wrong, sir. It is not preliminary. Inauguration means nothing but decoration and puja activities, whatever we are doing. That means after commencement only we can incur. This is a revenue expenditure. We can take that amount as deduction. I also trapped in the morning time. Okay, definitely important. So always we can see expanding the business, new branch. 35D is covered. But we can't check the inauguration expenses. That means, sir, if any person is come to that our inauguration time, we have to give them some gifts also, sweets also, puja, decoration. These are all the things are directly treated as revenue expenditure. It is allowed as what, deduction. Clear? So now you can check the 8th thing, explanation what they are given. Sir, incurred for the inauguration of new branch aimed at a business expansion, qualify as a revenue expenditure. It is exclusively for the business purpose since the amount is already recorded in the statement of P&L account. That's why no additional adjustment is required. So allocate your time for preparation directly. These type of things only directly they will give you an exam. Okay, if you are at least a record now, no need to think in that exam. Directly you can write the note point in your own words also. Now, penalty if anything is paid, breach of law, not allowed. Breach of contract is allowed. I will tell you point. Sir, I am given the one promise to my customer, I will deliver the good within 2 days. But after 2 days, so I am failed to deliver that. So I am taking the 2 extra days. That's why they are asking the what compensation. So or they are asking the what some amount from it. So because I failed to deliver the good within 2 days. So that is allowed only. So contract related compensations are allowed. But if you are breaching any law, environmental law, you are breaching, they are imposed the penalty. The penalty is nothing but what not in. So, but a contract related breaches compensation if you pay, that is what allowed. No. Sir, income tax is allowed or disallowed? No? Disallowed. I will tell you after some time also. Income tax is disallowed. If you have taken any loan for payment of interest, sir, if you have taken any loan for payment of what income tax, if you have taken any loan for payment of income tax, on the loan you are paying the interest now, that is allowed or disallowed? No? Disallowed. Sir, income tax itself disallowed. For that purpose of for the payment purpose, you are taking the loan. On that you are paying the what interest. That is disallowed. And if you are taking any loan for your business or profession purpose, that is allowed. But here you are taking the loan for which purpose? Income tax payment purpose. Actually, that is disallowed. No. Tax audit fees, litigation expenses related to income tax case is allowed. The example I will take. So during the business or profession, I needed tax audit services. So tax auditor will collect some amount from me. Definitely, I can take whatever that amount I paid to the tax auditor as a deduction under which section 37, as well as okay, income tax case is pending in front of appellate authority. For that also, I am hiring one CA or any advocate. For that also, I am paying some amount. That is also what allowed. Now, important points remember. Expenditure incurred with respect to the IPO, FPO, right shares. IPO means super. FPO means okay. You know the meanings also. I hope okay. It's okay. So because of these three things, our company capital will increase. Definitely will increase. Because of IPO, FPO, right shares, definitely our capital amount will be increased. Now, for this, we have to incur certain expenditure. We have to pay some amount to the SEBI also. We have to print the prospect, whatever it may be. That is treated as capital expenditure, not allowed as deduction directly. So next, buyback of shares, bonus, debenture. Because of these things, we cannot change our capital. Capital means one cannot be changed because of these things. Buyback is what will happen? Maybe reduce. Bonus is numbers will increase, but amount will not increase. Next, debentures on loan. Outside liabilities will increase, but we can't get the what any inside capital funds. That's right. These are all our revenue expenditure. This is allowed. So sometimes you can mix these things. No, you can't. Remember, FPO, IPO, right shares. Because of that, our capital base can be increased. That's why whatever the expenditure incurred for increase in the capital base, that is a capital expenditure. That is not allowed. So because of these things, there is no change in our inside capital. That means bonus capital. So that's why it is allowed. No. So last, direct tax is an example one. Direct tax example income tax, indirect tax example GST. So remember, income tax is not allowed. Interest on income tax also not allowed. Or penalty also not allowed. Penalty normally not allowed. Now coming to the GST, yes, indirect taxes are allowed. Interest on indirect taxes also allowed, but subject to 43B. Please write down 43B. One more section now we have to add it to the list. One more section. I think we written the already 3 points. This is the 4th point. Correct? Yes. Can you tell me the first point, ma? Bonus or commission. Second one, employer's contribution to welfare schemes. Next one, interest paid to scheduled bank or okay NBFC as well as financial institution. Now, so what is the point you mentioned in the notes? Please write it down. Taxes paid. So that means indirect taxes are along with the interest. Tax means here including cess, surcharge, all the things. But okay, we can't collect the surcharge and indirect taxes, but all the things. Tax means all the components of taxes along with the interest is allowed. But if you are paid on or before the return of income due date, no, penalty is not. Penalty is not allowed. Remember, penalty is not allowed in the both the cases. No, dividend and dividend distribution tax is allowed or not allowed? Not allowed. So these are all the provisions are not allowed. No, but I want to give the one important point here. Provision for unascertained liability is only not allowed. If the provision for ascertained liability, that is allowed. Ascertained means a proper amount of outflow you know now only, then you can create the provision, no problem. Example, provision for gratuity. Sir, I know who are retiring in the coming future, what is the gratuity amount I need to pay for my employees also I know. Mostly the provision for gratuity is an ascertain liability. The remaining are unascertained, that is always reserved. Provision for loss of subsidiary, provision for deferred tax, or provision for diminution the value of asset. These are all the things are what reserved. The last point is an amendment. Last point is an amendment. What is that? Settlement amounts incurred due to infraction of law, contraventions, etc. Example. During the transportation of our goods, yes, sir, some vehicles are voided with the traffic rules. So on the time that some cases and all the things are filed on our vehicles also. So I think at the end of the any year also they can call for the settlement. If you are paying this amount, all the cases will be removed, and if you are paying the settlement amount, all the prosecutions also will be removed. On that occasion, if you are paying the type of settlements, that is disallowed only. Remember, settlement commission incurred because of due to what infraction of law related to any contravention, that is allowed or not allowed? Not allowed as a business expenses. Now you have to read the 37 again. Directly disallowed, but you are not paying the penalty. You are already done the infraction of law. Now they are asking is some settlement. Infraction of law means like bribe. Here I am not giving the bribe. Legally only they are calling for settlement. So example. So normally they will give some relaxation like Lok Adalat also, bankers loans related always if you are not paying that outstanding amount, they can call for the settlement and they will give you the announcement in the public also. But sir, example I will tell you, I am giving the bribe for getting my registration quickly. That is an infraction of law. That is directly disallowed. So traffic violations or whatever it may be done. So that is nothing but what infraction of law. Now, in order to get the relaxation from this infraction of law, they are calling for settlement. This is legally acceptable of the settlement commission, but in income tax they are saying it is not allowed because it is also related to infraction of law only. Yes. Please try to refer for 2 minutes. Just whatever the points we discussed in 37 important. 37 mainly you have to refer the 13th point. Mainly you have to refer 13th point as well as 14th point. 13th and the 14th points are repeatedly they are given in the multiple exams. Sorry? Yellow. No. Tax audit is only allowed. Tax audit related, litigation related only allowed. Sir, she is asking one thing. Sir, I am paying some amount for the purpose of return filing. So I will tell you that explanation. Normally that is not allowed. The reason we have to file our return of income on own. That is a self-assessed tax. In case of tax audit cases only, we need to take the help of who? Well, help of the professional. That's why it is allowed. Because in normal cases, return filing or if you have taken any assistance of CA or CMA, that is not. Okay. Now, climax. Disallowances portion, allowances portion only done. Now we are going to take the disallowances portion. So summary only I will try to tell. First 40 subsection A clause 1. Repeat with me. Section 40 subsection A clause 1. Now one more section 40 subsection A clause 1A. So these two provisions are related to TDS. So many of you can find this provision as a nightmare only, not required. These are the provisions are very easy. Believe me, listen carefully. Sir, in my business or profession, if I am making any payment for the non-resident, definitely I need to deduct the what TDS. I need to deduct the what tax. Payer required to deduct the tax, and after the deduction, he has to deposit with the central government on or before the what due date. Sir, if any one of the condition is not fulfilled, what is the thing? So 100% of the expenses shall be deducted. I will tell you the reason. Sir, this non-resident haven't one income. That means I am paying the interest amount. That is taxable in India. So in future, whether he can come back to India and whether he can find the return of income or not, also we don't know. So that's why we are electing the payer. Please deduct the tax as per the TDS. Next, deposit with the government. If you are giving the help to the government, yes sir, while collecting the tax from the non-resident in the form of TDS, I will also give this entire amount as a deduction. If you are not doing that, then the entire amount is disallowed. Example, interest is allowed expenditure or disallowed ma? Yeah. If you are doing the TDS. And if you take that amount along with the TDS, within the what ma? Return of income. Example, 10 lakh interest I want to pay ma? Out of the 10 lakh, 9 lakh I'm paying and 1 lakh paid to whom? Department. This is TDS amount. TDS I deducted 1 lakh. I'm paying the 1 lakh TDS amount with the whom? Department, that is central government. Now can you tell me how much amount I can take it as deduction? Entire 10 lakh. From your side, what is the expenditure? 10 lakh. So TDS amount is 1 lakh and net amount is nothing but 1 lakh. So now I have one point. TDS is deducted, sir, during the previous year, but not deposited within the due date. Sir, I deducted, sir, but I am unable to deposit that amount within the due date with the central government. Then what we need to do? I will tell you. Yes. What is the TDS deducted here now? 24-25. Deposited on 31st 12 2025. What is the due date now? 31st October, because I am given the SSC as a company. If deposited before the due date, yes, okay. But you deposited after the due date. That's right. What they are saying now. It is disallowed in the previous year because one of the condition is not satisfied. But same will be allowed as deduction in the year of actual payment. Please take the what is the actual payment year now? 25, 26 in the year that will be allowed as deduction. It is an important point. Listen again. I will tell you. So you have to satisfy the two conditions if you want to take the amount as a deduction. What are the two conditions? First one, TDS needs to be deducted during the previous year, and the deducted amount you have to pay to the central government within the due. So first one satisfied, so second one you are not satisfied. No. In the year that is disallowed. So the same will be allowed as deduction in the year of actual payment. Can you tell me what is the year of actual payment? 25, 26. No. That is only in this year disallowed. And in the immediately next year what? In the immediately next year, because you are doing that actual payment, that's why that is a no. Same provision is applicable while making the payment to the UMA resident. The non-resident related tax collection may be uncertain. Resident related tax collection always certain. So that's why even though you are not deducted also or not deposited within the due date also, just how much amount we have to disallow? 30, not 100. How much amount we have to disallow? 30, not 100. No. But the same will be allowed as deduction in the year of actual payment. That means the same provision is applicable for the, yes sir, if you are making the payment to the resident. TDS deducted, but deposit is done after the due date. So that's why that is allowed in the year of actual payment. No. So this is only the point, extra one is required. Income tax is what disallowed. Indirect taxes is what allowed. What is the reason? Indirect taxes always we are paying during the business only. We are purchasing the goods and selling the goods on the occasion. We have to incur the indirect taxes. That's why that is allowed. It is a personal based nature tax. You earn the income, that is your personal wealth only. On that you are paying the tax that is not related to the business. So that's why that is an always reason. No, not required remaining. So directly we can start with the 40B. Quickly I will complete amendment. Listen carefully. 40B. You can write 40 within the bracket also. You can write 40B also. Shall we start? Remember. So partners are investing in the partnership form. Partners are investing in the what? Partnership form. So within 45 minutes, I can close the entire chapter because you can understand the basic things and the deductions. So now we can move on speed manner also. You can catch, but I will not ignore important things. Listen. So partners are investing in the partnership form. From the partnership form, partners can receive the three benefits. One is an interest, the second one remuneration, third one is a share of. Now please listen carefully. Partnership firm already paid the tax on their profits 30%. Then after the profits received by the partners. So in the hands of partners, definitely it is an income, but exempted income, not taxable. Because already who paid the tax now? Partnership firm. No need to pay the tax again by the partners. That is an exempt under this section. Then subsection 2A. Then remaining interest on capital, remuneration, can you tell me taxable under which head of income? PG. Why? Students are saying, sir, interest, income from other sources, sir, salary, remuneration, salary chapter. No. You are receiving these are all the things by way of doing the business by using the partnership form. So that's why the students are always taxable under the head PGBP. If any partner receiving the interest, if any partner receiving the remuneration, always from the partnership form, this will be taxable under the head PGBP in the hands of partners. Clear? Now, I'm taking one example. This one is the entire provision, but we are extending the provision by using the provisions only. Listen carefully. So partnership form P&L account, please take ma. Example, you and your friend are partners in one partnership form. So now we can try to you and me are the partners. always we want to try to reduce the net profit in the partnership form hands. What is the reason? Because that is 30%. Huh? That is what now? 30%. Now we want to give this interest on capital and remuneration more and more to whom partners, right? Because if I am taking these two amounts as an expenses more and more, then only the profit will be reduced to 0. So nothing will happen. You and only as a partners. Okay, we can receive the interest. We can receive the interest. We can receive the what remuneration also, whatever it may be. Ultimately, you and me get benefit. But what happened? We are reducing the net profit to 0 means we are not paying tax. Example, let me take. So sales 50 lakhs is there. Totally credit sir. Sir, I am taking this 25 lakh. Here I am taking the 25 lakhs. Sir. Now interest na reasonably they have taken 15. But you have taken the remuneration nearly 35 lakh. Net profit is 0. Now, so what happens, sir? These two things will be taxable in whose hands, ma? Partners. But no problem. Partners having the basic exemption limit and rebate concepts also. They can take many set off and the carry forward rules also they can apply. So that's why already 40B is creating the, if you want to take the interest as a deduction, interest paid to partners as a deduction, remuneration to partners as a deduction, they are given the limits under section 40B. 40B is concerned only about these two payments. So what are the two payments? Interest on capital to the partners. Next one, remuneration to the partners. Are you clear now? So here, whatever the amount is allowed. Example, it is 2 lakh, it is 3 lakh allowed. The same amount. So here, how much net profit reduced now? 5 lakh. The same amount is taxable in the hands of partners under the head PCP. So why they are concentrating only on these two? Because in these two only they are trying to take the more and more amount and they want to reduce the net profit and they want to reduce the net profit and they want to take the benefit out of it. Remember again? So what is that? To the extent it was allowed. Can you tell me how much is allowed now? 5 lakh. So in the hands of partnership form, same is taxable in the hands of partners under the head PGBP. How much? 5 lakh. 40B is applicable for two payments. Repeat, what are the two payments for? Interest on capital. Interest on capital. Next one, remuneration. First, I want to talk about the interest on capital. Second one, remuneration. If you want to take the interest on capital as a deduction in the hands of partnership form, first they need to satisfy the 40B conditions, 184 conditions. 40B conditions 3 are there, 184 conditions 4 are there. So totally 7 conditions if they are satisfied, then only which thing can be taken as deduction? Interest on capital can be taken as deduction by the partnership form. And one more condition is there, no best judgment assessment was made against the partnership form. Best judgment assessment means, I think you know, if you are not filing the return of income or if you are not cooperated with the assessing officer, they will start the best judgment assessment. As for the available records, they will calculate your total income and they will pass the assessment order also. If that is there, they will not allow the what 40B. And partnership form, now best judgment assessment is going on, sir. They will not give these two amounts as a deduction. Remember what are the conditions? 7 conditions if they are satisfied, and if there is no best judgment assessment, then we can take this amount as a deduction. Now we can prefer the conditions. First condition, that is an authorized by partnership deed and a prospective period only. That means the deed also you need to write in the prospective period. Oh, this is the point important. Can you tell me how much percentage is allowed now? How much? 12%. Sir, indeed we have written the 25%, sir. But how much is allowed by computing the PCBP? 12. Excess how much is there? 13%. That is allowed. So now, what is the allowed amount in the hands of partnership form? 12%. The same will be taxable in the hands of partners. Because whatever that amount is allowed means the net profit is reduced. The same net profit we want to give the tax in the hands of partners as an income. No. So the same 184 section is given the backup to the section 40B. Here also partnership deed. So in partnership deed, definitely we have to mention the profit sharing ratio. The partnership deed always we have to attach to the return of income. And if any reconstitution is happened, death or retirement or whatever it may be, that can happen to the partners, we have to file the revised partnership deed also. If these conditions all are satisfied and no best judgment assessment was not there, then they can take the interest on borrowed capital. So they can take the interest on capital at the rate of what? 12%. Second, remuneration to partners also same. They have to satisfy the 40B conditions as well as 184 condition. If there is no best judgment assessment was made against the firm, now the remuneration to pay to the partners as a deduction by the partnership firm. 184 conditions are same, but now I will tell you 40B conditions. How many conditions are there for? Totally, how many conditions they need to satisfy? 8 conditions they need to satisfy with respect to remuneration. 184 condition, same for the interest, same for the what ma remuneration also. So condition, the first one authorized by the partnership deed, prospective period only, and yes, remuneration can be taken only by the whom working partner. Remember, full time and part time also. Okay. Sleeping partner cannot take the remuneration. Even though if you taken also, we have to dissolve. For working partners, that too full time or part time, anything also. Now, remuneration restricted with the following amount. This is only amended point. Listen carefully. So, first calculate the book profit. So, in the process of calculation of book profit, if I got loss, what I need to do? Book loss case, I will tell you, if you got a book profit, exactly 10 lakh book profit you got. First 6 lakh related, so first 6 lakh related, clearly they are saying 3 lakh or 90% of book profit, whichever is what higher. If you haven't book loss, can you calculate it? The maximum how much 3 lakh. Please say, apply the same formula. Can you tell me book loss means 3 lakh or 90% of book profit is what 0, whichever is higher 3 lakh. Sir, if you haven't book loss, then directly you can remember 3 lakh. It is last sentence CMA enter bit. Not CA final, not CMA final. CMA enter bit. In case of book loss, what is that? Many students are writing the answer as a nil. As for 40B, in case of book loss case, the maximum remuneration can be taken by the partner. How much? 3 lakh. But previously 1,50,000. Now it will become as a 3 lakh. Now, they know. So balance book profit is there. How much? 4 lakh. On that you can take 60% of the book profit. Now, what is the main thing involving in this entire provision? Calculation of book profit. So today we can compute the two types of book profit. One is for partnership firm, one other one is for company. Math concept related book profit and this is separate concept. This is a separate concept. Remember. Now I'm calculating the book profit. So what is the main purpose? Why we are calculating the book profit? Any idea? For knowing the correct remuneration under section 40B. Am I right? Yes. That's right. For calculating the book profit, take the net profit as a base. Out of the entire P&L account, which one is an incorrect remuneration? Because the remuneration is incorrect, we want to calculate the remuneration as of 40B. So that's why whatever the remuneration debited, so that you have to remaining all PCBP adjustment, please say. PGBP adjustment means section 30 to 38 allowed, disallowed some points you know. Please do all the things. Then you will get what book profit. But easily I can say book profit means PGBP. But one adjustment only pending. What is that? Remuneration adjustment. We disallow the remuneration, but exact remuneration if you remove from this, it is directly we can say it as a what PGBP. All PGBP adjustments are done except remuneration. That's why we can call it as a what PCBP before allowable remuneration under 40B. Again, I am saying book profit computation for the purpose of knowing the remuneration. It is simple. Please take the net profit. For what purpose we are taking these things, sir? Can you tell me for what purpose we are taking for calculating remuneration? That's why whatever the amount of remuneration debited, that is correct or incorrect, incorrect. So directly you can add. Directly you can. Now, PGBP adjustment totally you will do, including interest also. Including what interest paid to the partners, excess if any interest paid, that also you have to resolve. You will get what book profit here. You can say simply all PCBP adjustment is done. Just one is pending. What is that now? Allowable remuneration. No. So you have format also. You have this format also. If you need, I will show you this format also. But I want to calculate the book profit for this exam. Just try. They will give you this type of problems. Maybe they can give you the T shape also, a statement or account form only. Partnership form can prepare the P&L account in the T shape only. Directly they can give. But now I want to calculate book profit, right? And you know the format and try to take the picture of this also. And by using this format, you have to calculate book profit. Please try. Okay, I will come. Now, do the and after we can discuss. All adjustment except one adjustment. What is the except one adjustment? Remuneration. Interest also you have to do. In that P&L account, I have given the interest to the partners 18%. But what is the allowed? Remaining is the you have to do that. Okay. Doing smart work. Don't write the narrations except but directly you can take the numbers and do the total. Why you are writing on all the things?
Please take net profit. For that, first disallow the what ma'am? Remuneration paid. Disallow means add. Full. Then P&L debit side, please check it out. What is an allowed? Okay. Disallowed means what we need to do? Add. Then after come to the credit side, allowed means okay. Disallowed means what we have to less. Yes, if you are moving all the things, the speed manner means I will give a break. Otherwise, I will skip. After 8 lakh 30,800. No, not correct again. So how much answer you got? 8 lakh 80,000. How many of you have got 8 lakh 80,000? Okay, somehow that is correct. I think you have answer. Now, so please take the net profit. Further, please add back the remuneration. While doing the PCBP adjustments, comes to debit side. Allowed or disallowed, ma? Allowed. No need to do anything. Salary is allowed. Income tax is what, ma? Disallowed. So that's why please do add. Next thing, remuneration already we are done. Interest paid to the partners. I'm saying all the PGBP adjustment except remuneration. So that's why interest 12% okay. The excess over the 6% is there that needs to be disallowed. I think 18% that comes to that 1,80,000. Now 6% how much now? 60,000. Please do. Then all the debit items are over. Come to the credit item. Profit on sale of asset that is taxable to tax under the head what ma? Capital gain. So, but wrongly charged to tax here. So that's why the impact we have to remove. Because of this item, net profit increased or reduced, increase. Now we have to reduce. Now, rent also taxed under which head of income on normally house property, but wrongly taxed here. That's why we have to reduce. Finally, what is the amount we got? 8,80,000. So please try to calculate on 8,80,000. First 6 lakh. What is the amount we can take, ma? 5,40,000. And the balance amount is there. Can you tell me? The first 6 lakh related, the provision is saying 3 lakh or 90%. Balance related, how much mark? 60%. I'm taking that entire calculation. So, yes, overall, how much maximum remuneration we can take ma as per 40B? 7 lakh. But in our P&L account, just they are given the how much amount as a deduction ma? 2 lakh. Whether that is within the limit or beyond the limit, within the limit. So that's why that is allowed or disallowed now? Allowed. What? Now, sir, book profit means, I think we are framed one sentence, it is a before. It is a PCBP before what ma? Allowable remuneration. Now, I can calculate. In our example, we paid only 2 lakh remuneration. So that is well within the limits. That's why it is an allowable remuneration is what ma? 2 lakh. So now they can ask the partners of PCBP as well as partnership from PCBP also. Now we can calculate. Shall we calculate PCBP of the partners as well as the partnership form? Yeah. Net profit and interest we have to disallow. Income tax we have to disallow. Profit on sale of asset we have to disallow. And rent from house property we have to disallow. Remuneration we are not added back. What is the reason? That is allowed only. So that's why no need to do add back now. The entire PCBP will be what? 6,80,000. Or either you can say, sir, PCBP before remuneration is nothing but 8 lakh. After removing the remuneration, you can get the how much more final PCBP? 6,80,000. This is only the partnership from PCBP. Now, partners PCBP, can you tell me? What is that amount is allowed as deduction in the hands of partnership form with respect to the interest and remuneration? Interest how much ma? 60,000. So, how much amount is allowed ma? 1,20,000. So, under remuneration, how much is allowed ma? 1,20,000 is allowed with respect to the what ma? Interest. How much amount is allowed with respect to the remuneration? 2 lakh. So, whatever the amount allowed in the hands of the partnership firm, so the same thing we can tax in the hands of whom? 1,20,000, 2 lakh, that is 3,20,000. Remember, it is an important point. Net profit. Yes. So, how to calculate book profit format? We can repeat again. Net profit. Please add back the remuneration or PCBP adjustment. That is only book profit. Book profit, another word we can say in easily what ma? PCBP only. Before only one adjustment. What is the remuneration to partners as per 40B. So now, after calculating the book profit, maybe you can get book loss. What is the maximum remuneration we can give ma? 3. Okay. Now, it is a summary. Definitely, it will be helpful for you. No? So, many students having the doubt, sir, for the interest remuneration, share of profit is directly exempt. Interest and remuneration, always we are verifying the limits. 40B is also imposing the limits regarding the two payments only by the partnership firm. What are the two payments? Interest on capital, remuneration from remuneration to working part. Then what about other payments like rent? There is no restriction. For one partnership firm paying the rent, you can't restrict the but excess over fair market value we can restrict because the partner and partnership firm is a relative. Excess over fair market value we can't pay, but partnership firm and partner always relative. Now, partnership firm paying the 20,000 rent to the partner. That is allowed as deduction. The same amount is taxable in the hands of whom? Partner under income from household. Clear? Now, next provision is a 40A subsection 2. I don't want to take the total things, just I will tell you in a simple way. 40A subsection 2 is applicable while you are doing the payments, not receiving. If you are doing the payments, if be at the debit side, please check it out. Is there any expenses debited? Yes. Out of that, whatever the payments you are made to the relatives or close associates. So these two payments are making the what to the relatives and close associates. And if the payment is more than fair market value, excess over fair market value shall be disallowed. Excess over fair market value shall be disallowed. Now, can you tell me? So here, fair market value 2,50,000. We paid only 2,50,000. No problem. Here, fair market value is how much? 95. But we paid how much? 1,11,000. Now, excess over the fair market value needs to be disallowed under section 40A subsection 2. So, what are the points we have to check? While receiving or while paying? While paying only. Payment to others or payment to relatives? Payment to relatives. If the payment is more than fair market value, excess over fair market value needs to be there, not entire value. Excess over fair market value only we have to resolve. Clear? That is only 40A subsection 2. Now, 40A subsection 3, you know already. If any cash payment in a day to a person, single payment or aggregate payment, can you tell me? Every expenditure by separately we have to check. Next step, if payment is done, okay, multiple payments done, aggregate please check. In a person, in a day, to a person, what is the limit they impose? 10,000. But in case of transportation sector, that is an increase to 35,000. Remember the limit is important. 35,000. I haven't done. They are saying these are all the things needs to be do in an electronic way. Otherwise, if I am violating, what you will do? The entire amount is disallowed. What is that? Entire example 25,000 for one person for one expenditure I am making in a day. In a cash, how much is zero? The entire 25,000 is zero. Again I am saying for every expenditure separately we have to check. One example. For Mr. X, Bhaskar making the payment, rent on this day 8,000 and on the same day salary also paid. Every expenditure wise what is the limit? 10,000. So for salary 10,000 limit exceeded? No. And rent also 10,000 limit not exceeded. So that's why here disallowance will not apply. Expenditure means nothing but what? Every expenditure we have to check. Not aggregate. Example, salary only, morning I paid 5,000, evening I paid 5,000, midnight I paid 5,000. Total how much? 15,000. In form of cash, then disallowance will apply. If same nature of payments, then only you can do aggregate. These are the different nature of payments. Yet for every nature of payment, we have a separate limit of how much? 10,000. Now, rule 6 double D. Mandatorily, you have to study these things in an evening time. That means night time. Sorry, this is only evening. Okay, in night time you have to read. But one point I will tell you. This exception means in the following cases, you can pay more than 10,000 also, no issue in the form of cash. So you can pay them more than 10,000 also in the form of cash, no issue with regarding the matter. So one is the where the payment by way of gratuity compensation paid to employee is retiring from our company. On the occasion of retirement, we have to give some amount of gratuity. Some cases, if he is expired, then we can give it to the legal case also. Now, if the income under the head salary does not exceed 50,000 per annum, at the time of retirement, we can do retirement benefits only. If the retirement benefit amount is less than how much amount? 50,000. We can give the amount in the form of cash also. There is no disallowance applied under section 40A subsection 3 because it is covered under Rule 6 Now I will tell you. Company, this company, I'm taking the same problem. This company is given the 45,000 amount paid in cash to the Raj employee of the company retiring at the time of what retirement. Can you tell me? So now directly you can say, sir, more than 10,000 they are paying in a cash, sir. Now can we apply 40 years of section 3? No, because it is covered under the exception. The less than how much amount? 50,000. Less than how much amount? 50,000. That's why there is no disallowance. Where they are given the point. This is one. 40 years of section 3 mandates the 100% of disallowance of expenditure exceeding 10,000 if it is made other than the account to pay check, account to pay demand draft, electronic clearing system, any other prescribed electronic mode. But Rule 6 given the no disallowances if the amount is paid to the retired employee, the amount is less than 50,000. For 30, I will give a break, ma. Listen carefully. This one. So I want to skip the class, sir. You want to attend, okay? Attitude always, you want to attend the class, I need to skip the class. That attitude better. If there is in reverse, nothing will use. Okay. Previous year 23-24, Mr. I want to make this some payment to the Mr. A. On accrual basis, we have taken the deduction. On what basis? On accrual basis, I am taking the deduction. How much amount I am taking as a deduction on accrual basis? 2 lakh. So now in the next year, I am making the payment. Can you tell me there is more than 10,000 or not? Yes, definitely. We have to do that amount in the form of electronic equivalent amounts. But I have an attitude, sir. Last year we taken the deduction already. So in this year, if you paid in an electronically also or in cash also, nothing will happen like that only. If you are making the payment in the form of what cash, what will happen? Ma? That will be earlier year deduction. Now we can reverse by using the section 41. Deemed income. What is the deemed income? Now we can create a 2 lakh. Clear? Now, that is only the point. Deduction allowed on accrual basis in any preceding previous year, but if payment is made other than account to pay check, account to pay demand draft, electronic clearing system, any other electronic code, then the sum will be treated as business income under section 41. That is only the deemed business income. So, I think in your intermediate level, you have taken this entire chapter as a choice. So I know I can understand. In my intermediate level also I taken as a choice only. In my final level I learned the total things. Okay, Raymond. 43B, after this section we can take a break, sir. It will take 15 minutes, no problem. Important. So deduction allowed only on what basis, ma? Payment basis. How many payments? The following expenditure cover. I think in our discussion till now, first point is cover. Tax, duty, sets the fees. Means what, ma? Indirect or direct? Indirect tax. That is always disallowed. Whether it is paid also, not paid also disallowed only. But what is that? Taxes amount is allowed as deduction if I am making the payment on actual payment basis, ma? Indirect tax. Now, second point also we know employer contribution to provident fund schemes. Third one also we know bonus or commission. Next one also we know interest paid on the loan to the financial institution, scheduled banks, NBFC. Now, leave salary is the last one. Next, any state last one. Next, any sum paid to the what? Indian Railways. The last one is the last year amendment. Payment made to a micro or small enterprise. I think in your law MSME Act is there now. Micro and the medium small enterprises act of 2015, 2008. Here, 2006. Okay, sorry, I'm not an ex. No, you can check. Okay, if you don't have confidence on others, you can check. 2006. I'm asking CMA final law chapter name MSMED Act year 2000. Okay. Sir, all of you are attending group 3 also, na? Sorry? Okay. Oh, last 3 days you can allocate for Lama. No problem, sir. First thing, group 3, if you are writing alone, it is difficult to clear only. There is a known fact. Okay. And what is the important thing? So, up to the last day, you want to continue your preparation. irrespective of the rating of exams, anything. So I think starting with the SFM and after TT and last one SCM. Till last day, if you are continuously putting your efforts, the luck also can be favored for you. Some students after writing law, they are telling it as a, I'm expecting exemption in law, sir, but I'm not getting in the up to the marks. Actually, I'm skipping the attempt. That means you want comfort zone during the exam like that. You are shifting. Maybe who knows? In SFM they can give the direct questions also. DT na okay, we given or not given also MCQs DT only very easy, sir. After law MCQs in entire group 3 DT only easy after law. So SCM and SFM MCQs maybe they can give it as a computational part and tips also. Here, if you know the provision, you can do. So next, some selective concept questions also you can get. You don't take any assumptions while you are writing the exam. If you attend, if cleared also, okay. If not cleared also, we can get some experience for other attempts. Not no problem. So I am also multiple attempt student only, not a first attempt student or rank student. Don't think about all the things. Okay, no. Last point is important. Payment made to micro or small enterprises is important. But these are all the payments needs to make the payment within the due date under section 139 subsection 1. So now, last point I want to discuss now. If any payment are made to micro or small enterprises, how we can take the deduction? So now first I want to define the micro enterprise and the small enterprise. In your law, there is a definition for the medium also not required here. Okay, the same here definitions and on the law chapter also same. So when we can call the enterprise as a micro enterprise, when we can call the enterprise as a small, we can discuss. Investment in plant and machinery is less than how much ma? 1 crore. Less than or equal to 1 crore. Turnover is less than how much ma? 5 crore. Please take these two limits for any enterprise. If these are all the things are within the limit, then we can say micro. If you are starting a factory, investment in plant and machinery exactly is 80 lakhs. Turnover is 4.5 crore. Then we can call it as what ma? Micro. So small enterprise, medium not required here because here they're clearly given if you are making the payment to the micro enterprise or small. Don't discuss anything about the medium now. In your law, you can start. Investment in plant and machinery, yes, increased by the 10 times. Here also increased by the what mark? 10 times. So if you are forget these 10 times now, no one can do anything. Okay. Remember, so just one in place you can place the 10 and in the place of 5 you can replace with the 50. Now, what is a provision? It is difficult to understand, but with the example, we can learn the total provision again also, but try to listen this first provision. So, how many of you already know about the MSMED Act? 6. Okay. Just you know, then you can follow. That's all. If any person know, then I will see the person and I will explain the provision. If you are seeing the other cases, I will also get the demotivation. That's why I'm asking. If any sum payable by the SSC, tomorrow you can enjoy the session because non-resident trust CMA financial goals only. That's okay. Na? This is an interest course. You are given this as a choice. Okay, already that is a fresh choice. No. Any sum payable by SSC to micro or small enterprises. I am an SSC. Now I am making the payment to whom? Micro and small enterprise. You know what is a micro and small enterprise option? Then P and the time limits mentioned under section 15 of MSMED Act. Okay, B and the what ma? Section 15 of what ma? MSMED, not income tax. Section 15. What is the section 15 of the MSMED Act saying? Please check out ma. Who is the buyer in this case ma? I am a buyer. Who is the seller? Micro and small enterprise. Who is the buyer ma? I am a buyer. Seller is nothing but micro or small enterprise. I am purchasing the goods. I want to make the payment. So what section 15 says, if any written agreement between the buyer and seller is there, you have to clear that amount within how many days from the acceptance of goods? 45 days. If there is no written agreement, it is a law. Yes, no written agreement. Within how many days they are expecting that? 15 days. So revise again. So if any person is making the payment to the micro and the small enterprises, within how many days? I am going to charge. Okay, micro and small enterprises. Yes, which section we have ready for? Yes, sir. Which section we have to refer on that? Section 15. Section 15 of the Act is saying that C cable charger needed. Yes, no. Sir, if written agreement is there between the persons, yes, 45 days. If there is no written agreement, yes, how many days, ma? 15 days. Now, we can take example. Based on that example, we can conclude the provision. Listen carefully. Okay, 5 minutes, we can close it. We have 5% also chance, no problem. Mr. A purchased the goods from A and Co. It is a micro enterprise. On what date he purchased it? 1/3/2025. On 1/3/2025, he purchased the what goods with a worth of how much amount? 10,000. With a worth of how much amount he purchased it? 10,000. Now, already clearly they are saying that is an A company is a micro enterprise. Yes, listen carefully. Break over. Mr. A purchased the goods from A and Co. That is a micro enterprise. On what date, ma? 1/3/2025. 1/3/2025 means, can you tell me what is that year, ma? 24/25. You purchased the goods from them in 24/25 worth of 10,000. As per the written agreement, sir, if written agreement is there, you should reflect the total money within how many days, ma? 45 days. If no written agreement, 15. But now, sir, what is the payment date, sir? In the question clearly they are given, the payment has to be made by the SSE on 5/4/2025. Exactly in the next financial year, he made the payment. Remember, purchase happened in the which year, ma? 24/25. Payment happened in which year? Payment happened in which year, ma? 5/4. Sorry, payment has to be made by within the which year, ma? 25/26. Okay. Case 1, I want to take. Payment is done on which date, ma? 2/4/2025. Within the date or after the date, ma? Within the date. Required date is 5/4/2025. Is also paid within the date only. So that's why deduction is allowed in which year, ma? 24/25. Actually, payment done in which year, ma? 25/26. But within the date they are made in the payment. That's why in this year only that is allowed on what basis, sir? Accrual basis. If you are observing his payment is done in 25/26, but because that is reflected before the due date as per section 15, so that's why it is allowed on what basis, ma? Accrual basis. Next case, please check it out. Case 2. Yes, Mr. A paid this amount on what date, ma? 20th/4. It is also 25/26, but after the date, before the date, ma? After the date. Required date in that provision they mentioned 5/4/2025. You paid after the date, so that's why deduction is allowed on what date, ma? Payment basis. Only in the year 25/26. Simple equation. Section 15 saying that the date here as on what, ma? 5. If you paid within that date, that is allowed on what basis, ma? Accrual. If you paid on or after the date, that is allowed on what basis, ma? Payment basis. Shall we take an adjustment regarding this, ma? So in recent attempt also they are given the one adjustment for this question. Shall we start? So again I am saying, sir, in exam they will say definitely written agreement is there or no written agreement. We have to complete 45 days from the acceptance of the goods or 15 days. But in this question I am given the date. Please check whether the payment is made within the date or after the date. Within the date if they are made, that is allowed on what basis, ma? Accrual. That means goods purchased or service consumed here only. So if the payment is done after this date, that is allowed on what basis? Payment. Now, please open the workbook. Yes, I need to say the question now.
Okay, if you have idea, you can tell me. Yes, yes, please check it out. Anyone, if you got that adjustment, please let me know what is the page number also. Okay, we can open the last exam question paper now. Remember, yes, please check ma. Yes, the same question they are given. Akka, please be silent. Okay, not specifically for all. Anna also. Okay, please. So I want to take the more time only, but if you are discouraging, I will go and sleep. Okay. Remember, Devi Private Limited, it is a manufacturing the leather goods. Manufacturing company means we can take the additional depreciation. That point you have to remember in your mind while doing the problem. So what is that profit and loss account related net profit they mentioned? 43,45,000 after debiting and the crediting of the following item. The first one, raw material purchased from the, yes sir, WS and Co LLP 15 lakh on what date ma? 12th March 2024. 12th March 2024. Okay, e past exam question, don't think about it. Now, company is nothing but what ma? Micro enterprise as per that act also they are given clearly. Now, can you tell me? Here, no agreement is there. So, nothing but what ma? So, there is no agreement or valid reason for that what ma? Beyond payment. So, now, please mention what is that purchase date ma? 12th 3 2024. So some amount is paid on 20th March. Nothing but what ma? Within some days only. Next the balance is paid on what ma? So more than what ma? 45 years. So remember, what is that allowed amount? What is the disallowed amount ma? The allowed amount is what ma? 8 lakh and 7 lakh is what ma? Disallowed. Remember. So payment, okay, if you have calculated 15 days normally, there is no written agreement means we can calculate 15 days. Within 15 days you are paid, that's why it is allowed on what basis ma? Accrual basis. Accrual means nothing but what ma? In 24, 25, what is that amount is allowed ma? 8 lakh. So that balance, can you tell me how much ma? 7 lakh. It is allowed on what basis ma? Cash basis. You paid in that which year ma? 24, 25. So I think this is 23, 24. This is 23, 24. Simply ma. So Akka, please listen. 15 days they are given the time ma. Within 15 days you make this payment. That's why it is allowed in the year of on what basis ma? Accrual basis. Means what ma? Purchased year this one. In that year you can take 10. So this is the last year question paper. The previous year is applicable 23, 24. Okay. Now last year question paper. Now after the payment of after 15 days, what is the amount you paid ma? 7 lakh. It is allowed on what basis ma? Cash basis. In the year you are making the payment. What is the year ma? 24, 24. So that's why this is an allowed, do nothing. This is an disallowed. What we need to do ma? Next. So 43 CA you can refer ma. So maybe they can give you in the exam also. Directly you can refer. What is the provision ma? So 43 CA is nothing but SSC is using that as a what ma? Stock in trade. The SSC using that asset as a what ma? Stock in trade. Land, building, so both. It is an immovable property. He is using that as a stock in trade. Now, if you transfer that thing, if transferring is done for the less than stamp duty value, then we have to take the consideration as an what ma? Stamp duty value. Sir, actually I have a capability to sold at least at a stamp duty value. But you are selling less than the what ma? Stamp duty value. So, example I will take. Sir, 10 lakh property values. Stamp duty value is what? 10 lakh. You have to sell this to for 10 lakh. But no problem, sir. No problem. Just example I will change for easy convenience 11 lakh. But I am selling only for 10 lakhs, sir. No problem. I am allowing the what ma? 10% deviation. I am allowing the what ma? 10%. So if you are selling for less than the stamp duty value 10% also okay.
So, but you have to sell at least for stamp duty value or less than 10% of stamp duty value. Still, if you are selling for less amount, but I will take the consideration as a stamp duty value for calculating the what PCB. So, I will explain it. So, what is the PCBP format? Sale consideration minus cost I have to take. This is only the PCBP amount. Many ISCs are trying to show the less sale consideration. Now, they are not required to do. They are given the what stamp duty only as a sale consideration. So the same provision is applicable if the land or building are both being in capital asset. For the computation of capital gain also same provision is applicable while taking the sale consideration, not actual consideration, sir. You have to take the at least stamp duty value minus you can reduce the cost of acquisition. You will get the capital gain. So both the cases, immovable property only being in stock in trade 43 CA under PGBP head. If there is an immovable property capital asset under section 50C, that is the further what capital gain. Clear? Now. So remaining things you can read on your own, but I haven't doubt. What is the doubt? Sir, I have to compare the 110% of actual consideration with the stamp duty value. If that 110% of actual consideration is still less than the what stamp duty value, consideration I have to take it as a stamp duty value. So now I haven't doubt. Sir, I have to compare the actual consideration stamp duty value, but a stamp duty value as on the date of agreement is one figure is there, on the date of registration is different figure is there. Then how can I compare the actual consideration with the stamp duty value? Which date we have to take? Agreement date, registration date. Sir, the immovable property related registration always will be delayed for 2 or 3 months after agreement. So on that occasion, if there is any variation in the stamp duty value, which stamp duty value we have to take for comparing the actual consideration with the stamp duty value? Any idea? Date of agreement we have to take. Date of agreement to stamp duty value we have to take for comparing the what actual consideration with the SDV. Reason? If the following conditions are satisfied. What are the following conditions? First one, consideration paid or ready to pay. On that which data consideration ready to pay or paid? On the date of agreement. And how we can receive that consideration also by using electronic modes. If these conditions satisfied, date of agreement SDV we can compare. Otherwise, we can take what date of registration. Important. So by comparing that agreement date SDV, registration date SDV or the one and the same, no problem. If difference is there, which one we can take for comparing the actual consideration? The agreement date only if the following 3 conditions. So we need to receive the consideration. On what date you have to receive the consideration? Agreement. In which mode? Electronic modes. Now, directly we are moving to the other provisions. Listen carefully. 44A, maintenance of books of accounts. Maintenance of what? Books of accounts. In some exams, we have this provision. They are asking this provision also. Listen carefully. Okay. So, for maintenance of books of accounts, they are classifying the provision into the 2. Notified provision, non-notified provision. Provision into 2 types. So, example for notified provisions, you have CA, CMA, doctor, CS, interior designer, film artist, information technology professional, etc. These provisions are classified as a notified. Other than these, all are what non-notified. Now, what about the business SC? Business SC also categorized into second way only. That is a second category. Notified provision, non-notified, as well as business SCs. Now we can start the provision relating to notified provision. How the notified provision person will require to maintain the books of accounts under section 44A. Notified professional, that's why we have to check the gross receipt. If it exceeds 1,50,000 in all 3 years, they are required to maintain the books of accounts. So immediately preceding to the relevant previous year means it is 1 year, 2nd year, 3rd year. Immediately preceding to the relevant previous year in all the 3 years, if that gross receipts exceeds how much? 1,50,000, then we have to maintain the books of accounts for the current previous year. Are you clear? In all. Here you have to remember. So newly I set up these provisions are notified provision. So that's why newly set up provision, if there is a likely to exceed based on estimation, 1 month you achieve the 50,000. In 12 months, definitely you can achieve the 1,50,000. Only 1 year you can check. If they're likely to exceed 1,50,000 in case of newly set up provision, yes, you need to maintain the books. So what are the set of books of accounts we can maintain? If satisfied, you have to maintain the books of accounts. Maybe many students having the doubts are all the cash book, ledger, subsidiary book, journal, BRS, all the things required are not required. As per Income Tax Act 1961, clearly they are saying if above conditions are satisfied, we have to maintain the books of accounts under Rule 6F2. What are the books of accounts mentioned in the Rule 6F2? Cash book, journal, ledger. What is that? Cash book, journal, ledger, carbon copies of bills, original bills, some exceeding how much amount? 25. Carbon copies of bills, if the sum exceeding the bill value, if exceeding 25, we need to maintain. Now, remember, cash book, journal, ledger, carbon copies, original. Carbon copies are required if the bill value is more than. That in case of medical profession, please check the medical profession is notified or not. Yes. In case of medical profession, above books, along with it, we have to maintain the daily case register as well as what? Inventory register like drugs, injections related medicines, etc. We have to maintain the what? Inventories register as well as daily case register along with the above books. If not satisfied, many students are trying to write if not satisfied, no need to maintain the books. No. If not satisfied, we have to maintain the reasonable books. Reasonable books means nothing but ledger as well as cash. Not journal, ledger as well as what? Cash books. So why? Sir, if AO asking the books of account, if I am submitting these two books of accounts, so with the help of these two books, they can compute the what? SSC total income. That's why these books are called as what? Reasonable books. Now, please let me know for whom we discussed that the books of accounts maintenance notified profession in all the 3 years immediately preceding to the previous year. If it exceeds how much amount? 1,50,000. Notified profession newly set up year means nothing but likely to exceed 1,50,000. Please check. Satisfied prescribed books under Rule 6F2. Not satisfied reasonable books. No. Please maintain. Same thing you have to maintain. Non-notified professional business associates. So we have to classify that all the things first into individual or HF, then others we can check separately. Can you tell me? First of all, whom? Individual or HF. Example, I am doing the business as an individual. These points I need to check. I am doing business as a company. I have to check others. Remember, non-notified professional also individual or HF first point, others are required to check the second. Here, two criteria they are saying, any one criteria is satisfied also, we are required to maintain the books. First criteria is what? Income criteria. Second criteria is what? Please, income criteria and turnover criteria. So first, income criteria, please let me know. Existing business or profession preceding to the relevant previous year, please check 3 years. In any one of the year, if it exceeds the what? 2,50,000. So just 1 year exceeded also we have to maintain. These are rigorous provisions. Last one, in all the years exceed, I need to maintain. But in this, just 1 year, if exceeded your income more than 2,50,000, you are required to maintain. The newly set up, always the same thing, likely to exceed the above amount only 2,50,000. The turnover criteria, what is the existing business or profession, newly set up. Yes, turnover how much? 25 lakh. So how much amount we have to check? 25 lakh. Can you tell me how to check that? 3 years immediately preceding to the relevant previous year. In any 1 year exceeded also you have to maintain. So same points we can apply for the others also like company, partnership firm, etc. Existing business or profession also newly set up also. What is the term? What is the income we have to check? 1,20,000 in any 1 year. So the same thing. Turnover criteria, how much we have to check? 10 lakh in any 1 year. So remember the limits now. Here 1,50,000 in all the 3 years. But here in case of individual or HF, 2,50,000 and 25 lakh. 2,55,000, 25 lakh. But here 1,20,000 and 10. If satisfied, you have to maintain the which books? Reasonable books. So can you tell me what do you mean with the reasonable books? Ledger, cash book, not journal. Sir, if not satisfied, what we need to do? Not required. No need to maintain books. This classification you have to observe. Sir, notified professional at any cost they need to maintain the books of account. Even satisfied also, not satisfied also. Non-notified as well as a business assist, if satisfied reasonable books, otherwise no need to maintain. So again, it will be linked to the presumptive taxation provisions. Listen carefully. Notified professions will require to maintain the books of accounts, even though satisfied, not satisfied also we need to maintain. But non-notified professional as well as a business assist, if satisfied, maintain, otherwise not required. So can you tell me where we have to keep the books of accounts? Normally at an where we are carrying the business or profession only. If the business or profession is carrying at multiple places where we can maintain at a principal place of business, like that is in what head office. Now, How many years we can maintain the books of accounts? 6 years from the end of the relevant assessment year. Okay. But I want to maintain the 92D records as per international taxation provision. I think you know. Transfer pricing chapter is there. In that, if any SSE entered into the international transaction or specified domestic transaction, you have to maintain the records. That records needs to maintain for how many years? 8 years from the end of the relevant assessment year. But here, how many years? 6 years. Now, penalty for not maintaining the books of account 271 years, just 25,000 if you are paid, that's okay. Books of accounts related penalty, how much? If you are not maintained, 25,000. Now, sir, these provisions I will discuss after presumptive taxation provision. I will go to the presumptive taxation provision, then after I can come back and I will discuss, because I want to discuss the section numbers. That's why first we can close the presumptive taxation, then after we can discuss the, in special cases also we are required to maintain the books. Shall we start now? Yeah. Presumptive taxation provision. Today I will cover these 44 AD, ADA, AD. Tomorrow I will start the non-resident chapter. In the non-resident chapter, I will cover the non-resident related presumptive taxation provision. First, can you tell me presumptive taxation provisions for the resident we will discuss here. Non-resident we can discuss in non-resident provision. First, in order to understand, yes, from presumptive taxation entire point of view, I will take you one example. Listen carefully. So, one person is there, one partnership firm is there, F and Co. Resident partnership firm, turnover is 1.2 crore. They are doing the retail trade business. So, they are maintaining the books of account. Example, can you tell me books of accounts, that is on P&L account, net profit they got 20 lakh. So, finally, net profit only considered as an PCBP because these are all are allowable expenses only. So, that's why no need to do the any disallowances. The PCBP only will be same as what net profit. Now, what is the tax we can calculate? So there is no other income, that is only the total income. On that we can calculate 30% because that is a partnership form. On that, please pay the health and education cess. You are required to pay the 6.24 lakh. Now, we haven't one provision. Yes, 44 AD. If any SSE is involving in the presumptive taxation provision, okay, 1 minute. Yes, ma'am. Around the 7 we can close the session. Up to that sharp to 7 we can go on. After PCBP, I will enter into the assessment of various entities, companies related, some important workbook sums we can do. But listen carefully, only we have 1.5 hours. So, okay, maybe as of now you haven't one thing, sir, whether these are come in exam or not. Definitely after that exam writing or during that exam, you can realize what is the importance of this session. Okay. 2 days is every attempt 2 days is the most important days in my life. Every year, 4 days totally. One is an exam day, another one result day. Okay. Okay, you don't know how much curiosity I have to do the exam pattern. You don't know how much curiosity I have also, because I'm changing that entire new path. I can teach CA final, but I'm choosing that entire time for the CMA final. The reason I want to change the total curriculum. Now some faculties also change it to teach the exclusive CMA final first one. And I'm only taking the step, don't read the CA final content and CA inter content or CMA inter, that all the things are not rated. Stick to the CMA final. The first step I am only taken. So that's why every attempt, if they are given the bouncer, the first bouncer for me only, not for students. So it will not happen for like the last 6 or 7 years, 6 or 7 attempts also. Paper is come within our pattern only. Always it will come. Definitely. But I want to see. You don't know. First examination times we are in rural villages. I think BCCA is on the vacation in rural village. So we are traveling to see the question paper for 1 hour also. So if any person coming out of the exam, first I will check the question paper. They don't know faculty or not also, but I will take and I will check the question paper. And the last attempt onwards, just we are applying one person, fake candidate only, he applied. Just he will go and he will take the question paper within half an hour. So he is not at all trying to write it, but we are appointing one person for grabbing the question paper first only. So after half an hour, he wants to come out of exam. So even though if they are not given the question paper, I think within half an hour, if you are coming out of examination center, they will not give the question paper, no problem. He will remember that all the questions, he will tell, sir, these questions are came, these questions are came. So that much of curiosity. After that, result the day, and both the days at the night, definitely I will get a headache. So that because of many calls, mixed opinions, mixed means nothing but one student will be very happy because he is invested his time and he's got some success or whatever it may be. Some students always crying, sir, we are not successful, sir, we are trying to do that all the things. At the end, I will get a headache. No, remember on that time. So I want to receive a calls from all of your messages also in happy mode only. That's why please listen. Okay. So if you opted the presumptive taxation provision, no need to maintain the books of accounts, sir. Presumptive means estimation. Sir, no one can maintain the books of accounts perfectly, no problem. On your turnover, I'm presuming the 6% or 8% as an what ma income, not tax. On your turnover, 6% or 8% I'm presumed as an what ma income. So now 8% I'm taken ma. So what is that income? 9,60,000. So please calculate the tax on that 2,99,500. Based on presumptive provision, 9,60,000, sir. Based on the PCBP provisions, nothing but if you are maintained the books of account, your income is what, mark 20 lakh. Which one you will prefer? Presumptive you can prefer. So many students having the doubt, sir, this is easy, sir. Easy only. I will tell you the disadvantages also. Minimum they are expecting this as an income. Lower than that you can't declare. Higher than that, yes, sir. I am proud to become as a taxpayer, sir. I want to pay the tax on this 20 lakh. No one can argue with you. They will give that all the things are yes sir in proper manner. They will arrange the red carpet also for you. You can pay the tax on 20 lakh, no problem. But minimum you have to take this income. What is that? 9,60,000. Now I will tell you, SSC can opt the presumptive taxation provision here because it's surely lower than the books of account. If you are maintaining the books of account, what is that amount? 20 lakh. If you follow the presumptive taxation, what is that? 9,60,000. At least please declare this one. That's enough from the government. Now, please take the presumptive taxation provision 44 AD. So please look at the only 44 AD ma. Now, this is an applicable for the resident individual, HUF, partnership firm, other than what ma LLP. Other than what ma LLP. Remember, so at the time of registration of my institution also, so many persons are suggesting please register as a company. It will be more compliances. You can get more loans and all other things. From my side, I haven't tax planning that. I want to go with the presumptive taxation provision. That's why I'm selecting the registration in the form of home. LLP also we can go, but not an issue. But I'm going with the registered partnership form only because I want to opt the presumptive taxation provision in initial years. In future also. So from my side, I will not pay any tax also. Presumptive I will go, sir. Definitely, if it is more and more, I can pay. It is less than the basic exemption limit by opting the presumptive taxation provision. I will not pay. That's why I'm selecting this as a tax plan. Now remember. So now remember, resident individual HUF partnership firm other than LLP engaged in the business. Engaged in the business. First, I have a thought of LLP also. After this, I discontinued to go to the LLP also. Next, sir, you can't claim these two. Section 10AA, Chapter 6A reduction under the heading C. If you don't want to claim these two sections, and if you are resident partnership firm, individual HUF, then you can go with the 44 AD. Remember, any business other than which business ma? Goods transportation. In our example, what is the business ma? Retail trade related to medicine. That's why eligible only. But turnover should not exceed how much ma? 2 crore. So in this example also turnover how much ma? 1.2 crore. So now he is eligible to declare his income on presumptive basis. But towards the digitalization, they are given the 1 point ma. Total receipts in your business. Yes ma? Total receipts out of the 5% or less than 5% only you are receiving in the cash. That means what is the meaning ma? 5% example 100 rupees you are receiving. 5 or less than 5 you are receiving the cash. The remaining if you are receiving an online, so then your limit increased from the 2 crores to what ma? 3 crore. That means why they are given this provision? Digitalization encouragement only. 95% please do in the online. 5% that is negligible. You can take that amount in the form of what ma? Cash also. On that occasion, your limit to 2 crores to increase it to 3 crores. Now, 8% is applied if you are receiving the cash. If you are receiving that amount in the online, that is what ma? 6%. Combination is there, no? Yes, you can apportion the percentages in a combination only. Now, so section 30 to 38 deduction, again we can give what? No. Instead of that given the deductions only, we consider the 6% or 8% after considering the what ma? All the expenses. This is only your income. Separately, we can't give the what ma? Deduction. Chapter 6A deduction, yes, you can take separately because under the PCBP head, we can't give that again deduction. But chapter 6A deduction, you can take. In case of partnership form, 40B deduction can be given directly? No. Why? 40B means what? Interest on capital, remuneration to partners. Already considered in the 8 and 6%. Now, separately we can't give. Now, sir, presumptive income is there, but I have an other head related losses. Against the presumptive income, other heads can be set up. Yes, obviously. It is a way of disclosing the income. It is not a separate thing. We can set off against against the presumptive income any losses also except what ma? Salaries. Next, advanced tax. How many installments we can follow ma? Single installment. Remember, advanced tax 44 AD 44 ADA. How many installments ma? Single installment. Now, remember, I will tell you the logic. So many practical cases I saw, sir. Definitely, all the persons who are engaged in the business, if their turnover is less than 2 crores, in case of digitalization 3 crores, they want to declare the income based on presumptive taxation only, but they don't know exactly what is an impact in the future years. I will tell you first. So 44 AD subsection 1 saying that yes, you have to declare 8% or 6% of what turnover. Now, first year you are declaring by using the presumptive income provisions only. That means what ma? So if you are calculated the books of accounts, you got a 20 lakh. If you calculated presumptive income provisions based means nothing but you got 9.6 lakh in our example. Which one is better for you? 9.6 lakh. That's why you are declaring the what ma? Presumptive income. Next, 5 consecutive assessment years also. You need to follow the same. How many ma? Next 5 consecutive. So can you tell me next 5 means 1 or 2 or 3 or 4 or 5? You have to follow the same thing. Sir, I will follow, sir. Always the presumptive is best. If you are doing the business in a proper way, presumptive is best. Example, in the 3rd year, so books of accounts, I have a loss. But still you have to declare the profit on what ma? Turnover 6% or 8%. Now you can tell me it is a better or we can't say, depends upon these years only we can decide whether the presumptive taxation opting is best or not. Because in 3rd year, as per the books of accounts, I have a lot more. Still I need to declare the profit based on turnover 6% or 8%. That is not at all correct. No. So, no sir, I want to shift from the presumptive to what ma? Books of account. Can I do? Yes, you can, no problem. But I am given the one point, you have to follow it for how many years ma? 5 years. 5 consecutive assessment years. Yes ma, apart from the year. 5. Now you are shifting from this year to this year. Can I shift? Yes. But upon the chain breaking, you are breaking the big chain ma? Presumptive chain, and you are entering into the what ma? Books of account chain. Now, they are given that you are not eligible for the presumptive income for the next 5 consecutive assessment years. 1, 2, 3, 4, 5. For these 5 years, yes, you have to declare the income based on the what ma? Books of account. That is an actual income only. Punishment only. You have to continue. You are breaking in 1 year because you got an what ma? Loss in your books of account. Okay, you can shift. But I am disallowing. I am not given an option to follow the presumptive taxation for how many years ma? 5 consecutive assessment years. Now, here you have to show books of accounts. What ma? Audit also you have to go. If the income exceeds the basic exemption limit. Remember again, if your income exceeding the basic exemption limit, you are required to pay the tax. That's why please maintain the books of accounts. You have to show the proof. Yes, what is the proof? I will tell you. Yes, ma. First year 1 ma, you got an books of accounts related income. How much? Book year 1 ma, books of accounts related how much you have and presumptive. Books of accounts related how much ma? In our example, 20 lakh. Yes ma, 20 lakh. Next, this one ma, 9.6 lakh. Minimum you have to declare the what ma? Declared one. Yes ma, minimum you have to declare which one? 9.6. That's okay, happy. Second year also maybe this will only happen. 15 lakh and this one what ma? 8 lakh. Which one is a better ma? 8 lakh is a better. But year 3rd, 15 lakh, 8 lakh, this one is a better. Year 3, what happened? Actually, you have a loss here, or any case, 5 lakh ma. Okay. How much no? Here, loss only example, or anything, 5 lakh also. Both the things same ma. We can take any example also, both the things imagine. But here, presumptive income is 8 lakhs. Now, I want to declare which one ma? Obviously 5 lakh. You are saying, sir, you are expecting this 8 lakh income from my side, but I got only how much ma? 5 lakh. It is more than basic exemption limit? Yes. So that's why, sir, I'm earning just 5 lakh only, but minimum they are asking this amount, sir, every year. Every year minimum they are asking the which amount ma?
presumptive. I declare. But now I don't want to declare the presumptive income because I got a less than the what ma presumptive income as per my books of account. Then show the proofs. Books of accounts you can show. So you have to get that what ma audit report also when your income is exceeding the basic exemption limit. Minimum you have to declare the presumptive income. If you want to declare less than the presumptive income, you have to show the books of account and the tax audit also if the income exceeding the basic exemption. Now I will tell you one more point. Sir, can I declare the more than presumptive income? Red carpet only. Always they will welcome you. So next year 4, sir. Year 4, not year 4, year 20 we can take ma. Year 20 lakh here, 10 lakh here. Can I declare 20 lakh? Do I need to show any proof? They will not ask any proof because what is the reason? Minimum I am expecting the tax on 10 lakh only, but we want to declare the tax on 20 lakh. That's why they will always ask. Now I will tell you one point. SSE can declare the higher income than the presumptive income, yet his option only. SSE can claim the profits and gains of the business or profession lower than the presumptive income. Can he declare? Yes, in year 3, that is only we are done. But we need to maintain the what ma books of account and we need to show the tax audit report also only when the income exceeds the what ma basic exemption limit. Are you clear? No. Sir, next presumptive taxation provision I want to start. 44 AD for the business or profession ma business, any business other than goods transportation. But now 44 AE I want to start ma, it is also for business. Any business sir? Oh, if you claim you can't go for the 44 AD. So nothing but she is asking that sir, not claimed means what? If you want to claim these sections, then for you 44 AD is not available. Chapter 6A hiding C here. Income based chapter 6A deduction you can't. Okay, but other than that, any deductions like ETC or any other deductions we can do. Income based means I will tell you one section number 80IA. Example, you can take 100% of the profits as a deduction. So what is it? Okay, if you have taken 100% of the profits as a deduction, no need to pay any tax, no need to follow the presumptive taxation provisions also. That's why they are clearly given. If you are not following the chapter 6A deduction under the heading C, then you are eligible to take the provisions of 44A. Now 44AE, remember. So one business we are excluded here, any business other than goods transportation, now that is only 44A. If any SSE is owning not more than how many vehicles, then goods carriages at any time during the previous year. First day of the previous year, middle, any day also if you are verified, he is owner of the how many assets, just 10 only, more than 10, presumptive taxation provision is not applicable for. Now, so what is the business now? Goods transportation business. Now, remember how to calculate the income. Sir, in that 44 AE, they are placing a limit of turnover. In 44 AE, they are not placing any limit of turnovers, etc. Just they are placing the limit of vehicles 10. At any day of the previous year, if you are verifying also, he needs to become as an owner for how many assets? So, how many vehicles? Just 10. So, please calculate presumptive income. I will tell you. So, out of that, your vehicles, I want to classify as into the what heavy good, light good. How we can classify that into heavy good and light good? If more than 12 tons of vehicle capacity is there, that means gross vehicle weight, if 12 tons or more, 12 tons exceeding heavy good, otherwise what light good, other than heavy good. How many tons? 12 tons. Gross vehicle weight, totally if exceeding the 12 tons, that is a heavy good vehicle, other than heavy good vehicle. So here, how they are saying, 1000 per month, every month how much? 1000. So 1000 per month. Now, per ton, example, I have 15 tons, one vehicle, only one vehicle I have. So, what is that weight? 15 tons. How many months I use? 9 months only. Now, can you tell me? 1000 into 9 months into how many tons? 15 tons. Then you got an answer. Remember, tons information is needed while calculating the presumptive income of heavy good vehicle. Presumptive income of what? Heavy good vehicle. Remember, per month or part of the month per ton of a gross vehicle. So, number of vehicles, if you haven't anything also, you can multiply. Other than heavy good. How much? 7,500 per month or what? Part of the month. Students having the one confusion, sir. Heavy good you are given 1000, sir. Light good 7,500, sir. So, intentionally, many students are in the doubt, sir. Here, Heavy good means heavy income, sir. Light good, light income. Normally, but you have reversed the total things. No, sir. You are thinking only not correct. Here how many tons, ma? At least how many tons? 12 tons. Means per ton here, 1000 means I am given the value 12,000. Just per vehicle 7,500 only. And this information is required only in case of what, ma? Heavy good vehicle, not in case of light good. Remember, per ton, 1,000 rupees per month in case of heavy good. In case of other than heavy good, what is that? Other than what, ma? Heavy good, just 7,500 per month. This is for vehicle. If you have a multiple vehicle, you have to do this calculation multiple times. Totally you have to. Sir, again we can give the chapter 6A deductions. Sorry, expenses under 30 to 38. No. Chapter 6A, yes. 40B, deductible. Because this is we are giving that information based on vehicle capacities, not based on turnover. Previously, we are expressing on the turnover, so that's why these expenses also considered. But here we are not considered separately. We can give the deduction for remuneration to the partners, remuneration to the partners, or interest on capital to the partners as a deduction in case of what mark 44 AE if the SSE is a what mark partnership for. Now, so we can set up losses against the presumptive income. Yes, advance tax installments, how many ma? 4 installment. 44 AD, ADA only that one installment. 44 AE, how many installments ma? 4. Now, so same points here also we can. SSE can declare the more than presumptive income. Okay, but if you want to declare the less than presumptive income, he has to show the what ma? Books of accounts as well as tax audit if his income is more than basic exemption. With the same points applicable here also. Now last one, it is a very easy ma. Notified profession. Sir, I think you know what is a notified profession. Non-notified professionals cannot take the presumptive taxation provision. Notified professions only can take the 44 ADA. These two for the business ma. This is for the profession. Now, resident individual resident individual partnership firm other than LLP engaged in the notified profession. If the gross receipt is less than how much amount, less than or equal to 50 lakh, they are eligible. Digitalization point, they are increased to how much amount, 75 lakh. That means out of your gross receipt, 5% or less than 5% if you are receiving in cash, the remaining totally if you are receiving an online, then limit of 50 lakhs to how much amount they are increased, 75. So expenses deductible or not deductible? Not deductible. Chapter 6A reduction deductible, but 40B case expenses interest on capital, remuneration to partners is allowed or not allowed? Not allowed. Why? These are all the things are given on water. Rooted through the gross receipts or turnover. That's why already these expenses also considered here. That's why we are not giving the deduction. But in this case, we calculated the presumptive income based on vehicle weights, etc. So that's why separately we want to provide the 40B deductions. 40B related, how many deductions we can give? Only 2. Next, eligible only for set off of losses and presumptive taxation related. What is the 44A, DA related advance tax payments? Ma? 1 only. Now, most important points I want to convey. Yes, now you can understand these special points. Sir, 44A, maintenance of books of accounts, special cases. General cases we discussed already. So for notified provision separately, non-notified business assets, but now I want to understand the special provision. Remember. So please check it out this screen. There is an offer of 500 rupees for you if you are saying the logic. 500. Spot, UPI only, no cash. Okay, if I posted the YouTube video, this is posted on YouTube, now many persons will ask that 500 also. No problem. So special cases related, how many presumptive taxation provisions are there, ma? 44A D, 44A DA, last one is what, ma? 44A E. Am I correct, ma? Okay. For these 3 provisions, you know already, at least we have to declare the income as a presumptive income. If you want to declare more, that's okay. If you want to declare less than this, we have to show the books of accounts. We have to show the what, tax audit report. If the income exceeds it, basic exemption, no. That means in every provision we touch it that what, books of accounts maintenance. If you are declaring the less than the presumptive income, no. 44 AD or 4 or 5 means what, if you are breaking the chain of the presumptive to the normal. If you are breaking the chain from the what, presumptive to the normal, yes, this is 44 AD subsection 4 or 5. Now you have to maintain the books of accounts and the tax audit. If the income exceeded the what, basic exemption, that means I need to add this point to the books of accounts maintenance. Can I add? Already added. What is that? Provisions of 44 AD subsection 4 5 applicable in its case
or his income is exceeded the what ma basic exemption limit. That means this point covered. Am I correct ma? Please see it. Showing that income as compared to lower than the 44A. This is also covered. That means if you are declaring the presumptive income lower than the 44AE, you have to maintain. Then what about this point? Why they are not included in the special cases? Any reason? This is only the question for 500. That's why you are seeing under. No, you missed the Roberts. So I'm asking, sir, in all the provisions, I said that, sir, if you are declaring the less than the presumptive income, you have to maintain the books. You have to show the tax audit report. And if the income is more than basic exemption. So I written in these special cases the two section 44 AD, AE, but I am not written the 44 ADA. What is the reason? Sorry? No, that is not a reason. So only one by one. Yes, that is correct. Already I stressed that on that occasion 44AA, it is linked with the presumptive taxation. I given a hint also. 44AA provision notified the related, yet any cost they are maintained the books of account. If satisfied these books, if not satisfied reasonable books, why I need to write again the 44ADA professional person related point? So here I am written these things for 44ADA. Why I am not at all written? Because anyhow they are covered under 44A. Satisfied, rule 6 of the books. Not satisfied, reasonable books. After class you can come with you can ask that details and payment also. Okay, shall we continue? Reason, have you understood the first of all? Now, tax audit. Yes, we are in a climax. So before going to the problems, listen carefully. 44A, tax audit. The tax audit is nothing but given under section 44A, business SCs, professional SCs. Business SCs can go for the tax audit if the turnover, gross receipts and all the things, if exceeded during the previous year 1 crore. Remember, for books of accounts maintenance, for this year if you want to books of accounts, for this year if you want to maintain the books of account, last 3 years data you verify. But for tax audit, present year gross receipts only you want to check now. Are you clear? Because year end closed at that, then we can know about what is the turnover of this year, then we can decide whether tax audit is needed or not. Books of accounts maintenance related, we have to check the last 3 years data. But for knowing about the tax audit applicability, present year turnover or gross receipts we can check. Now, there is a relaxation towards the digitalization. Here we have to check the cash receipts as well as cash payments. If that is less than or equal to 5% of total receipts or payments, then turnover 1 crore can be increased to what? 10 crore. So choose relaxation for the who are doing their total business in a digitalized. Tax audit fees also definitely, yes, various range of fees will be there starting from 25,000, 1 lakh, 10 lakh also they can charge. But now if you are maintaining all the things in electronic way, less than 10 lakh if your turnover is there, no need to go for tax. Now, sir, can you tell me what is this point 4485 or 4484? Chain breaking S. From presumptive to you are going for what normal. You have to maintain the books of accounts and you have to go for the tax audit also. That's why I am written here. 44AD is applicable for business SCs or profession? Business. That's why I am covering under the business one. Next, 44AE, business only. If they are declaring the income less than the presumptive provision, they are also required to maintain books of account. The books of accounts also needs to go for what? Tax audit. Now, remember profession. Profession related, there is no digitalization point. Students are applying for the profession also. No. 50 lakh cross now, go for tax audit. There is no relaxation for you like increase it to 10 crore, etc. But profession related on presumptive taxation is there. If you are declaring the less than the presumptive income, then you are required to go for the tax audit. Are you clear? Now, tax audit report exactly due date 1 month before. Tax audit form number 3CA, 3CB, 3CD. Which one is the more famous? 3CD. Remember, if you are not conducting the tax audit in a proper manner, or if you are not submitted the tax audit, then what is the penalty? Remember, 0.5%. Sir, if I am saying half percentage, they are taking the 50%. That is not correct. 0.5% of turnover or gross receipt or 1,50,000, whichever is lower. Now, if any person is not listening the class of tax audit, now you can realize and you have to do the lot of research related to workbook. They are covering the 44AB provision in 2 questions. Shall we start the 44AB practical question given in our workbook? ICMA workbook, they are given the tax audit cases. Now, you can check the question number 1. They are given the some details whether the tax audit is applicable or not, they are given. So, business related 48 lakh, profession related 46 lakhs they are given. Tax audit applicable or not? No. turnover of the business we have to check 1 crore, gross receipts of a business 50 lakh, so not applicable. Now business is nothing but what ma 98 lakh, provision is nothing but 52 lakh, because the provision exceeds the what ma 50 lakh, tax audit is unapplicable. Now next case, business 1.8 crores, they are going with the 44 AD. 44 AD can be opted by the SSEs who having the turnover less than how much ma 2 crore. Digitalization point 3 crore. Now, can you tell me they are going for the tax audit? Sorry, they are going for the presumptive taxation. Now, audit is not applicable. Minimum you have to declare as per the presumptive taxation provision. I declared that one only, no problem. No need to go for the tax audit, etc. Are you clear? No. Next question. Question number 15, tax audit. Same. So here the company is doing the business in two divisions. One is an FMCG, another one is what? Industrial machinery. So now, sales in cash, sales in a banking channel. So total sales, please count ma. Total sales. Please calculate the total sales. FMCG also or cash sales also, anything also, please count the total sales. How much ma? 740. Aggregate receipts is 740. Please calculate aggregate payments ma. We have to check aggregate, not individual product wise. Total in our business, we have a two divisions or two products. We have to check the aggregate, not individually. Total payments ma? How much? 645. Out of the cash component, please check. Yes, out of the cash component is 80 here. And next, cash component is nothing but how much is there with respect to the purchases ma? 50. Now, please take the percentage of cash. Yes ma? Percentage of cash. Yes ma? All 80 divided by 740 and 15 divided by 645. Percentage if you calculate it, yes, can you tell me how much you will get ma? 10.81. Here what ma? Both the things, cash receipts and the cash payments also less than 5% is there, then we can go for the higher limit. Here, one thing is less than 5 only, but another thing is what ma? More than 5. So that's why increase the limit of 10 crore is available or not available? Not available. Remember, I think they are middle. Yes, increase the 10 crores is not available. Now we have to check the tax audit applicability. Combined turnover we have to check. Combined turnover how much ma? 740. So that's why it is more than 1 crore. So that's why tax audit applicable. This is an important point. Tax audit is applicable for the entire SSE, not for each line of business. You have an FMCG one line and another one is what ma? Industrial machinery. For these two things separately we will not check. For entire SSE only we can check. Now, penalty under section 271B ma. Yes, can you tell me what is that? 0.5% of turnover, 1,50,000, whichever is lower. What is that ma? Maximum 1,50,000. If you are not conducted the tax audit in a proper manner, the 0.5% of turnover or gross receipts, sorry, 0.5% of turnover or gross receipts are 1,50,000, whichever is lower. Clear? Now, so these are the two questions they are given now. So now, just I need a 2 minutes break now. Please try to cover the, yes, please try to cover the, if you have these things, composite activity. So this is not in our CMA final syllabus also, but this should be known. What is that? Purely your agricultural income in your CMA inter direct taxation syllabus. So nothing but, yes ma, composite activity means agricultural activities we are doing as well as manufacturing activities also. How to apportion the profit into two things. One is an agricultural income as well as business income. This percentages, tea, coffee, rubber. So these percentages you can record. And next, so aggregation method. If any person having the only agricultural income, he can take the exemption total. If any person having the agricultural income, non-agricultural income, tax on non-agricultural income required to calculate by using the what? Integration or aggregation method. How to calculate the tax by using the aggregation method also you have to learn. But now, important MCQ ma, this one please listen carefully. Sir, this is I don't want to teach these things, sir, because you know in intermediate level, because it is a mandatory chapter, everyone knows this chapter very well. So there is no amendments also. Just remember the percentages properly. Example. So I want to grow the tea tree, bushes, etc. After that, I want to extract the tea leaves. I want to do some processing also. So like powdering and packing, etc. Final income is called as composite income. In that, A was saying that is a business income only, but SC will say that agricultural income. So no need to argue that. Already income tax rules clearly clarifying that if any tea business is grown and manufactured by the salary say, what is the percentage? Business income is 40%, agricultural income is 60%. Remember, You can remember 60-40, which is 60, which is 40, you can forget, definitely. Remember, highest percentage is representing always what ma? Agricultural income. Now, last point I want to discuss in this, remember. Yes, these 2 points you can refer now, ma. I will tell you an explanation within 1 minute. Yes, please refer these 2 points. Last second MCQs also. Next one. Please look at. Remember, partnership firm who are investors, ma, partners. So now, partnership firm engaged in the agricultural activities. Out of that, we can take share of profit, remuneration, interest, and capital. So, for these are all the things can be treated as income to whom partners. This income is treated always what agricultural income. No need to pay any tax because you only doing that agricultural activities by way of establishing one partnership firm. So you can take a decisions directly in that partnership form as a partner. That's why that ultimately whatever the generated income is agricultural income only. But it is not possible in case of company. Yes, you are invested in case of company. Company is engaged in the agricultural activity. Now company is giving the dividend out of that agricultural activity only. Okay. Company is giving the dividend out of agricultural activity only. But that is always taxable under IFRS because you are just a shareholder, not a decision maker. So whether they are engaged in the agricultural activity or they want to shift from agriculture to any other business also, ultimately who can decide? Board of directors will decide. So that's why investment, that is doctrine of indoor management concept is there. No? So that's why we can't know what happens in the company also. But by using the annual reports, performance measures, of receiving the dividend only, we can know about the company performance. So remember what is the concept? So many times they are asking these MCQ. Many students are writing both the things are agricultural income, not in case of company. In case of company, that is always anyway. Remember, if you are receiving the dividend, always it is taxable under IFOS only. Clear? Now, I want to take the one problem from workbook directly. So one complete problem I want to solve. Please try to cooperate. Yes, even though if it is time taking also, no problem. Just I want to solve this question number 16. Sir, why you are taking this 16th question? Because it is a combination of the total questions. If we are doing this question, many adjustments already you know in this question. That's why I want to solve. But on paper, that means totally values also how to open these are all the things we can discuss in detailed manner. Even though if it is time taking also work only, listen carefully. Shall we start now? So just so second question always we are getting from the PCBP or assessment of various entities. This point you know already. But how to approach that problem? Okay, I will suggest always do that problem in the middle of the exam or last only, but don't start directly. But exact answer, if you know all the adjustment you know, you can start no problem. Luckily, you refer this problem. If you got this problem, that's enough. Now, Stivam Limited is a manufacturing company, manufacturing of leather products. So that means you can understand. Same problems are given the repeatedly. Last exam question also we refer that is manufacturing the leather products. Okay, now remember. In the state of Karnataka, as per the statement of profit and loss account, they show that how much amount ma 1.2 crore after debiting and crediting of the how many items ma following items. Yes ma following items. Next. So what are the items we debited? Remember first one. So we have to start this problem directly with the net profit. So what are the columns we have to open? I will tell you. Okay. Sir, always, what is the requirement of the question? Please check it out. They are asking tax liability. Please give the heading as a computation of, I think they are given that asking the what now? Tax liability. Please give the heading as a tax liability on the top of the page after reading the question number. Please write it down. Computation of tax liability of so and so company for that so and so assessment year. Please write. Then after you have to open the column particulars. Then after you can maintain the inner column amount and one more outer column you can maintain it as an amount. So you know they are asking the tax liability, but after reading the plain reading of the question, you can get an idea about what are the heads of income we have. Definitely there will be a PCBP head. Before the PCBP head, maybe you have a chance to take the what mark. So that means salaries, nothing will be there. Company that's why no way to consider the salary. Maybe house property income is there or not. Please verify. So then after directly PCBP. So for solving the PCBP, you know what is the net profit? We have to take it as a base. So net profit means nothing but already they are given in the question. Can you tell me what is the net profit they are given? Ma? 1 crore 20 lakh. They are given that amount in crores. Ma? So that's why please take that amount in outer or inner also, no problem. 1 crore how much? Ma? 20 lakh. For this, you know already we have to do some adjustment like add. So give whatever the lines you want to give it as a space. Nothing will issue. After that end, you can take the what? Ma? Less items. Okay. So some items we can add, some items we can less, no problem. You can give whatever the amount you want as a space. The space is over, sir. After less items, again you can start it as an add. Nothing will happen. Now, so we can read one by one adjustments. There is a most repeated adjustment they will give you. Opening stock and the closing stock is an overvalued as well as undervalued. Now, please take this example. Yes. Closing stock and opening stock. Opening stock overvalued by how much amount? Ma? 10%. Overvaluation is there. Now, closing stock is done what? Ma? Undervaluation. Okay, example. Because of opening stock overvaluation, what happened to the net profit? Ma? Huh? Reduced. So that's why if we want to remove that impact, what we need to do? Remember, sir, normally opening stock is given as a 55, but that is an overvalued figure or normal figure overvalued. But we want to take only how much? 100% only, but it is a what? 110%. 55 lakh is nothing but how much percentage? 110. But what is the percentage we have to represent? Wait. Yes, please tell me. It is a 110%. But what is that amount exactly we have to take? 50 lakh. So that means what we have to do as an add? Now, many students are thinking that, sir, opening stock adjustment, yes, we verified and we know the reason, sir. Closing stock we can do reverse, sir. Like this is an added. Now, closing stock we want to do what? Lesser. That is only the mistake. No, please assume. Okay. What is that? 54 lakh is representing what is the percentage? 90%. Now we have to replace with the 100. Because of the, yes, closing stock undervaluation, what happened to the net profit? Reduced. Now we have to do what? Many students are doing the reverse adjustment. No need to do. So remember, every time we have to take whether it is an overvaluation or undervaluation because of net profit impact to reverse. So here, can you tell me what is the reverse amount we have to do? 54 lakh is 90%, means 100% is how much? 60. That means what is the amount we have to add? 6 lakh. I think in your answer, you got the same thing, that is an added the 5 lakh as well as what? 6 lakh. Are you clear? Now, next points we can go directly. This is an important point and repeated last exam question only. So, Shivam Limited paid the 10 lakh. Shivam Limited paid the how much amount? 10 lakh. In foreign currency as sales commission during the year without deducting the tax source to the John, who is a citizen of USA or non-resident for procuring orders outside India. So TDS is not deducted, so that's why shall we disallow 100%? No, why? Huh? Remember, he is an agent, citizen of USA. He is a non-resident. He is procuring orders from outside India. That means he is doing that all things outside India. That is nothing but foreign income to him. That is not taxable in India. So that's why we are not deducting the TDS. Remember this point. Many students are disallowing the what? Total 10 lakh. Not correct because If that is taxable in India, we can deduct the TDS, but this amount is not taxable in India, so that's why no need to deduct the TDS. The same adjustment we have in our book also, like SC net filter. Okay, not required. No, this is already discussed. 48 subsection 3, disallowance will apply or not apply? Not apply. At the time of retirement, we can pay the payment. How much amount? 50,000. Now, next one. I will tell you the overall point of view. Just listen. So, profit 3,50,000 we got. Why? Sale of ABC Limited listed company shares. The profit credited to P&L account. That is correct, no. Why? It needs to be taxed under capital. That means one more head of income is attracted. Now you have to open one more point as a capital. But here we have to disallow how much amount? 3,50,000. We have to disallow. That means less. How much? 3,50,000. But in capital gain head, you have to calculate capital gain as per the capital gain chapter. So, roughly they got 3,50,000 profit, they credited the account, but you have to calculate the capital gain amount. So remember, here we have to apply full sale consideration, cost of acquisition. So here the cost of acquisition related listed equity shares sales. So that's why now you have to apply the actual consideration. I will tell you. So A, B, sir. In B, 2 points I will take, sir. What is the 2 points? Fair market value. Yes, fair market value on 31st 1/2018 or sale consideration. Sale consideration. Now, whichever is what lower, and that should be compared with what cost. Now, whichever is what higher. So this is nothing but if you purchase any listed equity shares before this date and transferred after this date, actual cost we have to compute like this only. Can you tell me cost? Yes, 1,50,000, sir. If you compute it, fair market value if you are computed, yes, that is a 3,50,000. Sale consideration is 5 lakh. Can you tell me lower of these two things, 3.5 lakh. Higher of these two things, 3.5 lakh. Sorry. 3.5 lakh. Finally, what is the capital gain amount we got? 1,50,000. Cost, finally we have to reduce the 3,50,000. Ultimately, capital gain will be 1,50,000. Sir, it is a case applicable only to the listed equity shares purchased before 31st 1/2018, transferred on or after 31st 1/2018. Then we have to take the cost as this only. Long-term listed equity shares. So just this point you can remember, not much important also, but remember. So remember they purchased. Can you tell me when before this date? Before what date? 31st 1/2018. Sold on which date? After this 31st 1/2018. Now they are given the huge relaxation. You can take the cost up to the sale value. They are given the relaxation. Why they are given this computation format? We can match the cost as and what sale consideration. So but here we can take the what 3,50,000. That's not an issue. But long-term capital gain under which section 112A we got in 1,50,000. Now next point also we can take short-term capital gain we got on that is depreciable asset, not depreciable not depreciable asset. So what is the amount 75? This is also credited in the P&L account only. Now we have to reduce it from the what P&L account, but we have to charge this separately as a what capital. We have to reduce it the P&L account, sorry PCBP, and we have to add it to the capital. Now next adjustment. Important profit 6 lakhs on sale of plot to the MSP, domestic company. Entire shares which were held by the what company. The plot are acquired by the what zero. So nothing but we are transferring the one plot of land. Is it capital asset or not? So what is the profit already recorded 6 lakh. Now we have to remove the effect of what 6 lakh here because it is not taxed under the PCBP. Now remember, if you are transferring any capital asset to the your wholly owned subsidiary or wholly owned holding company, if the recipient company is nothing but an Indian company, that is not treated as transfer, no need to calculate capital gain. That is capital asset only, but that is not treated as transfer. That's why capital gain no need to calculate. So, but unfortunately, what is the amount credited to the P&L account? We are reducing, that is a 6 lakh. But remember here, what is the profit on sale of vacant land? That is a capital asset. The same point, So in capital gain handed notes, you got the content transfer excludes. Holding hold the subsidiary company, transfer to that other opposite company. The recipient company is an Indian company. So that is not treated as transfer. No need to calculate capital gain. Now next point. Remember, credits to the statement of profit and loss account of 50,000 dividend from the domestic company. Now, please check, please tell me. So we have to remove the dividend because it is taxable under IFOS. Now we have to open the one more head of income from other sources. What is it, 50,000. Next, one by one points we have to discuss. Now, inauguration point, already you know, it is a revenue expenditure only. Already it is allowed. No need to do anything. Now, next one. Remember, 20,000 paid penalty to the government for company failure in performance of a contract. Contract related penalties are allowed or not allowed? Allowed. So how much penalty? Nothing but 4 days into 5,000. That is a 20,000. That's why that is allowed. No need to do anything because it is already debited. No. So voluntary retirement compensation, they are paid the 5 lakh. Directly they are taken the 5 lakh as a debit. That is correct? No. Only 1/5. Now 1 lakh is allowed. Remaining 4 lakh we have to do what? Disallow. This 4 lakh needs to be allowed in the next 4 years. That's why how much amount we have to disallow? 4 lakh. So you can verify definitely in add items we can get the what? 4 lakh. So payment to the what? Failure to perform contract. So nothing but new branch opening related. Even though that is not added also, please put that point and mark it as a nil. Otherwise they will not allocate the marks. You have to reason now you can write in a note point. You can write in a note point. But remember that point you have to write and you can put it as a nil. So many students are ignoring this nil point on whatever the amounts are there, they are adding, they are reducing, but that is not correct. Even though there is no need to add also, write it down and place it as a nil. An explanation you can write it as a note point separately. Now, so next one, interest is nothing but a remittance to that what non-resident. So can you tell me, made payment outside India without TDS. Now we can tell me how much amount of deduction now. So disallowance 100%. 75,000 we can disallow because we are making that interest payment to the non-resident without deducting the tax. Now, this is an important point. Maybe you can't understood properly. Listen carefully. Market to market losses is allowed or disallowed? Market to market means nothing but I will tell you. Now I purchased the one share. In the year ending, it is an I'm not selling, but if I'm calculating the expected loss, I got a loss only. Now 100 rupees in the year end, that is 60 rupees only. If I'm selling today, how much loss I will get? 40. That is only the market to market losses. As per ICDS 1, it is allowed if it is given specified by the other ICDS. What is that now? I will tell you this 12th point. Clear note point is there. Past exam also remember. Mark to market loss, any other expected loss. In computance with the ICDS, it will be allowed as deduction under this section 36.1 only. 36.1 subclauses many are there, but ignore. It is allowed only if computed as the ICDS. But ICDS is saying that what mark to market losses cannot be recognized unless it is recognized of loss in accordance with the provisions of any other ICDS. If any other ICDS is saying that, then we can give the what allowance. Otherwise, it is always digital. But only ICDS 1 saying that okay, hello, but we have to take the support from the what other ICDS, but other ICDS are not talking anything about the mark to market losses. So that's why mark to market losses are always what dissolved. You can remember entire also mark to market losses is dissolved. But theoretically, if you are verifying the provisions, 36.1 saying that if ICDS is saying yes, it is allowed. ICDS 1 also saying allowed only, but you have to take the support of computation from the what other ICDS. Other ICDS is nothing talking about the what mark to market losses. That's why. So ICDS 10 is talking about the provisions, losses, and contingencies, but not talking about the what mark to market losses. That's right. It is an always disallow. Mark to market losses, if they are given as a debit also, we have to disallow how much amount? 6. So now, next one. Sir, can you tell me contribution given to the scientific laboratory? That is what section 35 allowed or disallowed? Normally, how much amount if you are doing the contribution to others as a scientific research, how much amount you can take it as a deduction? 100%. But now 0. What is the reason? SSC is following the 115 BAB. Now there is no deduction. That simple points only will give the differentiation. Last also they are given that company is following that what 115 BAB. Remember, sir, as per books of accounts, this is a depreciation. That's why we have to do what add. As per income tax provision, this is a depreciation we have to reduce. Now you have to calculate the depreciation separately for this asset because other than a point, some more asset they are given. Please calculate the depreciation for the patents, ma. Patents only, na. Sorry, machinery. Machinery 20 lakh you purchased, ma. But on what date, ma? 15/11/2024. Can you tell me put to is more than 180 days or less than 180 days? Huh? Less than 180 days. That's why we have to calculate 50% only as a depreciation. That means 20% only. Can we calculate additional depreciation because it is a manufacturing of leather? No, because section 115 BAB company not eligible for additional depreciation. Are you clear? So exactly this depreciation, for this we have to add that what, 20 lakh into 20%. Yes, how much? Plant and machinery 15%. That's why 7.5%. Half rate, 7.5. Now I think this is only the depreciation. Okay, next few more points, we can check it out quickly. This is an important. Remember, it is an 80JJAA. Appointment of additional employees. This section is available in all receipts. In chapter 6A reductions, only few sections are available under both the receipts. This is one of the sections. Additional employees means I will tell you. Last year 100 is there now 120. Can you tell me additional employees means how many, 20. For the 20 members, whatever the employee cost you are incurred, out of that you will get 30% as a deduction. But remember, this deduction is available for the tax audit SSCs only. Now they are given, I think, tax audit is also done before the due date. Now, I will tell you, 56 additional employees are there. They are given clearly 56 additional employees. Additional employees will exclude. Remember, all the members are participated in the recognized provident fund. Otherwise, that will be excluded from the additional employees. 56 are there. 56 also participated in the recognized provident fund. That's okay. Otherwise, 10 or not under the recognized provident means 10 we have to exclude here itself. No. Other one. 39 out of 56 joined on the first day of the first 6/2024, 15,000 per month. 39 joined in a June for that 15,000 salary. Next, 14 members are joined on the 1/7/2024, 45,700. One twist is there, no? If additional employees related salary per month, if the salary is more than 25,000, they are not considered as additional employees. So how much salary here they are drawing, 45,700. How many members, 14. They are not considered as additional employees. That is not eligible for deduction. Now, one more thing. 3 joined on what date, 1/11. Remember, generally, additional employee means he needs to work in the company during the previous year at least 240 days. Then only we can consider as an additional employee. But here, 1/11 they joined, but this is an exception case. Leather, garments, apparel related. 150 days is working also sufficient. In the case, 150 days point needs to be applied. So that is only I am taken. If it is simple problem, you can do. So remember, here additional employees related, you can check the provision. You will get the total provision in summarized way in the handwritten notes. Remember, some persons are excluded who are not participating in recognized provident fund, whose salary more than 25,000, and next one who is working for the less than 240 days, and in exceptional cases 150 days. Now can you tell me how many additional employees as per our computation, 39 out of, yes, 39 out of, yes, they are given the total computation also. Number of additional employees are what, 14 we have to remove. What is the reason? More than salary, how much, Yes, this 14 we are removing because they are not an additional employees. So out of that 56 minus 14, how many members, 42. Remember, 42 is there. Out of that, I will remove the 9 again. Reason, if you are paying in the form of cash, salaries for the 9 employees who joined in this, yes, given in the form of what, cash. So that is also not eligible for deduction. So nothing but here 39 is there. Out of the 39, 9 members salary I am given in the form of what, cash. So that means 39 minus what, 30. Sorry, 39 minus 9. So on the 1/6/2024, 39 joined. But 9 persons are receiving the salary in the form of what, cash. That's why that is not eligible. What is the number of months, 10 months, 30 members, 15,000 they are taking. Can you tell me the amount totally, ma? This amount, please tell me. Next month, 3 employees will be there. They are taking the salary 22,000. Because can you tell me why we are taking the only 3 employees, ma? Why we are taking the only 3 employees here? They joined only 3 employees. But these persons are already deleted because what, ma, they are taking the more than 25,000, sir. Again, I am repeating this question. Listen carefully. This point only. How many additional employees, ma? 56. Out of the 56, I have to remove the what, ma? This 14. How many is there, ma? 42. How many is there? 42. Out of the 42, if you are observing, 39 joined on what, ma? 1/6/2024. And the remaining 3 joined on what, ma? 1/11/2024. Out of 39 also, 9 are receiving the salary on in cash. So that's why please remove this 9 and whatever the salary paid to them, that is only available as a deduction. Out of that, what is the salary? What is the percentage we can take, ma? 30%. So out of that, if you are taking 30%, it will be 1 lakh. So 14 lakh, 49,000, 49,000. But here I have to observe one thing. 9 employees receiving that amount in the form of what, ma? Salary in the form of cash. No. Please calculate the 9 persons for how many months, ma? So like 6 means nothing but how many months, ma? 10 months, sir. So June, July, August, September, October, November, December, January, February, March. 10 months. What is the salary, ma? 15,000. Please calculate. Ma, total? Huh? 13 lakh? 50? Okay. Remember that you have to dissolve. They will not say directly. Cash payment made to a person in a day, if it is an exceeding how much, ma? 10,000. Because of the payment of salary date, every person is receiving how much, ma? 15,000. So that's why entire amount needs to be dissolved. Even though you are doing that entire problem, you will try to, you will definitely forget this point. You are doing the total sum. But what is the point? Based on these additional employee cost, yes, they are paying the salary in the form of cash. So that amount is more than 15,000. So that's why you have to dissolve. So you can calculate the total income and you can calculate the tax liability also. And so many of the students are in the sir, if I am getting the total answer, then only you will get the marks. No. For every adjustment, they will allocate half or 1 mark or 1/4 also. But you have to write the reason. At the end of the every question, you have to write the reason. So for the end of the every adjustment, what is the purpose of this addition? What is the purpose of this reduction also? Everything you have to mention as a note. And how many heads of income is there in this question? How we can know? If we read the question, then only we can know. So first, in P&L credit side, they are included some capital gain items. They are excluded the what? Sorry, they are included some income from other sources also. So that's why I am opening the 3 heads of income: PGBP, capital gain, income from other sources. In additional information only, we have an information regarding that what one. So AD double J double. Now this point also we discussed, ma. National Defence Fund related 35 CCA. It will be available under both the regimes. Now you can take this amount also as a deduction. Are you clear with this, Martha? No. So I want to give you some questions. If you try just try, means nothing but it only. The problems I want to give it to you, pure PCBP problems. I'm not combining the PCBP and math problems. Now I want to give you the pure PCBP problems only. So that I will give you from my workbook. Remember, I will give it to you from our workbook. Try to do these problems on your own today only. Yes, try to do the problems in today's session after break only. Question number 18. Question number 18. And question number 19. 18, 19, 20, 21. Enough. These 4 are any one of these 2 also. But if you are discussing, if you are solving these 4 questions, many of the adjustment already we discussed in question number. Yes, ma'am. From our workbook we discussed. 18, 19, 20, 21. But one adjustment I want to tell you directly now only. Listen, we haven't time. So that otherwise I will receive the WhatsApp messages even after I am sleeping also. So now I want to tell you what is the exam.
maybe you cannot ask after posting in the YouTube. Definitely, many students are asking the one regular doubt. I will tell you. So I think that is a question number 19, not 19, 18. This one, 18. 17. Remember, ma? So one thing I want to tell you. Seventh point, ma. It incurred 25 lakhs towards the feasibility study for new product manufacture, which is eventually aborted. So what is the question, ma? So they are given the P&L account and net profit also they are given 15 lakh after debiting and crediting of the following items. So these are all the things are very easy. You can do on your own, but you can stuck at a seventh point, ma. Feasibility study is conducted like research also or anything also for existing line of business or new, ma? New. Example, sir, I think in our notes I given this point. Feasibility study, any expenditure income. So one case law is there, Priya Village Road Source. I think that is only the PVR. Okay, listen carefully. Here feasibility study were conducted for existing line of businesses. Example, so they haven't got more movie theaters for experiencing the better quality of sound or visibility. They are doing the research activities. That's why that is only they are conducting for that existing line or new line, ma? Existing line. So that's why even though that is an abandoned also, without creating any new asset, so that is expenditure is treated as revenue expenditure as per the Priya Village Road Shows case law. Many students are showing this case law to me and they are asking, sir, it is allowed, sir. Yeah, but in our question, please check, ma. In our question, it is conducted for which line, ma? New line. They are in the movie theater and they are researching is done on the what, ma? Any other cars. So car manufacturing, etc. That is conducted on what, ma? New product. So now that is eventually aborted or successful, ma? Aborted. Now what we need to do? So I already clearly mentioned this. Listen carefully. Expenditure incurred towards the feasibility study for examining the new product line. There is no connection with the what, ma? Present businesses. Even though that is an abandoned without creating the new asset, that is treated as what, ma? Capital expenditure. That's why we can't take that amount as a deduction. Are you clear? So now what is that adjustment we given in our question, ma? Directly we are treated that as a what, ma? Capital expenditure. Please take that. Yes. This is only expenditure towards the feasibility study for examining the new line of activity, no connection with the present business. Hence, it is a capital expenditure. If there is a capital expenditure, no need to allow. That's why we are doing the what, ma? Add. So simple. Existing business failure also no problem. That is our business process only. That's why we can take it as a revenue. So we are conducting the research activity in a what, ma? Other line of business. If you got a loss or any expenditure, if you are incurred, that project is abandoned. We can't take that as a revenue expenditure. That is a capital expenditure only. That's why we have to do what, ma? Add. So this is only the point I want to say. The remaining all the things are very easy only. You can try on the own. So if you are heartfully trying to solve the remaining questions like question number 18 to 22 on your own, you can use this today's session, sir. If you are not doing that now, so ultimately out of that combination only they will create a question, sir. So how you are saying, sir, every attempt that is only happening. Closing stock adjustment, overvaluation, undervaluation. Next, sir, employee provident fund contribution, employer provident fund contribution. Next, sir, P&L account is credited with the capital gain amount or dividend amount. That we have to reduce. Separately, we have to charge under capital gain as well as income from other sources. And one more adjustment is also repeatedly asked, sir. Okay, maybe you will get confusion with regarding the adjustment. I will tell you. So this is an adjustment. They are continuously given. Now remember, KGB Limited is engaged in the manufacture. So manufacture means you have to remember what, ma? Additional depreciation if they are following the old recipe. Now, sir, this is an additional information, not debited or not credited. This is an additional information they provide. But after debiting and crediting of items are ended with the what, ma? 8th point. Now, I have 15 minutes time left. That's why listen carefully. You don't know my mouth power. So exact combination if you got, no, some persons will be happy only. So because I believe in myself, so this, okay, if any person setting the question paper also, maybe he can go with the CA sources. I covered here. So how they can frame combination. But one more question, in model question paper related to June 25, they are given the one CA final question. So it is included in the regular classes, but I'm not covered in the material also. Please try to do MQP related model question paper June 25 on question given related to PCBP. So that you have to do. So on that we have to prepare the revised trading account. Revised trading account. Trading account they are not given the properly. We have to prepare the revised trading and P&L account. Try to solve that problem. Model question paper June 25. Now definitely I'm expecting this question or MQP question directly. This question means nothing but we are discussing in MQP. What is that, ma? So 115 BAB. Now we discussed this question from workbook. This are MQP question. Any one they will give you for 14 months. Otherwise they will pick up that all the adjustment and they can create a new problem. No. So this is only the one point I will tell you. After that we can close. GST 10 lakh collected from the various customers paid by the company on due date. We collected the 10 lakh from the customers, we paid on due date. But after making the payment, I am going for an appeal. High Court directed the GST department to give the refund of what, 4 lakhs to the company. Now, what is that amount of an income now? 4 lakh. Because I am collected, I am given to the department. Now, department given how much amount of income to me, 4 lakh. Now that is an income. Company refunded how much amount to the customers from the refund amount, 3 lakh. Sorry, 1 lakh. So 4 lakh, they are given the refund. That is, to be honest, income. Out of that, I am already submitted this 1 lakh to whom? Customers. Now what is that amount? 3 lakh. 3 lakh is taxable in your hands only under PGBP head. So can you tell me what now? Still lying under current liabilities only, definitely that required to be taxable under the head what, PGBP. 4 lakh income, but you have submitted the how much amount, 1 lakh to the customers only. The remaining 3 lakh is an income, so that is taxable under the head PCB. So this is also repeatedly they are given the adjustment. Maybe they can. I will show you how many times they are given. That is in one time. Next, the second time they are given in the exam. Now you can tell me 7 lakh we collected paid. How much refund is given? 3 lakh. Out of 3 lakh we are refunded to the customer how much? 2 lakh. What is the income for us taxable under the PCBP? 1 lakh. Okay. Now, one more time also they are given. So try to do that all the problems. Thank you. Tomorrow we can discuss assessment of various entities, non-resident. I will try to do all the thing in a speed manner. Don't disappoint because if I am covering in a speed manner also, don't disappoint. Just try and listen all the things and you can do practice. And do that MQP problem June 25 attempt. And 4 questions from our workbook also. Today late night you will receive the one app message. That means if you have downloaded my app, Bhaskar class is there in Play Store. If you haven't iOS version like iPhone is there now, you have to download the class plus app and you have to use that organization code as an LHYABR. You can find all the things in Telegram group also. Late night I will create that access for that soft copy of materials. If you already have, I can't do anything. If you want to purchase, that is I think 20 rupees. I can't give it for 1 rupee, sir. If I am giving for 1 rupee, nearly 200 to 300 students can purchase on the same time. I don't want to take risk. I will create a private coupon code. You will get it all. You will get it in app messages in your name only. So you can apply that. I think 20 or 30 rupees will be there. You can purchase. You can watch the same thing on tab or Windows also or desktop or mobile phone also. You can try. If you have an hard copy, even though you can purchase, no problem. Thank you.